Good morning, good morning, good morning, good morning. Good morning, OTC. How is everybody doing? Good morning, happy Wednesday, Germ Corp, Sabrina Bree, GTA, Arctic Fox Alaska, the big man's in here. I did see your post at Tesla 248 on Monday evening. I do apologize about yesterday. The little man was definitely not feeling well. He had gotten something at mom's house, so we had to go and keep an eye on him. But we are back today, looking voluptuous. Dr. How are you, sir? Caesar C's probably in here somewhere. Miss Jane Hammond. Good morning, good morning, good morning. Coffee all around. Make sure that you, if you have not already, make sure you like and subscribe with your grandmother's lips. That's the only way that we're gonna get more cute son of bitches in here. Come play ball with us, even at this market one time. Just a little bit of a like a little Easter egg for the few of you in here. I go and like hide little things into the thumbnails. If you actually look at them, I take a decent amount of time to go and just make them because they're kind of stupid, and I don't give a shit if anybody else likes them. I kind of like them. So you can go and see that I took 3 individual pictures and made them into numbers and kind of hid them in the background. That's 426. And that's exactly where the spy decided to go and take a shit into yesterday at close. So if you would have gone and you would have been able to make what, almost $4 off of a move in 2 days on the spy. That's just things that I would pay attention to. I'm not gonna go and like repeat where I like to hide things, but I will go and continue to do that for the ones that know. Then glad you guys are here. Good morning, Germ Corp. Good morning, Michael J. How are you, love? Mahalo. Sav, fucker, you better be up right now. I'm telling you right now. You're cute ass. Talked to Sav all night, so fucker kept me up, you know. No, he did not. I was already up and not going to sleep like usual anyway, so went and talked to that fun gentleman. He's got a pretty cool story. He's gonna be around in the Discord and in the trading channel as a new member, so keep an eye on him. Make sure that Caesar's not going through his pockets, or GTA is not like telling him to buy fucking Shiba or some shit. You know, just for the effort. But good morning. I'm very, very glad that you guys are here. I am noticing something very interesting just off rip that had something to do with Monday. Considering I wasn't here yesterday, I'm now looking at the market for the first time earlier this morning at 4. And I'm seeing a lot of similarities when I first got on and looked at the market. And noticed that NVIDIA is quite literally right back to where we were getting rejected at 422-ish, 423 area over on Monday sometime. We got that bullish sentiment of like run to the upside. However, we pretty much shit the bed yesterday and came all the way back and gave any bit of our gains that we did have to the top side up, and basically solidified a lot of downside looking trades. So I feel like I was dead on balls accurate on Monday when we were going short and the market wanted to continue to just kind of rise Tesla $1 at a time every hour and just let it rise and rise, where you weren't going to actually make any type of decent money to the upside unless you had the money for the contracts to buy them at $200-$300 in money. But which would have, a couple $100 contracts per contract that were already in the money that were able to run maybe $200 or $300, and you were able to get out. But more than likely, Tesla just kind of traded upwards in a very, very slow pattern, and the overall market didn't really did not want to go and mirror that sentiment, in my opinion. So we walked ourselves down, and Monday ended up like telling you just like it is. 426 is where I was looking, and I got a few other numbers for you, ladies and gentlemen, this beautiful Wednesday morning. The only thing you have to do is send all your feet pics to Heidenreich. Man thought I was out here. I was trying to listen, Hyde, just to go over, I did see your message. I was out here trying to touch crypto for Darren Waller. I'm trying to get away with it. And you have to start asking questions. You know what I mean? I would have gotten away with it too if it wasn't for you meddling kids, or whatever the hell they say in Scooby-Doo. No, that got all resolved, Hyde. Me, Nunez, Caesar talked it over, got with crypto. That would have been the person who mainly would have gotten screwed. So we wanted to make sure that we obviously took care of him. And unanimously decided everything was good, not by me, but by I guess committee. But if you have thoughts, you're more than welcome to hit me up. Let me know what's popping. Good morning, good morning. He's saying good morning. Heidenreich's paying a couple dollars per cup. At this point, inflation's high, bud. You passing out them cups still, or you just kind of handing everybody a quarter and telling them to fuck off now? Because at this point, shit, I got a couple dollars laying around and I still wouldn't fucking want to buy a bunch of goddamn coffees every month or every morning. Didn't? I don't get my... Oh, you don't get tank? You didn't get your tank. Fuck. Yeah, no, there was a play where I was gonna tank last week where I had Caesar fucking crying, giving him this theory, because I was gonna go and tank week 3, or excuse me, tank week 3 and go 0-3 to get Waller, and then realized I have fucking Mark Andrews. So we were having a little bit of a Down syndrome moment. We figured it out, you know. We were able to wake up and smell that Folgers, get our shit together. But nevertheless, I do appreciate you guys being here. I have a good feeling that we're gonna go have a pretty decent day. I don't know if it's gonna be something like $5,000 in a day off of 750, but we can go and more than less try. I am overall looking at a couple of numbers I had written down on my desk, and I will go and share those with you right when I get back to it. But overall, I think that the market has consistently kind of shown us that it is kind of walking itself to the downside while still trying to go and show support for anybody who is straggling that might potentially want to go to the upside. Oh, Tank Dell. Okay. I think I had a waiver on him too, and I didn't get him. But the overall sentiment of the market right now is just fucking extreme fear. Like, everything in the book is extremely fearful. If you go to like CNN or any type of fear calculator or anything like that, there's a very, very good. Deutsche Bank thinks Tesla could miss on Q2. That's not good. That's just out and not 100. That's pretty verified in my perspective. But I don't think it's gone and hit yet. He was amazing. Probably just a one-off thing. Yeah. You should have been there. You know what was a great thing to watch was watching crypto go and get fucking pulled by the Dolphins. Holy shit. Yeah, fear, 100% correct, Arctic Fox. But the fear meter that I use, speaking of the devil, he creeps in with them just beating cheeks after this weekend. Holy shit. Crypto got that ass touched in Denver. Whew. Speaking of, yes, there is a lot of fear in CNN, and a lot of the time I don't necessarily agree with the way they put news out. However, when you type in futures into Google and go down a couple, it's always CNN futures. And there's a fear and greed meter that I've used for several years. So not necessarily that they're feeding a bunch of fear. However, I do see that meter went from, that meter was just 80, 86, 87% 2 weeks ago. But I watched it wane to 60 and then 50, and then I watched it just tumble. And I think a lot of people are extremely fearful. However, I think that you have to go with the biggest stock market degenerate of them all, which is Mr. Buffett himself. And I think you have to go with the buy when others are fearful tactic. I think that if you're going to sit here and go and argue that the stock market needs to come down 48%, I think you're fucking smoking dick. I think you're absolutely high. Good morning. I think you're high as a kite if you think the stock market is going to collapse 48% in any form or fashion. Absolutely not. Billy Mullentine, the legend himself. How are you, sir? If anybody doesn't know Mr. Lord Billy, that's the guy that created iRobot, on the low kind of thing. Now you know. You don't tell anybody. It's kind of like Fight Club. You don't talk about it or don't break the first rule. Now you know. Caesar, you're definitely fucking late. Pull up a chair and right here in the front row, please. Because I got to keep a fucking eye on you, dude. We can't have this racism shit anymore. I can't have it. Being racist to all kinds of shit lately. One, however, you will not be racist to Tesla in my presence, okay? I think that if you're bullish right now in this market, you're high as a kite. I think that if you're bearish in this market right now, you are threading the needle where everybody else is, if that makes sense. I think that there's a lot of people right now that think, oh yeah, they're saying 48% of the market could just collapse within itself 48%. I ask those people, what the fuck does that look like stock wise? Is that 48% like everything loses 50 all over the board, or is that like 50% of all of the money in the New York Stock Exchange just kind of like fucking moves? Either way, doesn't happen. Absolutely not. No fucking way in hell. Democrats aren't going to let that happen going into a election. And I think that the market is so fearful right now that it's overly created fear. And I think that that's a difference between watching what I do every day, because I don't give into the news. I don't give a shit about what the news is saying. I do, however, care about the sentiment of the overall population that I can go and kind of look at as an analytical view. When I watch something go from greed and complete greed, not even a question, like I'll take your fucking dollar from you, to immediate fear within 2 weeks, that's fucking terrible. That's not good. And that is orchestrated fear. That is, as soon as people get to a comfortable spot, put in a situation where if they have support, give them the area of hopefully holding that support while going and making sure that we puncture right through that, take as much money as we can from them as quick as we can, and then bring it right back up like as if it didn't fucking happen. Okay, sure. You never noticed? Oh, I appreciate that. Yeah. Katie made these for me. But I also have several other concepts and ideas and shit like that for the shirt, which is currently being produced. Fair enough that crypto, you got to understand, I got to look at it as what is potentially coming up. I don't know that there's going to be an election, but if there's not, I think that there's much, much bigger problems. If we are not given an election, that's when you're going to see people marching. That's when you're going to see people stop fucking asking questions, is when you start to take that liberty away, where it's not negotiable. There is nobody that can say you can't, I can't vote. I don't give a fuck if it's a state emergency. I don't give a fuck if I have to make my vote. Speaking of being somebody that does not vote, I do not vote because I do not give a fuck about having have skin in the game one way or the other. If there was somebody that I actually fucking thought was worth the shit, I would do it. But I don't care. Like, I'm a unbiased person. I understand that you can look at it one way or the other. I choose not to fucking vote because I didn't believe in the candidates since I've like been here and able to vote. But like, I think that if you take that away from the American people, that's not going to be a bump stock situation. That's not going to be a 10-round magazine situation. That's going to be how many would you like and how empty would you like them? Because I promise you, if you go and put the Americans who already recognize what the fuck is going on in a position where their backs are up against a wall, and now they have others that haven't really figured it out yet but are now figuring it out with this, going, wait a minute, what the fuck? You have just now upset an entire collective of people that now can go and are smart enough to be organized. I think it'd be very, 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 very ill-advised for them to do that. However, I genuinely see, I called this about 3 months ago, that Michelle Obama was going to go and run for president. There's no question in my mind that she's going to be the candidate. So whoever the fuck she is, whatever the fuck she is, I don't give a shit. But for the time being, I'm going to assume that there's still an election. There's not going to be some type of state of emergency that would cause them to not allow one. But that being the case, always preparing for both sides of shit is always better than not having a plan when shit does get. Vote Tiana Trump. Enzo was just discussing yeah, I was, Caesar. You're kind of a dick. That's when the market dies. Absolutely. Sexy for president out. Okay. Absolutely fucking not, crypto. There is no Enzo for president. Listen, first of all, there's a point where I already drive around like I'm in a bulletproof car. And I don't need any security anywhere. And that's not me being cocky, that's me just being a plain asshole. You know, I'm respectful where I need to be respected. And I don't go out of my way to just be a fucking dillhole to everybody. I do my best to try to treat people the way that like everybody else wants to be treated. I don't know what the fuck my shit is deciding to. Hello. I'm very fucking curious why this does this. Anyway. I'll lightly scream into the mic like ASMR. Dude, you can do whatever you want to in ASMR. You know, I'm just kind of here for the nudes. I actually like this. Nicola, show us some more green. You show us some more skin and we'll show you some more green. That's how it works. If that wants it. I mean, it already broke up. It needs to stay up there. We got 5 minutes going into the market. Here's the numbers I'm looking for. Immediately, you have SPY. I'm looking at $27, $28, $29. What happens right here at the $28, $28.11 area where we've already gone and tried to basically say no thank you twice before, which actually is more around the 427.92 area. We broke down right here and retested it at 428.37 area-ish right there. I'm not necessarily concerned about that, but that could be a very, very interesting area that it could go and kind of try to find support or resistance. But anywhere from 428.50, or excuse me, 428 to 428.50, I'm seeing as a problem that could potentially go to the downside from there. I think they're going to go, and let's say within a week, 2 weeks. My overall assumption is we end up going right towards the 425 into the 422 and 418. Those, I told you the 426 is where I was looking. I'm immediately going towards that 420 area, which I do think that you can genuinely find decent resistance, or excuse me, decent support in, but you also have a lot of resistance over the top of that area. So these are spots where they have the ability to bounce. But right now, like I said Monday, we're not going and getting, until we get consistently decent data, or at least a start of decent data. I'm not even thinking up to the upside, but there is levels in here that you could bounce, and I do like the 413 just as a psychological right now, as not a psychological in the psychological price, but the psychological that I remember being an area of interest was the 413 area. I've traded it 1,000 times at that area. Please like and subscribe, like the big man said. Absolutely. CVS. Good morning. Good morning. Also, Koss is shitting, probably going to shit the bed. Kramer tweeted about it, saying even though Koss is a good price or something like that, or a good company, doesn't always reflect the price or some stupid shit like that. So keep an eye on Koss. It might go to the moon. It might shit the bed. I don't know. I don't trade it. I want to see this market go and feed me upside so that I can go and get into a better like area. If I'm the SPY, If I break low of 227.07, I'm looking for the 226.50, and then potentially the low from yesterday, which is 427. I think that Tesla is easily, I have right here 229, 230, and 216. After the 216, I think there is a 212 and a half. 212 and a half. Don't shoot the fucking messenger. Just saying. But that is a very, very, very big possibility if we do decide to see some big downside. Don't need to do that. But right now I'm looking for Tesla to try to give me within the day. I want to see what happens right here at the 243. I think we're going to come to the downside. It's probably going to try to feed you a bounce right here at the 243, 244 area. 244 flat. Might try to trade there for a second, go back to the upside. I don't think you have that. I think if anything happens, you're going to go run right back to that, potentially the 260 or the 246 wick, 246.60. I mean, you're having problems right here at the 245.32. So you're kind of having resistance over and over again. They can try to pop it up to the upside and continue to try to get bulls trapped into the upside, but please don't fall for that and don't be that guy. I see 30 seconds coming into the market here. I will go and tell you to keep your eyes on your own charts. I think that the SPY is going to try to feed you the bounce here, and then I think it gives it up to you roughly 427.90, 15 seconds. Market's gonna get weird and volatile. There you go. There's Tesla trying to go and give you the bounce here. I don't think so. SQ's trying to perk up. It's gonna try to give you the bounce here. You're gonna have the ability to buy. I'm kind of looking more into this 245 here if it breaks over the top. So Nikola is breaking up to the upside. Make sure that that is gonna hold. So now Tesla's kind of fading. First thing I'm looking for is a SPY pop to about the 427.50, and I'm gonna go and enter some. I don't know yet. And that stops right there. Of course it does. Let's go. Let's go and check. There's Nikola breaking to the upside. SQs are trying to go to the downside. Now, if we can look at the correlation between the SQs, I wonder if we go and get a push right here into the 200 on the SPY and then immediately flush out of it. If we did have a fade all day yesterday on the SPY, so you could absolutely see the SPY trying to go and get up to that 428 flat and trying to go and retest the 429. So that's kind of what I'm taking here, is anything like north, but you can see Tesla's right just flushing for no reason. That's going to have a correlation to everything else in the market. But right now we're going to go. Damn, those are expensive. So right now on the SPY, why are those so expensive for no reason? You know what? I don't care. I think this is still the correct choice. Give me that 4. Yeah, Tesla's going to try to come back up to the upside at some point, and that's going to try to drive the market forward. The problem with that is that, like, the market might fall right into itself, just like, I mean, Apple is right now. So what the fuck is keeping... What's keeping the SPY up? There's your fucking answer right there. We're going to go and look at... call heavy at 431. You know what? I think that we have the ability. Tesla fades. I want to see Tesla back up a little bit. There's Apple fading even more. You know, Tesla might not come back up and it might just continue to fall. And the SPY might not go and fall as hard as we need it to, but right now it's trying to find some support. I am looking at... $420 to $418, but I'm looking at certain dates. Here we go. I just need a little push right here. Come on, Tesla. Nvidia is trying to boom through 427. When we see the market rise like this over and over again, and it pushes past key levels in a really big green candle, 9 times out of 10, it's going to go and shit the bed back into itself, and that's going to be the catalyst to the downside. They'll go and say, oh my God, it failed. Well, no, you just fucking ran it into oblivion with volume. All right. We're trying to go and be patient right now, but 5 minutes into the market right this second is not where I like to be patient, personally. No way in hell, when this bounces on Tesla at the 249 or 242.50, goes back up to the 244, 245 area. No way in fucking hell does anybody in this chat go and say that this is a bounce. Just try that. Because if that's a fucking bounce, then I would like to see what's changed. That's it. If you can go and convince me that it's downside or it's upside and everything's good, that's great. Do that. But for right now, no. SPY is trying to come down to the downside now. I'm trying to get this bitch to come back up here very quickly. One time for daddy. I can't click the button. I want this. I want a buy off of this line right here. The one up top. And I'm probably going to get it somewhere here, but that'll be towards the breakout. That gets rejected, I'm assuming. This is going to try to go and fill this gap right here that it's trying to go and show you that it has. It's going to. Okay, cool. Then you see how Tesla could potentially use the 243.40 area to go and continue to the upside. SPY's trying to do the exact same thing, but the SPY has a technical ability to just gap back right over the top of 427.13 and use this downtrend as support, right? That's a big ass fucking green candle along with NVIDIA. Now watch, NVIDIA's walking into resistance. Tesla came off resistance just like this. And you know what? The SPY's not going to stop. Tesla's trying to come down. I want... Just because I think the market's kind of shit. I'm actually looking at the September 28th and I'm wanting to kind of position myself closer to these 422s. I'm taking them at 59. Just because I think this is just gonna flush out here, and I don't think it's really gonna fucking hold this any longer. I got 252s, or excuse me, that's incorrect. 222s. This contract right here, nope. Tesla's coming to the downside. I think that you're probably gonna get a bounce here at some point, but Tesla also could just start fading right back into the 239 area. If that goes 239, that thing's going back to 225. So I'm just letting you know the potential of downside, but keep an eye on the fact that like there is trends there that will help you if you do try to go and show support. I don't know that you have support though at that 241.60 area. And I don't think that it's a very, very financially liquid place either. I think it would be more likely 235 or downside from there. I just want to see Tesla kind of rise up and give me a place of rejection to push off from so that I can go and ultimately get in with, yeah, are you asking or telling? AMC? AMC's under $8. I told you that was gonna happen. Mara, I'm looking to go and collapse underneath that 750, but it's gonna be a pain in the ass. I just picked up more SPY. Oh, no, I did not. That was the original one. So this is how this contract's moving as this goes to the downside. This held this contract on the inside of this right here at 44. And now we're trying to go back up to the upside. So I'm going to be looking at either possibly an 86, that's what, 40 or 50, $59 a contract to 87. But that breaks over, that'll run to 96, potentially 114. And then I'm going to be looking at like 140, 150. But this is a very risky contract considering that there's a very, very little amount of time for it to get to its destination. But I don't think that there shouldn't be any problem with doing that because of pretty much everything in the market is coming to the downside. They gave it to you the entire morning. Everything was red. Everything in the market was red. Now the SPY is tanking underneath its support that we have, like the positive trend that it did have. Tesla's trying to come back up, but not helping the SPY at all. The SPY is trying to actually go and throw itself out of a small airplane right now for sport. and we're about to capitalize on it. Tesla at the 235 is kind of where I'm looking. But if we can go and look for these 244 puts, or excuse me, 240 puts, those 240 puts on Tesla are like 280 something right now. Yeah. There's a position coming in here and there's people buying right here at 230. I want to position myself directly in the middle of those people and I want to go at 235. I'm also picking up contracts at what the fuck? 150 right there on Tesla 235s right there. I just went short Tesla again. Right here. This contract is right here. So I just picked it up for 150. I'm already up $10. And that's when it's trying to give up the 230 or the 243 area. I think that we have a lot of support at the 239, but I don't know that we're going to go and be able to hold that area, considering that I don't think that we're going to flush. Spit roast. What now? I want to position myself between two guys. You mean like a... I'll allow it. No, I would like to position myself between the dickhead that's just throwing money at a problem and the guy that's fucking praying. Because then I know that, okay, I'm just trying to make a few fucking dollars. I don't give a shit what you idiots are doing. Like, I don't have any emotional attachment to the fucking thing. Take them. But right here, Tesla's doing exactly what it's trying to. It's trying to give you the little juke. And I genuinely like these. Yep, we're definitely taking that. Why? Oh. But look how these contracts are moving. I just bought another lot at 120, or excuse me, at 235 at 120 a contract. And they're already back up, but I'm kind of giving the market a look, but there's been a decent amount of sentiment downside on the puts right here on Tesla. SPY is trying to hold VWAP right now. Good morning, Mr. Business. That's what you said. I'm not going to tell you that I didn't, but it was definitely, I mean, if I'm gonna get fucking spit roasted, like, you might want to do it with no hands. At least get a professional, you know what I mean? You know. Always remember your breathing treatments. You know, make sure that you're going and you know, you got to make sure that your doctor goes and takes care of you for a reason. Make sure you're doing your breathing treatments, because if you're being an asshole, life's too fucking short right now, okay? Market overall looks hesitant to me. It doesn't necessarily look like we're trying to go and hold this 270, or excuse me, the 427.25 area very hard. That over in pre-market, you can see very clearly right here, we decided to hold the 96 MA. The 96 MA and the 50 EMA both are trying to go and show you support here, which is a beautiful thing, because technically speaking, It's a great fucking technical setup. What's not a great technical setup is getting fucking rejected from this area right here, this gap. From right here to here, that's it. And then you bring this out, and we cannot close a fucking candle back above this area. If I'm crazy, which I get it, this is trying to sell you a bounce and walk it right fucking back as if you have support. Look, the place that I just bought, you would think is the place that they're trying to support this fucking thing now. It already punctured it to the downside. All it needs is the SPY to walk to the downside. If the SPY walks under VWAP like it just did and wants to go and continue to close low of these pre-market candles right here, 227.12, we're going down here, no question. That's where your trend goes. Why go and fight it? Why go and fight it for that? I mean, you can go and use even the bottom trend if you think that you're bullish. Go and use your technicals here. That if you do happen to have this bounce, this is your last decent open or your green candle on a 5-minute. Let's just assume that you go and use this next green candle. If this is your bounce per se, you would go and, for a fact, be holding this candle. If you're bouncing on Tesla, you're going to hold this trend. This is exactly the trend that you're looking at, because you're looking for the bounce to go here. And if you do, like, if you think that, I like your sentiment, I don't like your timing. I think that they want to drive this further down to the downside and then run it back up here like tomorrow, so that they can go and walk it right back into the fucking area that we broke through today with ease. If you think about what theta is, it's time. And the thing that you don't have is you can't waste it. They're trying to waste it for you by going and making the connect the dots the most asinine way to do connect the fucking dots, even when it's literally numbered for you. If you've ever seen a connect the dots, that is the greatest analogy I think I've ever made. The SPY is like a connect the dots of a 4-year-old that is smart enough to know that she's being an asshole or he's being an asshole and is able to go and manipulate a game of connect the dots. That's it. If you can go and use up any more fucking piece of a paper, or like you do a connect the dots and you find the most ass backwards way to go about it, where you'd go 1 2 1 3 1 2 1 5, like just to be a dickhead. That's exactly what the market's doing. It's going to a high, it's going to a low, then it's going just a little bit above that high just to shit back down itself. Where you think that you're going to have support, you end up failing and falling through because it gives you the bullish setup in a couple of days. But when you look out at a very macro perspective, you end up going and realizing, oh, I was at the top there, I needed to not be there. So you're now seeing, this is, I believe, a new indicator I put up here. This is going to be the 9 EMA. Which is this peach line. VWAP held very nicely. It's giving you the sentiment of having that overall good feeling, right? It's having that great, oh, maybe it's bouncing, da-da-da-da-da-da. Bitch, no, listen, we're not bouncing. The market, there is active calls and worry about our government shutting down, and I don't think that that's going to happen. We do this on a weekly or monthly basis. It seems like, oh my God, if we don't pay this, the government's shutting down. No, it's not. No, it's fucking not. But you better bet your ass that I'm making money on all the dipshits that think, oh my God, the government's shutting down. Have you heard? Have you heard the news? 48% of the entire stock market, it's leaving. How many of you guys have one of those? Anybody you know? Did you see? SPY dropped a whole 0.5% today. Hasn't done that since 1974. Shut the fuck up. Shut up. Stop it. You're being fed information. The S&P hasn't lost in how many years? I'm not assuming that we're gonna go and start that fucking trend. That's just what I'm saying. You're getting the ability to be a little bit more skeptic in the market, and that's because you're able to go and hear somebody that has a brain go and speak common fucking sense. It does not benefit anybody to run 50% of the stock market into the fucking ground. Might I add that they really haven't gone and said where that 50% would come from. So you can't necessarily go and say that you're going to make a guaranteed play off of the fucking thing. Here you go. Now we're breaking up over the 200 on Tesla, giving us like that active move. Watch this shit right into the 245.70 and see if it decides to go. If it decides to go, I've told you where you're looking. 264 and 268. I don't think you get to either one of those fucking things, but good luck. Just me. Mara, crypto, looking like it's coming to a downtrend and it's getting topped here, looking like it might have some bearish sentiment. You can definitely go to the upside. I do not think you're going to. I think that it's trying to show you a place of support and replacing it with a run into the bottom of what the fuck happened yesterday and turn around. And the only thing that it's going to do is sit here and waste time. That's it. That's all it's made to do today. Now I know where it went. 48% of the entire stock market is going into my pocket. Right. So now I definitely have a reason to go play pocket pool with Billy Mullins, but that's nor here nor there. We're getting fucking raped right now. And excuse that expression, but you just dropped open of 429, 430 yesterday, and dropped $5. And you're telling me that the SPY can't even go and try to find that support jump back to like 229 to bait people in? That's a little shitty to me. That seems very weak. That seems like the RSI, when it ran very, very high over this morning, you stretch out your RSI, this thing opened up and went to fucking 93, ladies and gentlemen. That is that's little smidge high right there. And it's not from relative strength. I can promise you that. It's from people being fucking idiots. That's as simple as I can make it. These are people that are not trying to go and respect the trend that they're on. They're trying to go and make something happen. Rightfully so. Tesla could explode at any minute, go through 250, and we don't fucking see it. But you would need some kind of huge catalyst for that to be the case. But for you to have a 93 on the a 97 on the EMA, that's immediate reaction. I need to sell off. I need to go and cool off. And once again, we are getting rejected, and we didn't even go and get to the open candle. We got to where VWAP fell off the fucking table though, right here. Look at this. VWAP right here. Why does it happen to break right here on the line? 240, 45, 33. You can see it just snaps down to the bottom. Well, that's because VWAP is telling you, no, thank you. We have sellers that will easily come get this dog shit back here. Almost, what, 50 cents in difference? Zoom out. When in doubt, call your grandmother. Tell her to call my phone. I'll give her a good pat on give her a good game, you know what I'm saying? But if you're not looking at the 244, 45 as a possible rejection, and if you don't still continue to hold the 243.50 area, you're going to continue to see some downside. The areas that I'm looking at are 239, 235, and I'm thinking about possibly taking positions into like 212. But I haven't really seen any huge catalysts that could be going to the upside. Vino was moving earlier this morning. I would watch for that fucking life bullshit, this one, to move now. MSP recovery. Somebody brought that in. I want to say it was Martin Apollo, but the fucker brought it in like 3 goddamn days ago while it was running on Monday. And then it did this. It tanked from $24 or 24 cents to 17. I promise you, there's not a lot of traders that are going to go and watch this go from 27 cents to 15 and not leave that stock overnight. Very, very interesting, psychologically speaking, how as soon as you watch this thing almost lose 50% of its value in 2 fucking days, oh, you mean after hours we find support and we go right back up to 221, 224, so that you can go and see that this bitch ran like a motherfucker in pre-market? Oh, hey, look at me real quick. Does the same fucking thing. Runs straight to the goddamn downside. But you want to hold this 17 cent mark. If you can hold into the 17 cent, into the 1750, or what this says, 1750, there's a potential that can continue to go up. I have seen the volume rise, potentially a little bit back and forth. Pixie's still continuing to go up, and couldn't give a shit less about that fucking stock. Rite Aid, ripping 53 cents a share. Sounds really, really light. 63 is your first resistance, in my opinion. You're gonna go back up and grab this little, you're getting this box at 63 cents, and then you're trying to break through the 67 flat. So watch for that to happen. But overall, you're looking at Tesla, right? And now you're seeing a trend. I see the trend. I don't know if everybody else sees the trend that I see, but I already have this little area here. We broke to the downside. What I'm looking for is to see this walk right up to the top of this trend, considering that we were perfectly good, technically speaking, whenever we were doing it in another place, using it for an indicator, earlier this week. You look at this, and I see immediately this right here. These green candle wicks right here. And I start to see a trend forming where we start to curl and create more resistance at a sharper level, which causes that stock price to choose A or B, up and out, or flush down and get fucked on. Tesla, flush down and get fucked on, find VWAP and hold your legs at this point. Mara's crashing back into that support zone. Isn't it odd how they're giving you the exact support here? The gap that everybody can see. You can literally put this indicator on your charting. So can you right there, and you don't even have to have any information. That 226.62 area, oh, it's gonna hold, watch, everything's fine, it's gonna bounce. No, it's not. It's gonna flush. I'll wait. Because now everybody that's sitting at that area that was like, fuck, man, I'm going long here, they're gonna go and have this mental check of, whoa, okay, well, shit, maybe here, right? Maybe I get some positive help from. No, absolutely fucking not. You're looking out at 425.63 at best. You'll be lucky if you don't go and break the day's low of yesterday. The only reason I think that you might go and bounce off of yesterday's low is so that they could run you directly back to 426, 427 area and go and just waste your fucking time, guys. So when you have the profit, speaking of profit, those 422s are up. We bought them, we're up 2% on Tesla, which is those 235s. We're up 16, 17% currently right now. We got into an average of $59 contracts on the SPY 222 puts for tomorrow. Correct? Yeah. No. Yeah. 27th day. Right. 28th. It's up 15%. I've made $45 on an initial $200, and I'm only looking to go and trade the hard volatility moves. You can go and try to tell me that we're gonna bounce here. Well, why the fuck didn't we bounce here though? Like, why didn't we bounce at the 247.14? Because we flushed through there earlier yesterday. If I'm going to go and try to find some place of support, it most certainly is not going to go and be somewhere that just cheated on me. I'm not going to go and think that my girlfriend, who I cheated on a prior girl with, is ever going to think, oh, well, because I left that girl for you, you don't think that I'm a cheater, right? That's not how it works. Like, you can't go and it doesn't work like that. You can't go and just erase the fact. You're also sitting here watching this gap and getting fed exactly what you need to feel comfortable. Tesla right here, looking at a support line because you're sitting here, you were getting fed the fucking support line. But guys, what is this pattern right here? Like, very, very simple. What is this pattern right here? Higher lows, trying to hold now. Rite Aid is ripping. Keep an eye on that. When Rite Aid, CVS, Walgreens, pharmaceutical companies, and biopharmas all start ripping, what does that mean for the overall market? That's not fucking good. When people that are in priority to use people's fear, health, or mental health, I guess, if you will, and overall understanding of finance and the economy and stuff like that, you can very easily go and see how somebody could be manipulated out of their stocks, bonds, options. Get rid of your gold, get rid of your fucking crypto, get rid of your this, They were just telling us that the stock market was fucking golden not 2 weeks ago, guys. And I'm not the guy that's going, oh yeah, like, holy shit, we're just gonna go and think upside. No, that's absolutely not what I'm saying. But I do think there is absolutely no way that you go and think that we're going 300 on the SPY. You're smoking fucking pole. I'm sorry. If you think that, that's fine. You're entitled to your opinion. You're smoking dick. Plain and simple. If you think that the market, the presidency who is trying to go and get reelected, whether that's him, whether that's her, I don't give a fuck who it is. You got to think that if the blue team right now wants any chance at all, you do not piss away 25% of your business before you go and say, I'd like to go and collect my fucking 20-year pin. You don't go and that's not how the fucking sentiment of the stock market works. They pump fear, They pump articles, they pay the fucking people to write these articles, or they only select certain ones that are the sentiment that they feel. And I think it's shitty. Bitcoin bounce on, Jesus Christ. But we're crashing to the downside of that bottom candle, 260. We're making money. Like we're looking voluptuous right now on every account. Make sure that you like and subscribe with your grandmother's lips. All right, Caesar. All right. Yeah, we're taking this seriously. Lovely. Bitcoin, what the fuck? This is FUD, fake out, paper hands crying. GTA, it's called indecisiveness, and holy shit, what the fuck is going on with the market? But you got to give it time for them to continue. You got to think, we're watching it every day. We know what the fuck is going on in this market every single day, all day, every day, right? What about the guy that hasn't turned on his fucking TV to see the news yet? SPY's shitting, guys. So, like, that's a beautiful trade right there. So, right here, these contracts, we were getting in, I don't know, this is a 15-minute. We were buying these, but we were looking to see, yeah, we were picking these up. 59, I think, is my cost basis, but it's already up 20%. Yeah, 22% right here. Cost basis is $59 a contract. And we have those Teslas. We have the Teslas for, nope, those are the SPY. Those Teslas are now up 6% when they were up from 148 to 155 a contract. So nothing huge. Right here, Rite Aid, 64.65. Remember, I said 63 cents. That's where it went. And that's where it had a lot of trouble. Make sure you're here and you're good at Rite Aid, because right now, we always see this type of shit fuck with people right before they start coming to the downside. And look what is starting to go red. And look what's now starting to transfer to the green side. You're starting to see things like this type of shit, Rite Aid. What the fuck is this other one? I was eyeing something else earlier. But it was another biopharma stock, and we have a bunch of them right now, and they're getting decent volume and they're getting movement to the upside. This is another one that might be interesting right there at the 29-cent area. But overall, you're still now seeing Tesla went up, and on a 15-minute perspective, it tried to go and get back up over the 50 MA. It said no thank you and continued to walk to the downside. Now our 9 MA, which is this peach, is literally trying to send us nose first into the fucking ground. SPY's trying to trickle into the 425.80 area. SPY's breaking that area that it was just trying to sell you as, hey bro, I'm good here, I'm good to drive. Yeah, no, I had a glass of water, we're good. I'm not, no, I haven't had too many, right? You let that dickhead drive, watch what's gonna happen. You weren't good. You weren't ever good. You weren't good at the 242. You weren't good when you were dancing with your shirt off on the pool table. Now, the really pretty girl in the room that got our buddy said drunk in Tesla is now about to have a effect in retrospect, because now the SPY is in a situation or a position to where you're watching the situation across the room and realizing you have two drunks that you're going to have to take care of. The downside starts moving on the SPY. It's not going to be able to hold the 243 drunk SPY up whenever the SPY weighs a little bit more than Tesla's stature. When those things start to consecutively or sequentially put themselves in positions to keep topping each other, You see exactly where I haven't even touched Netflix yet today. But whoops. But Netflix, immediate downside. We were looking for it to try to regain this support, but it immediately went and didn't like it. It rejected it. So we're not going and fighting this. We are allowing it to go and try to fake us out and understand exactly what that is. Now, you can go right back to my contract, because now that contract is up from $90 or $59 a piece. So if I bought 100 of these, it would have costed roughly, what, $5,900? Sorry, my OLED screensaver just came on. It's dope. Now you're seeing the 200, but you still have a gap here. So chances are you either fill the gap and immediately return, or you're just going to fucking sit here and it's going to try to feed you. No, this is the 200. Excuse me. You can't fucking pass here. And then the SPY is going to say, well, I passed 250 or 225 or 425 to the downside, and I'm not fucking holding your fat ass up anymore. In which you're going to see those contracts on the SPY for the puts to the downside, you're going to see them go through the roof. Rite Aid, political statement. If they went and did some LGBTQ plus 4 bullshit, that's not going to be doing very good things for their customer base. I think that people are so gun shy right now of what happened to fucking Budweiser, rightfully so, being retarded. I think that companies right now, if you're not realizing the temperature of who you partner with is going to affect you a hell of a lot more than your personal beliefs or your business model, I think that you're vastly underestimating people's stupidity, in the sense that LGBTQ community is probably, in my experience, a very, very nice, welcoming, positive community in all senses. The bullshit that is being fed to the youth that are, I guess, a generation after me or so, is on a different level of ridiculous. But in all senses of the word, there were people in the 90s, 80s, 90s, 2000s who fought to have the right to marry whoever the fuck they wanted to. And they should be able to have that. But they should not go and be diminished to the fucking colored hair people that have mental illness problems, because that's a representation of a huge group of people that 9 times out of 10 don't give a fuck about your opinion and don't want it. But now all of a sudden either feel like they need to, or just a small group, whatever the fucking case is, you're getting division, you're getting the fear, you're getting the, hey, everything is good. Look, for instance, the fucking toilet paper. When I say toilet paper, everybody gets this analogy. Last year's toilet paper, it's a fucking social anxiety button. It is a trigger to where you see the assholes running to go get the toilet paper. What the fuck are we running for? Like, but you're not going to stand there and be the asshole that watches whatever the fuck that thing is that we're running from or running to. You're not going to be the last one. Unless you're like a fucking white chick in a scary movie. Nobody's going to go and like run towards the shit that's going badly. But one of the best investors in the game says buy when others are fearful, Warren Buffett. Right now, the market is in the most fear that it's possibly had in the last several months. My overall thesis is that you get a bounce. My returns are up well over 20% on Tesla now. We picked up those contracts at 148. Those are at 145 a piece, moving very nicely. The spies are now, we picked up those at $59 a contract, and those are now at 77 a piece. Spies continuing down. I think that you have a lot of places on the SPY that we can continue to see downside, but my perspective, and this is just what I'm doing, not financial advice, but these green candle wicks here are interesting for several reasons. These have wicked in several times. I would prefer that you just line the fuck up for me like I've asked. Thank you. Use this trend of every time we get to this green line, we've bounced. So it's very, very easy to say, oh yeah, we'll just go there. No. They're gonna go there, and they're gonna correlate it with that 141.71 area, and they're gonna trade it sideways for about 2.5 seconds before they crash it right into the 240 area. And then they're going to try to make something around the 239, in my perspective, happen very, very quickly. The reason so is because if you're not paying attention and you put your shit down after 45 minutes of trading and you walk away, you've now just missed the bounce. If you're sitting here and maybe missed your alarm or aren't trading or are on the West Coast, you might not be up this early. But that is where support is at the 241.21 area that they're going to want to walk us through. That's going to create more and more fear, and I think that you're going to get a pile-on effect. I'm not interested to see this thing go back to 245 on Tesla, or even like, let's say 430 on the SPY. I think the entire thing is trying to feed you in an analytical view, trying to show you upside, while everything in the market is coming to the downside. And the reason I think that is because right now on the SPY and on Tesla, you're creating future positions where we can go. And if you're a rock climber, if you've ever done rock climbing, you think about where you're going to put your hand before you need to place that hand there. Imagine while we're coming down the mountain and like rappelling down the mountain, we're fixing all of our hand holes to where we want to go and make it easier, where we can stick our hand in and find a better grip than just winging it on the way up. Because as soon as we go and like get a decent hold, then we can start making decent moves and have that volatility to the upside. Not a new battle. The battle, oh shit. Okay, what happened? Mass hysteria is the technical term. Thank you. What's that? You're touching fucking AMC right now? Okay. That's a... That's an idea. I'm trading that to 840 or downside of the break of $7. I think that potentially you could get the break under 771. If you get the break of 771, I'm looking for the low of $7 and maybe feeling decent about the 715, 740 area, but definitely do not want to go and find $5 to make me holler like I think I'm going to find on Apple, or excuse me, on Amazon. Not Amazon, fuck me, AMC. But now you're trying to go back up to the upside, but now look at aftermarket yesterday. Were we good at these levels here, guys? Because 246.57 said, fuck you, not once, not twice, not 3 times, not 4, 5, 6, and then something made us break. Could it have been the market coming up to the top side, or could it have been quite literally just placed exactly where it wanted to go, because it was the breakdown right here of the 227.60, like I said, where we were going to go. It breaks down from this overall support that it tried to show you right here earlier that day. And then when it did give up, it snapped. And when it snapped, it obviously had a good amount of pressure to it. Then you get this little systematic sell-off, but don't get enough movement to the downside. So if you weren't here off of this move, you didn't really make a lot of money off of the volatility of it. But right now you're looking at a place where if you go and see this as a potential short, this could go and be that entry area, because you're seeing the wick down right here. So you're seeing this wick right here, and you have a little gap that you want to reject right here. So we can go fuck around, go ahead, run all the way the fuck up you want to, all the way to 27. I'll go and continue to buy. I'm not concerned, because A, these are going to give me a better buy. Anything under the 45 cent area, I've already gone and just walked that position up, taken profit from it, because you're seeing the movement in the SPY, you're seeing the movement in the in Tesla here. But on Tesla, my resistance, first of all, my buy area on my puts is at the resistance of right this second. So in reality, my risk is watching Tesla break the high of its fucking pre-market, and that's $2 or $3, but that's a very, very small risk to the reward if I break through to the downside and continue coming towards the 240 and break through that. Those calls or those puts are going to be massive, and we have not been able to substantiate the area that we did have support already. We're just basically finding an area to push off from. Just stacking. Someone call me. I heard hands. Omaha, check down. Hot zone, hot route. GTA's mom's a voluptuous woman. His grandma's got a thick ass, but his mom's probably just a very nice lady. Grandmas, though, are definitely getting touched. It's not off. Bet you I'm a crip if she pull up. There's so much wrong grammar-wise and just cadence and enunciation in that statement that I don't even want to read that. You're trying to go and make sure that you hold not only your 9, your 5, but your VWAP area right here, because you're doing a lot more than I thought you were gonna do here, but you're still kind of having this issue right into this 426.90 area, and it's also going to be because that's exactly where we started to go and try to set up support whenever we came back through that crash. That makes sense, because then you get right here and you see the crash. You're looking for 426.92 to go long here. In my perspective, knowing that you have basically the your indicators and the 427.12 to help you here. I'm basically just look for a wick up into the 200 and a flush. Keep in mind your 15-minute perspectives. Tesla's just trading sideways. And it's trying to now give me some type of support right here at the 220.207. But I wouldn't be surprised if these are perfect. Those are absolutely perfect. And the problem with that is that if you go and give me a double bottom that's wick, everybody's going to see that, right? So you're going to notice, ooh, Tesla's going to go to the upside because we double bottomed. Yeah. No. We have double bottomed when this thing goes and confirms that double bottom. Don't go and be the guy that finds out differently. Say, no, baby, we can't have a baby if you don't like. GTA is a big fan and sponsor of Plan B, apparently. See, Spy's trying to go and get long, but does it really have the fucking, does it really have the ability to go? Like, does it have the pass to say, oh, I'm good at 427? Well, yesterday, homie, like, that got revoked. So now you got to let us know if you're good to be at 427 or you're not good to be at 427. It's kind of like a loyalty thing. U.S. Senate committee approves bipartisan marijuana bill with the banking issue. They're doing a banking bill. They approved, apparently, bipartisanly. I don't even know if that's a word, but they did it across the table. NVIDIA's also shown an extreme amount of downside after I told you that anything above the 122, 123 area, no go. Now it's just also trying to go to VWAP and come back down the downside. Netflix trying to look for that bounce. I think that Microsoft I literally was telling you guys on Monday, I believe it was, and Friday of last week, 33 on Microsoft, you're gonna see 235 and 232 again, no question in my mind. Well, if you would have taken that short would be absolutely yeeted to the upside right now, because Microsoft has gone and lost almost 30, roughly $25 since I brought that shit up. And if you were to have bought like a contract, I'll show you how to make decent, or how you would have made money here. If you would have bought a contract for a put and you would have bought it, let's say you would have taken something for like $100, it would have probably been a 320, and that probably would have been last week that this was at $100. I would be surprised if it wasn't. Let's look. Doesn't have that much data yet. So this contract was quite fucking literally like 7 days ago. This contract was less than $100, or about $100. Even this week, it was between 3 and 4. But literally last week on Friday, low of $160 a contract. Those are now almost thousands. Market's trying to come up, and I think that it's got a very, very decent ability to go up. But while the SPY is trying to crash through my indicator right here at VWAP, which is these indicators right here, look how it's just kind of flushing through, not really giving a fuck. And look at how Tesla's kind of at its range where it's going to more than likely get some kind of, hey, you can't do that, or hey, no, you're not worth a fuck, or whatever you want to go and think about when you think of a rejection. I just think like it's a bouncer at a club saying, hey, dickhead, I don't think so. Nope, you're not good. You're not good enough because you didn't make it up over the 244, and you crashed the fucking party this morning. Like, oh, nobody wants to bring fucking Tesla back into the club when it tries to go and get the bitch started all the way up to 240 or 274. Nope, 247. And then it's all fun until somebody gets their eye poked out, or whatever the saying is. the Tesla shits the bed because somebody shit on the pool table in a party or something, the whole fucking thing goes to the downside. If you don't go and put yourself, what I don't understand is how the fuck Meta got there though. Was it OpenAI and the what the fuck is it called? I just went and put it on Copilot AI at the pool table. Yeah, we're gonna have to make a at pool table Instagram because that poor pool table is getting some work done. But yeah, if you would have gone and taken any of the things that I was trying to say, now you're looking at these Teslas right here. But if you were like anything I had to say on Microsoft, then you're good there. But you can see how this is setting up in a bullish situation to me. You're going and showing yourself that you have a support right here, 120. You wick down and you found 2 candles on a technical perspective. It is a option. Yes, I get it. But you're also wicking down in this contract in this 5 minutes right above this candle that opened and flushed. So I'm going to go and make sure that, hey, we're good over the 122, which is the, hey, little love tap at the 122 now that we're a couple minutes behind, right? Or a couple minutes later, hey, bud, you all right? Let's get a 122 tap. Are you good? And so it's the same way of you asking one of your homies, like, hey, bro, you good mentally? We good? Like, are you going to make it? You might not think that your homie is going to be like the happiest person in the world right after this, but you can go and know that, all right, this threshold of that 122 area is very, very big in a, I've never seen my buddy like that, to where it causes a higher form of, damn, there's a very, very big issue here, and I don't know that like my boy's gonna be okay, whatever the fuck it is. That's exactly what that sentiment is right there, where it's tapping that area that it just went and was told, that's scary. I just went and shit my pants a little bit because we just flushed right through. But maybe now I'm good, what, 20-minute candles, probably a couple of 2-3 hours later. And then into a next day, now, hey, bud, have you drank this shit off, or have you gone and slept this shit off at the 122, 123 area? Are we good now? And then if you go and get the, yeah, everything's good, I'm sorry about last night, I was drunk. That's basically an apology and the same thing that candle wick is doing in a 5-minute or 15-minute perspective, is saying sorry for fucking on throwing up in somebody's car, but in this perspective, like shitting on the market in general. Right. 26.2 is very fucking bad. GTA, and that's a big fucking problem. That's not just little, and kind of perfect timing that it would be coming to the downside, because the SPY is trying to set up over VWAP. That obviously isn't going to happen. So you're going to see that resistance right there at the 426.80 area once again, because all you have to do is just reach out to hit the 427.01 and then start our cute ass back to the downside. Like we didn't know that we were already going to do this. They're going to try to go and feed you a bounce here. I think you're really dumb if you don't at least look at the reason why I'm saying it. If you can go and look at it and say, oh, maybe Enzo's not a fucking idiot right here. Let's go, bounce on my chest. Yeah, see, look, don't be like this fucking guy. See this guy? I think they let this person get a little too close to like a fucking CAT scan machine while he was young. So, no sentiment. What do you mean no sentiment? You're not helping the fucking case either, because now you're going to go and say, let's go green. On what basis? On like what, on news? Or are we going off of just pure tits out? Because I think that anybody right now that's going and trading on tits out is going to probably get smoked unnecessarily, when they could just go and set themselves up for a realistic move and a realistic risk, and still capitalize 10, 15, 20 fold on some kind of volatility swing. As like, even if you are somebody that thinks the market is going to crash underneath $300 or some crazy shit like that, keep in mind, I was a component of 328 on the SPY. Like, I was a huge person saying, hey, I'd love that. I made very, very good money when it went to 380 in a hurry, because I had options that were able to go out a little bit in time, and I made a very, very decent rip on that downside movement. But going and placing yourself at a area that, if you do feel like it's going to go down that far, why don't you just go and buy it like here, or buy options here that are, instead of owning 100 of them, or instead of owning like 2 big ones, go and own one fucking decent one that's risky, or that's not risky, that you have a little bit of time in. Because if the market does fall, you need a hedge. But I don't know that the market's going to stay down for as long as people think. I think that we're going to get a lot of the same bullshit that we got, I want to say this is like January, February last year, where it says, oh, you're going to get some downside, you're going to get some fear, you're going to continue to the downside. And then all of a sudden we get this pop up, some decent data, and then we're off for the fucking races, back off that $400 area. I think that you're genuinely getting set up for this. I think they're setting you up to tell you, hey, we're going to the downside, to prepare you for the downside, while trying to go and say, hey, get on our team to come to the downside, benefit off of the downside. And then as soon as they go and get you comfortable in that theory, they will bounce this market and fuck your ass. No mayo. It's the sad face indicator. Anytime a sad face is posted and the market doom. Oh, okay. Right. Essentially, it's like it's news on Palantir incoming, Bree. Damn, GTA is about to pull the diamond cutters out. It's serious, dude. I think that the market is doing exactly what it's made to do. It is there to prey on people who do not have the confidence to stand behind an investment, and stand in it, even if it's not necessarily exactly the perfect entry. But if you have sentiment to the long term in a stock that you would be dumping that type of money into, obviously you're going to go and try to put it in the best position. But if you're not willing to go and cost basis down in a big position like that, then you shouldn't have been in it in the first place. But in reality, I think they're going to go and just continue to feed downside bullshit, huge fear. I think we get a move or two to the downside again, because I think that there is validity to go and bounce us over 400. So I'm kind of pricing in something like let's say just a 390 flush real quick, something crazy like that. I think that we might break 400 if they wanted to go and continue to run this to the downside. I don't necessarily think it's going to be right this second. I think that it'll be a very, very systematic theta situation, where it's just blowing you out of theta, because we're going to trade up and down and up and down. Tesla is doing it right now. but we're also getting just a wedge that we're going to get the answer to one way or the other, unless we wanted to go and zoom out. If you zoom out, you can see that Tesla appears to me to be either in a very, very big bull flag or potentially an ascending wedge, ascending wedge. So I would like to go and play it both ways. I want to play certain companies that I like, that I think have potential, that are down where I think they're down in relative to their stock price that I've noticed. And that's kind of what I'm focused on. Is I'm looking at Tesla and I think that it could potentially break 200, but I think that 200 psychological would be almost bait for where, like, I feel like it would be a place where everybody and their brother would think to go, but in reality it bounces off 206 or 212 or something like that and goes back up to the upside. Meanwhile, you see like the SPY try to bounce right off at like 405 and try to hold that little area, and you see things like Google and Amazon try to hold, like, let's say 100 if they start coming to the downside, but one foot is going to start going and tripping the other at this point, because you can't start running everything to the downside without going and creating fear in other markets. So it gets out of hand at some point, and they just have to go and gain control of it again. That's as simple as I can make it. But you'll easily see the buyers that are actually paying attention. You'll see those dickheads going and saying that they're making purchases and shit like that, or you'll hear them like talk about the volume that is coming in from the buy side, or on a bid. Typically, if like you see a huge contract fill on a bid, you're already at that position, and you know, I want to be here to get the cheapest price that I possibly can right now for this contract. The entire thing is orchestrated to steal your money. Period. They are not trying to go and be your JG Wentworth and get you money now. They're not trying to be your friend. They're not trying to go and high-five you on the ass as you're going in to shoot your free throw and win the game. Nobody's trying to be your fucking friend, and this isn't cinematic. You're trying to go and add money to your situation, and they are trying to relinquish you of it. Now, if I'm a betting man, the way they do that is fill you with fear, allow the fear to come semi-true, but never actually go and come 100% to the predictions that you're seeing right now. They'll go and probably try to take it down for a little bit. They'll try to get a 20% move from probably here or something like that, but absolutely not 48% of anything in the stock market is going anywhere unless it's fucking China. There is, however, the BRICS situation, which could be very, very interesting and have huge developments on the market, depending of how news goes and how those situations and political situations go. And I'm not really one for speculating on what the fuck is going to happen politically, but there is going to definitely be a little bit of a social push for BRICS, but I don't think that there's going to be any substantial I think that a lot of people are going to try to flock to it. I do not think that it's going to sustain itself in volume or worth or sentiment. I think it's the hottest new topic, and I would absolutely love to see those two countries who are in over their head like a motherfucker, in debt. Not as bad as we are, because we obviously want to get the fucking blue ribbon for that. That's why we're sending $5 billion to fucking Ukraine every month in cash to take care of their government, to keep the fucking lights on, and parliament and all of the police and fire and all the infrastructure shit. $5 billion to keep the fucking lights on in Ukraine. Let me say that again. In Ukraine. Meanwhile, threatening that we are going to have a government shutdown, potentially, I've heard, on August 2nd. Or excuse me, October 2nd. I think that that's when you get a lot of fear and you get a lot of people starting to mouth stupid shit, because everybody's going to get testy when all the politicians have to go and all sit in the fucking room, right? And all of them are going to want to go to Thanksgiving, right? Just like last year, where we were sitting here watching them jerk off with sandpaper because they decided that they wanted to go and wait until the last fucking minute to sign anything. And then all of them wanted to get all up in arms, right? Because they were actually being forced to stay there and do their fucking job. You had to have the heroic ones say, oh man, I'm going to go and sit here until like I can't sit here any longer and we get a fucking bill passed. That motherfucker was out the door at 8:30, not voting for shit after that. But they tried to do this once. I think they're going to try to do it again, because I think the entire thing worked. I feel like in a small way, the stupid little psychological mass hysteria things that they've done are almost comically funny. If you go and look, it seems like I'm going to watch Deja Vu. Tesla might try to come up here and break to the upside. Watch it break through its indicators here. But if it does, I'm going to be looking at the high of the day. Seeing, hey, possibly you want to go right back to that 245. If you wick up, I'm going to be looking at the 245.50 area, and I want to see a rejection. I want to see the rejection and the push away from that level that was support that we just gave up yesterday. The significance in that is because that is an area now that we were once good in a human pyramid. We were once in a good area to go and hold at the top of that pyramid. Now we just put on about 30 pounds and tried to jump in that fucking same pyramid. Bitch's knees underneath you just clack, clack under the goddamn weight of your fat ass up at the top of that pyramid. And now they don't trust you to go back up there and hold you. So now you're seeing, do they go and support me at the 426 on the SPY? Well, if that flushes, Tesla's not fucking going anywhere, guys. Did you see what Joe posted on Twitter yesterday? Are we talking about Rogan? No more money to Ukraine. Shut it down. They took the entire month of August off. Separate issues into single source spending bills. Oh, I mean, if there's the SPY breaking down to the low of the day, those contracts are getting big. Pay attention, guys. I'm doing shit. Wipe your feet. I'm running shit. Look at this fucking move. Let's go. Let's go. We're trading this to the downside. We are now feeling very good about our SPY 422s. Keep in mind, remember, we're putting in buy orders, and for in this instance, the SPY 422s, we're in for for $59. So we're gonna immediately go and look at 118 to put a put a sell limit in, right? We put that, let's say you wanted it 118, you could have it at 118, 119, whatever you'd like. But that 118 area is where I would go just to set the 100%. If I don't buy one contract at a time. If I bought contracts, I always buy multiples of 2. Because and in this strategy, I want to take the one contract or the 2 contracts that I bought. So in this perspective, it would be, I would have paid 115 total, or excuse me, 118 total for these 2 contracts. So if you have those 2 contracts at 118 total, that means that you had them at $59 per contract. I want to sell one of those 2 contracts for the same price that I paid for one of them, or for both of them, excuse me. Because then I can go, and if I set the sell limit, 9 times out of 10, anything that I get into will go in 100% itself within the life of its to the correct way. So in this right now, you're looking right now at those 422s to go 118. And just to make sure I did put my sell order up, which I did not, I'm going to be looking actually around the area, because we're watching these contracts on the SPY. I'm looking for this area of that 112 area. It gets to 112, 114, and it tries to re-ping this area several times, right? It eventually breaks up to the upside, and that's why I think there's going to be more here, but I'm going to take some out. I'm going to allow, because I think that you might possibly just gap up and then you might get some run back to the upside in the market. I'm going to take half of this position out at 111, but I'm only going to be taking about 20% out at 111. I'm also going to go and be selling at 122, probably the other 20%, keeping 60 of that in my portfolio, because then it gives me the average of holding basically the 118, and I get my money back out of it by only giving back 40% of it. So I'm actually doing much better holding 60, because I typically only would get out of this situation where I have even money at 50%. But I'm going to go and assume that we go continue to the downside, but I want to immediately protect my money and be able to go and fight the next day, because assuming that the SPY rips to the upside and goes back to 225, or excuse me, not 225, but 226 after it flushes, I didn't really benefit from that move if I'm not taking profit when it's green, which right now those are green by 42%. So in for $59 for one contract, that same contract can be sold for $83 a piece right now. So there's been no move in the market other than just a continued break to the downside. And I told you were going to go and more than likely either see a bounce at the 225 or the 425, or I believe you're genuinely going to just get a continued push to the downside. I think that it's going to be right here, where people should start looking for like a possible bounce, which would make a hell of a lot of sense, being if you got around that 220 area. That 220 area, if you zoom out, is right back towards that like kind of no man's zone that we were in, where it just blew right through 420. Now we're going to probably try to go back out. And notice that we don't really have any type of support here until we get directly into this 425.75 into the 423. That 423 gives up and you break to the downside of that. That's going to be the equivalent of SPY breaking this 235. And that's where you could potentially see a gap down overnight. I genuinely think there's a very, very good amount of downside still left in the market until a very, very select few pieces of sentiment change. My internet is fixed. Let's go. Yeah, you were hot dog shit last night. I'm gonna blame it on the computer and not the alcohol, baby. Caesar wasn't even drinking, but his internet was dog shit. By the way, those contracts right here, guys, this isn't cents. This is the per contract dollars. $92 per contract on an initial investment of $89 a contract, 96. Remember, I think you're gonna get either the run right to that 107 or this initial move of this gap right into here that gets you this right here, 114 on that contract. And you're seeing it at 91, creeping. Now we went and actually broke through the 50, the 9, and ultimately now we're looking at the 10 MA, I believe, with the SPY being, Tesla right now going to go and see the new day low. If Tesla breaks down on its daily low, the SPY is going to follow, guys. There is no question about it. If the SPY starts to go and want to get low, it's going to break the 425 to the downside because that is the previous low of yesterday. If we break that, we are going to flush more likely to the downside of maybe possibly even into the 421, 422 area. That's why I have 422 puts today. But that's also the reason why I don't want to let all 50% of that position out, because I think I can actually go and still make a decent position where it could substantiate me going and risking potentially not putting my money in a little bit of a safer place. But remember, I've already got out of 40% that averaged the exact same amount of money. What is this going to piss me off? Get the fuck out of here. Dickhead's talking. Oh my God. Gary Gensler's on the fucking. Woo, we're watching that shit. Give me 1 minute. Gary Gensler is talking and testifying before Congress and the SEC Oversight Committee. So we're going to definitely watch him bullshit his way through this. I will be giving colorful commentary on his dog shit. Give me 1 second. No, I want you to express your opinion because it's shitting the stock market into oblivion. Keep talking, shitter. Hold on a minute. Let me get this joint. Jaleel, yeah. Did you see what Joe posted on Twitter? No, I didn't, though. Oh, Joe Biden, fuck. It's not what I wanted. No, you should.
Disclosing proprietary positions in large security-based swaps above certain reporting thresholds. And specifically, Congressman Lucas and I, we raised concerns with how this move could impair market liquidity and hinder the SEC's core mission to maintain fair in order.
A one in chat if you can hear him okay.
My question to you is, first, I know you have previously said you understood the law to require some public availability of this sensitive information. But can you expand on whether widespread public access to large SBS positions could in any way impair the ability of market participants to operate their trading business or limit their ability to hedge effectively?
Greatly said.
We consider at the staff level and the commission level, not just your comment letter with Representative Lucas, but others about this. But securities-based swaps can be used to basically replicate the positions that are taken in the stock and bond markets.
Let me know.
Particularly in the stock markets. And you might recall about 2 years ago, there was a family office called Archegos that did that in quite some size. So that's one of the reasons, not the only reason, but one of the reasons is we look at this and we say, Congress gave us this authority. This is one of the remaining authorities we had not addressed from Dodd-Frank. And so we took it up. We put a proposal out about the possible requirements to report to the commission, and then in some cases report publicly these large either credit default swaps or total return swaps that, of course, credit default swaps were at the center of the 2008 crisis, and total return swaps were at the center of this one example, this Archegos example.
Yeah, now let me ask you this question. Do you see any risk in allowing the public to take advantage of this information, for example, by facilitating front-running and copycat trading, which could drive up the costs for all market participants?
I believe we've gotten that comment from a number of commenters. It's taken up in our economic analysis. Excuse me.
Get fucked.
Up in our economic analysis, but it's an important issue of all public transparency. The markets can benefit from transparency, but sometimes there's somebody that had an advantage of the opacity. So when I was on Wall Street, we used to have a saying a little bit at the firm I was at, that darkness was our friend. And it was about sometimes opacity helps make more money as a dealer, but it's not necessarily the case that the markets themselves, economists tend towards the transparency helps the proper pricing.
You can't hear him at all?
And also helps capital formation.
Well, I'm
What the fuck, Gary?
excited with your presentation. I understand with the law, economic and finance that I handle at times, particularly with the stock market. Keep up the good job. Don't get discouraged.
Shut the
We'll
fuck up,
get
Scott.
out of this mess in our financial market.
What the fuck did they give this guy?
We'll now recognize the gentleman from Florida, Mr. Posey, for 5 minutes.
Bro, put the fucking Xanax down. The fuck?
See you, Mr. Chairman.
Good to see you, sir.
In spite of the SEC Inspector General
No, he looked
GAO
crazy.
recommendations, SEC continues to assert that as an independent agency, the commission is not required
How's that?
to do the same kind of regulatory analysis and cost-benefit analysis as other agencies. Why is the agency so defiant about the suggestion to be accountable as other agencies are?
Good fucking question.
Actually, sir, we follow the mandate of Congress. In 1996, Congress put in our statute
Oh.
we have to do, economic analysis.
Right.
And so we follow that, and then after a number of court cases in the early 20 years ago or so, we updated our guidance to ensure that we followed Congress's mandate. So we do economic analysis, again, sometimes measuring in a couple hundred pages. In every one of our releases, we get feedback from the public, and then we adjust.
Yeah, because you release all over us.
So the
It's not a
Inspector
like
General
release
law,
to
we
us
don't need to do
situation.
any further any further analysis?
Well, in fact, we do need to do analysis because Congress mandated it. It's called, we have to analyze the efficiency, the competition, and the effects on capital formation. And in doing so, we lay out an economic baseline, and then we have to look at alternatives to the proposal, reasonable alternatives, and we look at cost and benefits. And so we do all of that.
And any rules are in conformance with the Administrative Procedures Act?
Yes, we do that in compliance with the Administrative Procedures Act, but also Congress added these other provisions in 1996. And as I say, after a number of court interpretations of that in 2005,
Right.
we updated how we did this. And we follow guidance that's been in place since 2012. So I think I'm the fourth chair that, we're following the similar guidance for 11 years now.
Right.
Does the commission assess and analyze cumulative economic impacts of the rules that it makes and the interrelationship with other agencies?
We analyze in each one a baseline, as I mentioned. So if, for instance, there was an interaction and we finalize a rule, then we necessarily
There shouldn't be
update
any
the
problem.
baseline for the next consideration for the world as it exists at that point in time.
All right. In your climate disclosure rule, are you requiring that firms pursuing ESG-directed investments also disclose the risks they face from favorable regulations not materializing or climate subsidies drying up or slowing down?
The proposal is really to capture the risks that investors want to understand. The proposal was about both the opportunities and the risks, but I think you did use this word. It's about materiality. We're not a climate regulator. We're really disclosure-based regulator, and thousands of investors, more than thousands, but representing tens of trillions of dollars of assets today are making investment decisions. And I'll share a statistic with you. Of the Russell 1000, the top 1,000 companies in the U.S., 81% currently make climate risk disclosures. 57% disclose their greenhouse gas, Scope 1 and Scope 2. And so what we're trying to do is just try to bring some comparability to that.
Why are you shaking all of a sudden,
for
Gary?
Investors, but also to avoid some greenwashing.
You need some iron,
Bring
bitch?
some comparability to that which is already happening.
Based on your strategic planning, which of your proposed rules is most vulnerable to the major questions doctrine set down in West Virginia versus EPA?
We really do everything we can to stay within the laws as Congress had passed it and how courts interpret them. We're familiar with
No
the
fucking shit.
Supreme Court case. It's the law of the land that you mentioned. And we take a very close look at that to ensure
You don't
that
say.
when we finalize rules, it's within the laws and how the courts interpret it.
Are you trying to resolve any of those major questions at this time?
Well,
I'm glad that was
I
up for
don't know the
negotiation.
answer. It's like any time the Supreme Court speaks to our broadly the administrative state's authorities, we take a look at that and we take a look at every comment we receive from the public to stay within our authorities.
Gentleman's time's expired.
Thank you.
We'll now recognize the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Mr.
Can I get a
Chairman.
1 in chat if you can hear this dickhead?
Chairman Gensler for being here today. I'm one of those people who believes that there is such a thing as climate change. And the scientists, I agree with the scientists, I guess. Most of the warming that we are experiencing actually took place over the last 40 years. And the last 9 years are
Are we having a stroke?
And the only reason I'm mentioning that is that we are experiencing all kinds of events along the Missouri River system. We had droughts, floodings are becoming more volatile, and weather events are becoming more extreme in impacting the Missouri River. And this becomes economical in the sense that
I'm
the
gonna
low
lose
water
my mind.
levels,
What the fuck are they
which are
putting on
reaching
here?
sometimes record lows, disrupts business. We do a lot of barge trafficking on the Missouri and the Mississippi, and that is being disrupted. And so the crisis puts into question our viability and long-term dependability. So I was pleased that in March last year that the SEC released the proposed rule to require public companies to make a variety of quantitative and qualitative disclosures regarding climate-related risk.
Listen, dickhead, you have
Is
no
there
idea
any
what you're
company,
talking about.
Any kind of economic interest in the United States that you think would be immune immune from climate risk as we are dealing with this?
Yeah,
or we may
EV
not be
companies.
dealing with it
They're fucking ripping shit out of the
powerfully as
ground
we
and
should.
not
But are there any exemptions that you can think of that
EV
would,
companies. That's what you're
corporations would not
looking
be
to
impacted,
segue
or they're
into,
not-
dickhead.
Or not being impacted today?
Again, I understand your views. We're not a climate regulator.
I understand.
We're just, it's a matter of investors making investment choices. And for some companies, investors are getting disclosures, and we're trying to bring some comparability to that disclosure.
Another paid-off member,
Some
yep.
companies, it's viewed as material, and
I think
some
they're
companies it's
asking-
not. That's an important distinction,
This dumb
of
fuck
course.
and the
But there's so
climate
many
change-
different
Yeah, fuck off,
sectors and so
Cleaver.
many different industries in this country, and
Well-
we're merit neutral, but we're not disclosure neutral. And right now, 80+% of the top 1,000 companies are already making disclosures. It's really on our responsibility to bring some consistency and comparability for investors to get decision useful information.
Yes, I'm not suggesting that you are the EPA or
I'm fucking dead.
some kind of climatologist. I'm just wanting to make sure that
Fucking
the
climatologist?
SEC
No.
continues to measure the impact through its disclosures
Randy,
of what's going on dangerously.
Fucking what's
with-
his
with
face?
climate
the guy that
change,
had
and
a
that it will all
stroke
impact
and wore fucking
corporations.
basketball shorts.
I would say this,
Fetterman.
we have 16,000 comments. We have heard very consistently from investors that they find this information decision useful and they would benefit from more consistency and comparability.
Yeah, where
in
did
the
those fucking
information they're
19 or
frankly already
16,000 fucking
receiving.
opinions come from, though, you cocksucker? Was it your
so that's
16 of
what
your
we're
fucking
focused on.
asshole friends?
Thank you, Mr.
Or
Chairman.
was it
Gentleman's
16
time's
of a
expired.
real
I will now
investor?
recognize the gentleman from Missouri, the chair of the National Security Subcommittee.
Recognize
Mr.
my
Lukemeyer,
balls
for
on
5
your
minutes.
fucking
Thank
forehead.
you, Mr. Chairman. Chairman Gensler, my good colleague here, Mr. Cleaver, and I wrote to you in May regarding
Tesla getting heavy,
SEC's
SPY
conflicts
heavier.
of interest reproposed rule, number 192, prohibition
EVs,
against
I was just
conflicts
telling
of interest
everybody
in
that
certain
earlier, Randy.
certifications, and our concerns about the potential treatment of mortgage insurance-linked notes. Now, our letter was filed under the bulk of all comment letters, and the first sentence asked for you to that we're requesting a clarification of the language that's in your rule. So we're disappointed with the interpretation of our letter, which is pretty plain from the standpoint we'd like to have an answer. But mortgage insurers are a significant source of private capital in the housing finance system, and these transactions are an important tool to reduce taxpayer risk, exposure, and cost. So question number one, do you agree that federal policy should encourage more private capital in the housing market, especially when it involves well-capitalized and highly rated entities?
Good fucking question. I like
Well, I
you.
think there are other agencies that are responsible there, but certainly our role at the SEC is facilitates a mortgage market. We oversee, I don't know, 11 or 13 trillion dollar mortgage securitization market, and what we are trying to do in that market, like other markets,
Is fondle the fuck
drive
out of
for
it.
greater efficiency and, as you say,
Well-
opportunity for homeowners.
Well, the question is, can you be a partner with the private sector? So in other words, with reinsurance for these companies is very important to be able to allow
Yep.
the reduction, well, the spread of risk, and then, of course, the reduction of cost. The question is pretty simple. Would you support something like that?
No.
I
Weasel
think
your way
that
out of it.
If I understand the question, that mortgage originators rely also on mortgage insurance. That's an important
Right.
part of the,
Right.
that I agree, that's an important part of the market.
Okay.
That doesn't have give me the ability to
In our
answer
letter,
your
we
question.
say that the rulemaking may unintentionally prohibit private insurers from procuring reinsurance via the capital markets through these MILs, and which would negatively impact home buyers, lenders, and taxpayers. Are you considering changes to the rule to clarify the treatment of mortgage insurance-linked notes?
Without prejudging any adopting release, we're considering all the comments, including yours, but these individual letters you reference. Congress put a mandate that we had to help ensure that
He stroked the mic. while I'm
underwriters and sponsors of certain mortgage securitizations not be betting against their
MGAM.
investors, and that's what we're trying
Well,
to do.
Mr. Gensler, the letter should not be canned with the comment letters. It's a request for you to clarify what you're trying to accomplish here, and the letter to point out what we need clarification of.
Right.
So we'd appreciate a response. Thank you for that. I also sit on the Chinese Select Committee, and as a
China.
result of my position there and my chairmanship of the National Security and Illicit Financing Subchair here, in 2022, the PCAOB inspection reports of mainland China and Hong Kong accounting firms, which audit U.S.-listed Chinese companies, were scathing and a reminder that financial statements produced by the CCP-controlled companies should never be trusted.
Goddamn right.
Both reports showed unacceptable rates of Part 1-.A deficiencies, which are deficiencies so large that PCAOB staff believe the audit firm failed to obtain sufficient audit evidence to support its work on the public company's financial statements. Essentially, the audits were useless.
Yep.
Is it correct that under the Holding Foreign Companies Act, Accountable Act, these two firms, which failed so spectacularly, will not be inspected again by the PCAOB for another 2 to 3 years?
No, but they need to be.
The
They broke the law. They broke
I'm
the
not-
fucking rules.
familiar enough with the PCAOB's
Oh, right.
rotating schedule, but it is accurate that when the PCAOB goes in to inspect an auditing firm in any country, they sometimes aren't able, they don't have the staff to go in on an annual basis.
Right.
Well, you know, the
Big fucking position.
premise is
though.
correct there, where they only
How
have
it's
to do
odd.
it every 2 or 3 years.
Just me.
And so Mr. Sherman and I have introduced a piece of bipartisan legislation that require them to have an annual audit. These are very, as we saw in 2020, there were 1,000 companies on the exchange. Now it's down between 250 and 300. A lot of them are shell companies, and when we're threatened an audit, suddenly they disappeared. The funneling of our capital to Chinese companies and / the Chinese government and Communist Party has got to stop. And so we would appreciate your support for something like that. And just a quick comment, yes or no?
Look, I think it's really important. If somebody wants to issue stock in the U.S., they need to comply with their laws.
Gentleman's time's
Particularly
expired.
China, that's very important.
Thank you very much. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Connecticut, Mr. Himes, for 5 minutes.
Thank you, Madam
Hold
Chair, and
on.
thanks for joining us today, Mr.
Here,
Chairman.
Chief.
I want to talk with you for 3 minutes or
idiot's
so about
doing
my
some
ongoing
stupid
efforts
shit.
to codify insider trading into law. But I do want to take a minute here, since we're on the verge of a government shutdown, to just see how that affects you and your organization. It's sort of taken for granted around here that a shutdown is going to occur because my friends on the other side of the aisle can't find the coherence to pass a rule on the floor, much less do what we know needs to be done to avoid a shutdown, which is to pass a bipartisan continuing resolution. The Senate has figured that out. They're working on that. We'll figure that out eventually. In the meantime, to demonstrate the importance of doing that, we are going to shut down the government because of some MAGA extremists. Now, we get asked all the time about the very visible
Listen,
stuff.
dickhead.
We'll be treated in the next couple of weeks to the sight of 19-year-old Marines and sailors lining up at food banks because they don't know that they're getting paid. SBA will be shut down. They will
you're
not
the
be able to lend to
fearmonger in
small
the group.
businesses,
Okay.
and those small
Let me touch
businesses
your
may
pussy
go
one
under.
time.
We could go on with all the
you're
public
wrong.
stuff, but you lead an organization that has an awful lot of people who could be making a lot more money at a bank or at a law firm who are going to be
That's
told
coming
that they're
from fucking
inessential,
really,
who may be
really shaky
furloughed.
waters
So let
from
me just
you,
give you a
Mr.
minute or
Hames.
so here. I'm curious, even though it's not
Himes,
going to make headlines.
whatever the fuck your name
what would a
is,
shutdown
kind
do
of
to
sounds a
morale
lot
and
like you're
capability
describing
inside the Securities Exchange
Capitol
Commission?
building.
It's a remarkable dedicated staff, but we're looking at probably 90 to 93% of our staff will be furloughed. So we'll be down to skeletal 7-8% of our staff. In terms of what it would do for morale, I think.
Yeah, that was after you put
history
another
shows, 'cause
200 or
we had one of these in
300%
18 and
of
35
workers
days at
in
that point
place.
Time, that it's hard on people. It's hard because they're not getting a paycheck. It's hard because, as you rightly say, they can get jobs at law firms and elsewhere and go, and they're just really dedicated public servants. In terms of the markets, I would say if a company were deciding to go public or raise offerings, they'd want to go effective before Friday if they're ready to. If not, they might be in a sort of subliminal state where they can't access the markets because we can't effectively review those.
Let me
The fuck
redirect
did
you
you
for a
just say?
second to, okay, companies raising capital, but your SEC is a whipping boy, you know that. But the truth is, the organization is full of people who are out there prosecuting fraud, who are stopping insider trading. Are we going to see if there is a meaningful shutdown, fraud go unprosecuted, insider trading?
Where are you at,
won't have
dude?
the capacity to address these things, which hurt the American public, correct?
Yeah. While somebody can still file a tip, complaint, and referral, somebody can file a whistleblower, there won't be the people on the other side to really review it and investigate it.
Thank you. Okay, speaking of insider trading, Mr. Chairman, I want to just briefly discuss with you something
Did
I've worked on
you-
for 7
wait,
years right now, which,
wait.
as you know,
What?
is trying to define insider trading in law. It's not defined in law today, as you know, and as a result, we have court-made law, Newman, Solomon, Martoma, overturning each other, creating a great deal of uncertainty, prosecutions being overturned, convictions being overturned.
Big fucking problem.
A great deal of uncertainty. I'm a believer in this idea that if we're going to send somebody for jail, we should be very clear about why we are doing that. So I'd love to get a minute or so from you, Mr. Chairman. Where are we? Would we benefit from a codified statute on insider trading law? Would that remove some of the uncertainty and remove some of the chance that the courts will overturn your traditional activities?
I think that we've had the benefit at the agency of robust, as you said, largely court-made law from the 1980s on, and you referenced some cases even in the last 6-7 years. But I think we've provided you and other members, if I remember, technical assistance on a legislative package that you had last year.
I'll put a
if I
legislative
recall,
package on your forehead, bitch.
that almost made it into the NDAA, if I recall. But
Ooh, the NDAA.
again, I think that we have good,
Shut the
robust
fuck up.
authorities, but the technical assistance, I recall, supported that bill. It supported the what you were trying to achieve.
But ideally, and I think you gave us this technical assistance, if we could preserve those authorities that are legacy authorities, if you will, but if we could.
That was the key, that we didn't want to in any way lose the authorities that all the way up to the Supreme Court that we had had.
Right, right. But I see you nodding. If we could codify a definition of insider trading and reduce some of the risk of overturning of case-made law, that might, in the long run, simplify your task and create confidence in the markets.
play.
Correct?
Yeah, I think and again, we should follow up with staff, but our major concern was that we not somehow undo some of the really good law that's in place.
Gentleman's
Thank you,
time's
Mr.
expired. Gentleman yields back. The chair now recognizes herself for 5 minutes.
What's
Chair
up
Gensler.
right now? Because I'm about to
While
short
you were a
something.
professor at MIT, you spoke at length about how technology could
Bitcoin
be used to
shit moved the bed
democratize finance.
right again.
In fact, in a lecture quoted in a podcast entitled Paying It Forward with FinTech with Professor Gary Gensler, you stated, and I quote, "What I was drawn to at MIT was this sense that maybe we can democratize capitalism a bit more, that we can use technology to make finance more inclusive and more accessible to many more millions of people in our country and many more hundreds of millions of people around the globe. Now, sir, as chair of the SEC, you've put forward a predictive data analytics proposal that jeopardizes the innovation and technology that's made investing available to millions more Americans than ever before. I'm confused. At which Gary Gensler, the American public, should believe? The academic version, who spoke glowingly about the power of technology to help more investors participate in U.S. and global capital markets, or the SEC version, who apparently thinks all use of any technology by broker-dealers and investment advisors is inherently conflicted and firms should just stop using technology altogether? Chair Gensler, could you please briefly explain this change in your views?
I thank you for the question, a clever question. It's the same Gary Gensler. It's not my identical twin brother, Rob, or anything. It's me. And I believe technology is so transformative. I think artificial intelligence, machine learning is so transforming this decade and so forth. I think robo-advisors and brokerage apps, whether they're using these new technologies or some of the older predictive data analytics, just to stand by that basic concept that the investor is first, not the investment advisor is first. That's all.
We agree there, and this proposal fails to acknowledge the already existing and well-functioning SEC regulations, such as Regulation Best Interest, Reg BI, and the fiduciary standard that protects investors. I would really urge you to withdraw this regulation, as we already have this in place. And during your last appearance in front of this committee, I asked you, sir, if you were planning to rewrite Regulation Best Interest, Reg BI, and you said that it was not currently on your agenda. However, the Commission's proposal on conflicts of interest associated with the use of predictive data analytics effectively rewrites Reg BI by holding broker-dealers and investment advisors to a higher standard of conduct and conflict neutralization than Reg BI. Were you intentionally withholding your plans to supersede Reg BI, sir, with a new proposal when you testified in April?
I feel the same as I did in April. I think this doesn't change Regulation Best Interest or the fiduciary interpretation. This does
I think you're
build on
fucking
them,
stupid
and an
if you think
important
that.
area around using predictive data analytics. It's if a function, an optimization function, it's a little bit of a math thing, but if the math is basically putting the investment advisor's interest ahead of the investors, if it's making a recommendation or it's giving a nudge, a behavioral nudge to steer somebody somewhere, therein lies a conflict. That's what we're trying to do.
It's too broad. I mean, we don't even know what technology would be applied here. And at the core, Reg BI has a fiduciary standard, the best interest, that is already there. You are now superseding that, and it's not just duplicative, it throws out potentially the fiduciary rule in Reg BI. So I again would encourage you, and I think we have bipartisan support to withdraw this rule just as soon as possible. And let me just ask you this question, since I have a limited time. How many staff, because this was a question I sent to you that we haven't received response, how many staff with the Division of Trading and Markets and Division Investment Management and the Division of Economic and Risk Analysis were actively involved in drafting the predictive data analytics proposal?
I don't have a number, but I would say that generally speaking.
Do they have advanced degrees in computer science, data science, or engineering, sir?
A number of them have advanced degrees in economics and computer science, but I don't know how many of them do.
Well, I've sent you a list of questions. I'd love to have those answers. My time's expired. The chair now recognizes the gentleman from Illinois, Mr. Foster, for 5 minutes.
Thank you, Madam Chair. And I want to thank our witness for staying up until 9:30 p.m. to accept and analyze the just-in-time delivery of our bipartisan letter with 16 Republicans and 16 Dems on it that French Hill and I prepared. I want to make sure that you understand what the meaning of that letter is. It is not that you should stop
9:30,
working on the
dickhead?
market reforms in parallel with 605 upgrades. Our intention is that you actually get the 605 done so that you have upgraded reporting of quality of order execution and so on, and have that in place so you can have a look at the data, then finalize the market reforms and watch, hopefully, the quality of order execution improve. And so just the meaning of the letter is to sequence those in that way, but not to cease all work on planning and so on of the market structure reforms. So just please read that, the end of the first paragraph carefully. One of the reasons it was late is we did a certain amount of wordsmithing to get that right. So, and I also want to comment a little bit on, you were on, it was on your shift when we had the flash crash, right? You were running the CFTC during the flash crash. And I remember when we had a hearing maybe 4 days afterward, the CFTC had, the night of the flash crash, 30 people with the entire trading history with that on their laptops figuring out what the heck happened. And 4 days later, the SEC, which did not have a consolidated audit trail-like structure in place, was still collecting the data to figure out what the heck happened. And so I think that is why we should not lose sight of making the consolidated audit trail, a success and really do it. And I think that's a separable discussion from the beneficial owner and cybersecurity issues there. And in particular, last time, one of the ways that I raised with you last time we were in front of our committee here, I asked you about the possibility of actually using the consolidated audit trail to simplify much of the report.
Market came right back to go and take another push to the downside.
Instead of making it a requirement of every one of the bazillions of companies that would have to do it, that you'd simply
tried to show you a bottom here at the 425.01.
Information necessary to make a public report of quality of order execution for the different brokerages. That you could simply have either FINRA or some competent private subcontractor like a S3 or similar, just have them write a piece of software that is run that provides this report based on the consolidated audit trail. This would actually relieve the regulatory burden on a lot of the market participants and get something that was guaranteed to be, an apples to apples, well-defined comparison of the order of the quality of order execution. Have you had time since we spoke on this to have put thought into that idea and see if that's a useful way to simplify and speed up the 605 reporting?
One, I want to compliment you on your excellent memory of 13 years ago, and that when I was
it was seared in pain.
What's that?
It was seared in pain.
Seared in pain.
Like
but it was the very next morning that the CFTC had all that information, and the SEC did not. In terms of you're raising an idea as to whether the consolidated audit trail could be used for data about the quality of order execution. And though it's possible that technologists could figure and sort that through, that in and of itself would raise costs and benefits as well. And as everybody has encouraged us to always look at cost and benefits, I would just say currently market participants, brokers, can quantify their order quality. That's what this Rule 605
That's right, but then you have to
measures.
make sure it's an apples-to-apples comparison. They will have an incentive to not quite, if there's an ambiguity, they will resolve it in favor of making their numbers look good. You're going to have some of your employees looking over that. Whereas if you just say, okay, find a competent entity, like S3 seems to have a pretty good market share of doing that already, or FINRA, to just write one piece of software, make it public, run that piece of software on the consolidated audit trail so that everyone understands exactly what numbers are being reported.
The one thing is the consolidated audit trail does not capture and compare, the orders, like you bought something on a Tuesday, or you put an order in and here's the actual quality. So it would be bolting more requirements, I think, onto the.
No, but there would be a
consolidated
running
auction, but we can
log.
follow up and
Yeah,
just
no, I
talk further.
think it actually could.
The gentleman's time's expired. The chair now recognizes the gentleman from Kentucky, Mr. Barr, for 5 minutes.
Chairman Gensler, have you ever spoken to Senator Menendez about
Coming
the
out
Security
firing.
and Exchange Commission's Director of Enforcement, Gurbir Grewal?
No.
On May 20th, 2021, your public calendar notes a call
SQ's on
with
their way
Senator
up,
Menendez.
moving through the 50 MA
What was
right now.
discussed
Market
during
coming
that
down.
call, if you can remember?
2 years ago, sir, but if I recall, there was some discussion about possible disclosure by public companies of political contributions.
Right.
Well, you hired Mr. Grewal as the SEC's Director of Enforcement shortly after that May 20th call. Are you aware of the glowing statement in support that was put out by Senator Menendez praising your hire?
I thank you for letting me know that, but until you told me, or until today,
Well, I'm deeply concerned about this, and I'll be following up with your office with additional questions and expect a written response. Mr. Chairman, I really liked your colorful testimony, and you're right. We are blessed with the largest, most sophisticated, most innovative capital markets in the world, but we cannot take this for granted. Even a gold medalist must keep training. With all due respect, Mr. Chairman, if the U.S. capital markets are a gold medalist, you are the Tanya Harding of securities regulation because you are kneecapping the U.S.
How does
capital
that
markets
feel?
with the avalanche of
Oh.
red tape coming out of your commission. On your climate disclosure rule proposal, you say that the SEC is merit neutral, that your focus on consistency and comparability of disclosures, not the merit of the investment. Sir, that is just not believable. The requiring Scope 3 emissions will lead to wildly inaccurate and immaterial disclosures that will be of little practical use to investors. They would also unfairly and inaccurately portray companies as major polluters that are in reality have very low carbon footprints. Let's be honest, the agenda here is not to provide investors with relevant information, but instead to redirect capital away from fossil energy. Your proposal would discriminate against fossil
needs
energy, and you've
gone.
repeatedly claimed that these disclosures are rooted in investor protection, but the largest U.S. energy exchange-traded fund is up 15% over the last 3 months. It's near its highest level in 9 years. How is it protecting investors to deter investment in profitable companies?
this is not doing that, with all respect. All it is about trying to bring some comparability to disclosures being made. We're not a climate agency.
I know. I've heard you say this.
We're really not.
But let's be honest. We know what's going on. We know what's going on. You're trying to scarlet letter fossil energy.
We're not.
I know
We're not,
you
sir.
say you're not, but we got the joke. Everybody knows what you're doing. You're trying to redirect capital away. You're trying to discriminate against fossil energy, notwithstanding your protests. Most American investors find all of this Scope 3 emissions nonsense and immaterial. It's immaterial. I know institutional investors talk about this, but this is about an agenda to discriminate against fossil energy, which is profitable. That's not protecting investors. That's hurting investors. It's steering them into less diversified, lower performing funds. Let me move on to the perfect storm of regulations. Let me just move on real quick. Have you consulted with Vice Chair Barr about the Basel III endgame and the interplay between what you're doing on capital markets regulation and what's happening in commercial real estate? I'm very concerned about this because Basel III will increase the cost of credit, diminish lending capacity, and undermine the role that banks play in lending and financial intermediation in commercial real estate. Have you talked to the Fed about how this interacts with conflicts of interest and securitization rule,
No,
Rule
that would be a conflict of
15C211, private funds, custody rule, and others? Because I'm really worried that Basel III endgame and all of your regulatory proposals
It's a conflict within
would lead
itself.
to a death by 1,000 cuts for commercial real estate when we're looking at maturities of $1.5 trillion in commercial real estate over the next 3 years. And it's not just about, refinancing from 3% to now 8%. It's now the fact that Basel III, and then all of the non-bank activity is going to be sidelined as a result of the interplay between Basel III and your regulations?
We have ongoing conversation with the Federal Reserve about a number of our rules, but they have the lead on Basel III. That's not something we consult with them on.
All right. Well,
Gentleman's
I
time's
think
expired. I'd ask you to submit the answer to for the record.
The interplay is important. Yield back.
The chair now recognizes the gentlewoman from Ohio, Ms. Beatty, for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Gensler, for being here today. I am going to get to a question that I'd like to ask you on the proposal regarding predictive data analysis.
The fuck is that scarf,
in
bitch?
light of the colorful questioning and use of language with discrimination and kneecapping, I want to ask you about the shutdown because I think my Republican colleagues are kneecapping the American people and those who serve this country,
bitch!
and
Do
those that
tell!
we took an oath to protect. And certainly, at least the last 5 government shutdowns have happened under Republican
Because you fucking started a shitstorm on half of them and dropped it in the lap of the Republicans. Not to say that they didn't fucking make their own problems.
If there was a government shutdown, would that grind the SEC to a halt, yes or no, in your opinion?
No.
We'd be skeletal staff.
And does that mean if there was a shutdown with your approximately 4,600 employees, you would be left with maybe only 400 employees who were not furloughed?
That's correct.
And those remainder would be furloughed without pay?
Yes, that's correct. Even those that are working would be without pay.
Right. And these are hardworking American people with families and children.
Oh, so those 4,000
that
fucking
would
people
considerably, in my word, be kneecapped by my Republican colleagues
who
have so much
for the American
concern,
economy overall.
about
It's
what
fucking
we're
like you're
doing.
trying to Thanos people like a motherfucker lately.
And so would that
with a
have
bunch
some
of
effect on
stupid
the
shit,
registration
but
statements
you're not
for
willing to
new
risk
users,
4,000 jobs that
and
aren't technically
officers
needed, that
of
don't
offers of
benefit anything
securities
anyway?
and
You
surveilling
stupid
the
fucking
functionings
retard.
and operations of capital market?
I think you could say largely the initial public offering market would be shut down with the government.
And would you say investors would be vulnerable to fraud and businesses will be deprived of their opportunity to access capital markets?
I would say that while we'll have a skeletal staff, it will be hard for us to oversee the markets.
And that's what you're charged with doing. Like we're responsible for keeping the government open and protecting the American people. You probably would agree with that. I'm not going to ask you to answer that. So now let me get on to my question after I feel a little renewed to letting the American people know that while we're here, we can ask all kinds of questions, but if we want to talk about economic analysis, if we want to talk about threats of subpoenas for not being direct, let's talk about what's happening to the American people in real time.
Go ahead.
But with that said, I'm going to give you
Oh, you're not going to do that either. Okay,
to,
keep going then.
talk about this proposal that we've heard a lot about. I understand that the proposal is
You're a fucking
currently
small
very
hernia lady,
broad
just to let
in
you know.
scope, covering the range of investor interactions, including communications through covered firms' public websites. There is concern that it could even encompass financial education tools for investors.
By the way, I told
and
you
it
guys
could
this on
cover
Ask
things
Hughes. This
such
was
as
resistant
an application that
break.
analyzes an investor's future retirement assets by changing the inputs for different mixes of assets. Can you address the concerns or take the rest of my time to talk about this proposal so we can understand it better?
Well, this is one thing I'd say. This hearing comes at a timely moment because the comment period is open till October 10th on this particular rule. But this rule really has a basic concept that if you're engaging with investors, that those investors' interests come before
Those
that
spy
of the
contracts
investment
are about to
advisor
fill.
or broker-dealer. And if you're using predictive data analytics to determine how to nudge them or guide them, you should be not putting your interest. Look, in my downtime, I like to watch romantic comedies and watch on streaming apps.
Shut the fuck
streaming
up.
app figures out that I'm like a rom-com guy, which I am. And they're doing it because they make more money because I watch the streaming app more.
There you go.
All right. But in finance, if you're doing it and you're nudging somebody to trade more and churn up their hard-earned assets,
the
or
same
to
fucking
nudging them
thing,
to
dickhead.
margin or options trading or higher fees on a robo-advisor, and it's not in their interest, but it's in the
Those
investment
contracts are gonna
advisor's
break
interest,
over
therein lies the
100% here.
conflict. That's what we're trying to address.
Thank you.
Gentlelady's
Time
time.
is up.
Gentlelady yields back, and the chair now recognizes the gentleman from Texas.
We were good at
Mr. Williams, for 5
$59
minutes.
a contract.
Thank you, Chair. The
It's over
SEC's
100 right now.
recent climate rule proposal was 500 pages of mandatory disclosures that will now require
Yeah, I got
companies to
fucking
report
comments, but
on
I'm trying to be
emissions data and
respectful.
climate risk management strategies. This proposal is a major concern for business owners back in my district who are worried.
Back
I'm a
in my
small business
district.
owner also about the SEC's recent push to implement costly environmental, social, and political regulatory requirements. They're not even relevant to the company. So the
Goddamn
SEC's
right.
proposed climate requirements will cost companies millions of dollars to
Hoorah.
ensure they are properly compliant with these burdensome rules. This will force business owners to hire more lawyers and compliance officers rather than investing back in their employees and operations, which would help their businesses grow and bring more in revenue. And I've seen that happen in my business.
Hold
So businesses are
on.
already struggling to operate within tight margins, and an increase in compliance costs could be their tipping point. And on top of that, the Scope 3
On
emissions
top of that.
disclosure will direct companies to speculate on the emissions output for their suppliers and products, which require substantial information to order to get a proper estimate. So this could lead to smaller businesses being left out due to how difficult it is for them to obtain this complex information. And the SEC crusade is extremely out of touch and exceeds their intended missions and statutory authority. So the SEC needs to
Authority.
stop their abuse of the rulemaking process before they cause any further damage to the industry. So, Mr. Chairman, what is the average amount of time and resources everyday companies will need to ensure they are properly complying with the excessive climate risk disclosures? And how can mandating companies to file on indirect emissions relating to their company provide consistent information for investors?
It doesn't.
Again, and Mr. Boer, sitting behind you, asked a similar question. Let me just put it in context, if I may. Investors today are making investment decisions based on climate risk disclosures. We're trying to bring some comparability. You and other members have raised this question about greenhouse gas emissions, so-called Scope 3. And for the listening public, this is of the value chain. It's not about the company itself. It's about their suppliers or their customers. And we got a lot of comment in the public file about this, not just from members of Congress, but from small and medium-sized enterprises in your district and other districts, from farmers and ranchers and the like. We're taking a very close look at this. Our remit, our legal authority is about public companies. It's about the public companies. And over half of the top 1,000 already making disclosures around their emissions. But we understood even in the proposal that so-called Scope 3 is less developed, is less used, and we got a lot of feedback, and we're taking that under consideration and looking at it very closely.
Because when you make
I'm
small
out of my
businesses
Tesla's at
smaller
167.
because of regulations,
Yeah,
it-
and
it's
let
not
me
gonna work.
assure you, sir, and I've said this in a Senate hearing 2 weeks ago as well.
I'm out of my
Our
Tesla
remit
puts
is
just for a
about
little
those
bit.
public companies. It's not the private
They're
companies
just
in
close
your
to the
district.
money,
My
and I
dad
don't
had a
want
very
to
small
hold them
company too.
unnecessarily. I
That's
think this.
not
I
the
want to
remit
focus
of
on
the
the SPY.
SEC.
All right. The SEC's rulemaking process is unprecedented, proposing over 50 rulemakings since the spring of 2021. The SEC has failed to understand the impact of these rules and how they will each affect the industry, as well as the aggregate amount or impact. It is crucial that the SEC conduct cost-benefit analysis and solicit industry feedback of these proposals and what it will cost for the participants that the Commission oversees. I was proud to sign on to a letter led by Chairman McHenry to you, highlighting our concerns with rulemaking agenda and substantial volume. It's vital that the SEC understands the regulatory and financial burdens that they are unjustly placing on market participants, just like we talked about. So, in closing, Chair, has the SEC engaged in any roundtables, field hearings, or investor testing to really solicit feedback before rulemaking?
Again, it was good to read your letter about 8 p.m. last night. It was a good letter. But in terms of your question,
I was touching your grandmother,
We
Gary.
solicit feedback in the
was
formal
busy,
way
son.
through the comment period. We solicit feedback and have hundreds of meetings, sometimes on any one rule with market participants, and then we detail them in the files, and we benefit from that feedback.
Well, thank you.
So
I yield my
I've
time
gone
back.
full retard
Gentleman
right
yields
now.
back.
Just
Chair now
currently,
recognizes
I
the gentleman
placed
from
a buy
California,
order
Mr. Vargas, for 5
for
minutes.
contracts
Thank you,
for
Madam Chair. And I wanna
421
thank
to the
the
downsides
Chair
puts
and
for
the ranking member
today
for giving me the opportunity to speak. And I want to say, Mr. Chairman, it's good to see you. And I have to say, it was even better
at
to see,
$8 a piece.
Chairman Lucas. Chairman Lucas was the chairman of the Agriculture Committee when I first came to Congress 11 years ago.
Come on, Spike,
he
come
was
back up for me
eminently
one time.
fair and a
I
good
want-
person to work with.
I
And
want
we
this.
have an 1,800-pound bull on our property and our ranch. And I got to tell you, don't mess with those animals. Those are big animals.
You
They
guys
can
are
do a lot of
fucking
damage. So it was
retards.
great
You
to
guys
see
are
him
using
here
your
today.
time
Like I
very,
said,
very shit
I think
right
everyone
now.
on this committee has great respect for him. But it's great to see you here. You were asked.
Give him a fucking
somewhat of a
bouquet,
catch-22
or go kiss his
question
ass
earlier,
cheeks.
And that was
What
you
the
were
fuck are we
supposed to
doing?
produce
Asking
some documents,
questions and
within
move
those
on.
documents was a letter that was, given to you by this committee. And then in that situation, it's either you disclose that letter is in there, and they say, "Aha, you disclosed the letter that we sent you." You know how typical. Or if you didn't, you'd say, "Boy, you didn't even disclose the letter that we sent him." So you were sort of caught in a catch-22 no matter which way you answered. I'm glad
Not
you
really.
disclosed the letter. But then you were asked, I think, a very ugly and unfortunate question about a recent senator. and your
Okay,
interactions
we're gonna
with
get in our
him
feelings here.
because
Tighten
he's
up.
been indicted. I think there was an insinuation there that maybe that something that you did was inappropriate or improper. Could you comment on that, please?
Maybe?
Well, I can't comment about a criminal prosecution.
No, not about the criminal prosecution, but the insinuation that you possibly did something that was inappropriate in your conversation with him on the phone.
Oh, no, I mean, I didn't discuss anything with the senator in May of 2021, except for his concerns about federal securities laws and disclosure, if I recall. But there might have been other topics that he talked about around disclosure around diversity by investment advisors.
Give me this fucking buy.
I just wanted to give you an
want it right
opportunity
now.
to say that because, again, I think that was a bit of an unfair question. And so
I think
In a-
your
in a
fucking
role like
whole
mine, I
ask
engage with
of him right
senators
now
and
is
members of the
unfair.
House of
He has no
Representatives,
idea what the
and we
fuck you're
benefit
talking
from
about, G.
those,
I'm buying these contracts right
No,
here.
I agree. But again, thank you for being here and thank you for answering that question. Now, I take a very
$8.
different view of climate-related risks,
Well,
of course,
these
on
are
this
the
side.
earlier ones,
And I think
but-
it is one of the biggest issues that we face as a world and certainly as a country.
Looking
and
to pick up
the
these
reasonable
right now.
standard, again, was created by Thurgood Marshall, and that is the reasonable person, the materiality. What would a reasonable person want to know?
there's an 8
And it
touch.
seems to me, with all the
them
headlines
to
that we
me.
have and all the information that we have about climate-related risk, and I could go through a whole bunch of headlines here, which I
Almost.
won't. But
Somewhere
it
in
seems
here.
to be that this is a gigantic
If it
issue.
drops.
People want to know, and in
In
fact,
here,
people do
it'll
want to know,
definitely
and companies have been disclosing
go.
this for a while. So I think you're on the right track. But you're not a climate change organization, are you? You're not the cop on the beat for that.
No, we're a securities regulator and disclosure-based regulator, and that's what we're trying to do here is just, as I've often said, investors are making decisions today about public companies based on their climate risk disclosures, and it's trying to ensure that it's truthful, it's accurate, it's decision useful.
Yeah, and in fact, this is what people want to know today, isn't it? I mean, any investor today that reads the newspaper, especially if they're invested in insurance or a company like that, they say, well, why isn't my company, insuring in California or along the, the areas in Florida that get swamped all the time with these huge hurricanes? Well, it's because of climate change. And now, interestingly, we used to have climate deniers to say that, no, we have the scientist that says that climate change isn't real. Now, basically, all the climate scientists, all the scientists agree. Now, you got some knuckleheads that are column writers that say, this isn't true, but it's not a scientist. Serious scientists don't dispute it anymore. And it's real, and it's a big deal, and I'm glad you guys are looking into it because investors want to know about this, especially long-term investors.
I would say from the SEC's perspective, it's about whether investors are making investment decisions and find it material, as you mentioned, the Supreme Court law of the land, that a substantial likelihood that a reasonable investor finds it significant in the total mix of information. And that's what we know to be the case today. If 80+% of the top 1,000 companies are making some climate risk disclosures, they're not all making Scope 3. We had lively discussions about that. But in terms of climate risk, a lot of companies are making disclosures already.
Well, thank you again for being here. My time is up, so my last 7 seconds, I thank the chair again. Thank you, Mr. Chair. Sorry.
Gentleman yields back. Gentleman from Minnesota, the whip, Mr. Emmer, is now recognized for 5 minutes.
Thank you, Mr. Chair. Chair Gensler, I have a series of questions that require a yes or no answer, and in the interest of my limited time,
These
I'd
are
appreciate
always
it if you
yes
would
or no,
comply
but
with
never get one.
Mr. Gensler, is it fair to say generally that large institutions in any given industry benefit more from regulatory uncertainty than everyday market participants or smaller institutions who don't have the scale or the capital to fund expensive
I picked up spies.
Large institutions could benefit from uncertainty.
Reclaiming my time. The answer is yes, sir. Mr. Gensler, you had an 18-year career at Goldman Sachs where you were partner and co-head of finance, correct?
Yes, sir.
Thank you. And is it correct to say that you made most of your personal wealth directly through your employment at this bank, Goldman Sachs?
For 2092.
I've done well since then, too, sir.
I'll take that as a yes as well. You described the SEC under your leadership as the cop on the beat watching out for our constituents, correct?
I think that's a mandate that Congress
Yeah, and I
has
think
given
you've
us.
said that, reclaiming my time. The answer is yes, sir. If you could just comply with what I've asked, I'd appreciate it. But given your 18-year career at one of the biggest banks in the world and the personal financial fortune you amassed there, do you think it's possible for you to serve as an impartial regulator and not favor large financial intermediaries?
The answer is no.
Absolutely, sir.
Suck my dick.
Mr. Gensler, do you believe the vast majority of digital assets meet the investment contract test and are therefore securities operating illegally outside of the U.S. regulatory umbrella?
As I've said, many of these assets are basically the public is anticipating.
Sir, is that a
profits
yes?
based on the
No,
efforts
thank
of
you.
others.
Shut the fuck up and go to the next one.
Again, without prejudging anyone, I do think that the significant
Reclaiming my
majority
time.
are
I'll take it as a
investment
yes.
contracts.
And to be clear,
Run
sir,
it.
this perspective has nothing to do with a concern you noted in a speech last year where you said, quote, "Over the past year, several bank executives have shared their concerns with me about the sheer number of depositors who have moved money from their bank accounts into crypto-related exchanges and wallets," end quote. Right?
The concern that those bank executives raised was that there's
Again, I'm reclaiming my time,
customers were
sir.
getting
No,
hurt.
I've asked you to answer the questions as short as I can so I can use the time I have, and it's clear that you would like to avoid answering the questions, in my opinion. An Obama-appointed judge in the Southern District of New York, a bank-friendly jurisdiction where you bring most of your cases, recently found that decentralized financial technology, quote, "not only removes the so-called middlemen from these transactions, but it also allows users to interact through a variety of methods in an easy and efficient manner," end quote. The court also said underwriters, like the ones at banks where you work, sir, are, quote, precisely the types of individual roles that decentralized exchanges were designed to eliminate, end quote. Mr. Gensler, can you assure this committee that your style of regulation by harassment towards digital asset innovation is to the benefit of every American and not driven by your desires to protect industry incumbents?
This is a field that's rife with fraud and manipulation, and I'm looking out for the American investors who've been hurt by the crypto.
I'll reclaim my time. Mr. Gensler, despite your years of rhetoric, like today, I'm convinced you are not an impartial regulator. Instead, it's clear that you are working to consolidate your own power, even though it means crushing opportunities for everyday Americans and, frankly, the financial future of this country. Even the federal courts are highlighting the damage you, sir, are doing to our constituents, and they're telling you that you don't have the legal
Tesla's
authority
breaking
to
down.
accomplish
This
your
isn't
goal
good.
of squashing competition in the financial markets.
Spy,
Congress
Tesla,
has been
Mara,
telling you that
crypto,
too.
everything in the market
Now, Mr.
right now is
Gensler, I
looking
believe our
very
great
heavy.
financial system
very
is the
careful.
definition of freedom in this country. And congressional policies must provide room for the traditional financial system to evolve alongside the disruptive digital asset ecosystem. That said, it cannot be understated
like
that a common theme throughout your
those
career,
contracts
sir,
are now up
is your
100,
relentless loyalty to the largest
37,
financial
38%.
institutions at the clear expense of innovation, competition, and everyday Americans. I yield back.
I suspect some large financial institutions
Let me
would not
yield
agree
back.
with that.
There's no question, sir. I've yielded back
Hey,
my time.
dickhead. There's no
Gentleman yields
question.
back. Gentleman from New Jersey, Mr.
No
Gottheimer is
goddamn
recognized for
John
5
Dare.
minutes.
Thank you,
okay?
Mr. Chairman.
You didn't answer my
Chairman
fucking
Gensler, Shana
questions.
Tova. It's good to see you.
Shana Tova, may this year bring you health and happiness.
You too, sir. If I can begin, in your testimony, you said that it generally takes 12 to 24 months for the SEC to proceed from issuing a new rule proposal to adopting it as a final rule. That may seem like a long time, but I assure you, as it's not a very long time for some of the smaller stakeholders that I speak to, about who are spending so much of their time and resources and running their business and trying to compete. And of course, I'm getting concerned, and I wanted to get your thoughts on this as well. Are you worried at all that all these rules are putting smaller and medium-sized businesses at a disadvantage and inadvertently benefiting the larger ones that can better handle the deluge of all the proposals? So is there an unintended consequence of actually limiting the flow of capital to smaller and medium-sized businesses and favoring the larger ones?
Look, and we've talked about this in
That
your office
position's
as
now
well.
at
I think that
62%.
we benefit hearing from those small businesses. We often then look to adjust the rules based
Tesla's
on
going to
those
break through
comments.
the
And
downside
also,
of 240.
if the
It's
rule
not
is
even going to
adopted, the
wait. We're going
implementation
to
and
probably
compliance
somewhere
dates, and
around the
sometimes we stage that,
421
whether it's
area
over
on
12
the
to
SPY, in my
24
belief.
months and the like,
But we need
after a rule is
push
adopted.
down. I'm definitely
Part of my
liking the
concern
downside,
is,
though.
and I appreciate our ongoing discussion on this front. By my count, you've issued 50 separate rules, and there are another 14 new rules on your most recent unified agenda that are scheduled to propose in the coming months. And I'm just trying to figure out the volume, what this means for the smaller stakeholders, and they just don't have the back end, the regulatory back end to be able to engage
give
with
you
the
the whole
SEC
back end there, G.
and don't know how to engage with the SEC in some ways. How do you think about that? How are you trying to shape the agency to really allow for them to also have a fair shot at comment period?
Well, in part by putting out
Crypto,
the agenda itself
Mars
2.5
breaking down
years ago.
first.
We've now proposed the bulk of that.
NVIDIA is going to be following
And
it.
then
I have
working
NVIDIA
through-
under
We
400
take meetings
this
even
week.
after comment periods, all the way up to sometimes a few weeks before we adopt. And so to keep engaging with us. And certainly if there's, not a shutdown.
We're up
we're
100% in
here.
those
We're ready to
421s.
take those meetings.
Yeah, just sometimes
And
just so you should know, just some
we
feedback that they
just
often feel they don't know
sold
how to come into the agency, how to utilize the agency.
88%.
It can be intimidating.
We've made the
especially if you're a
entire
smaller
position
player, you
back
just
on
don't
those
know
2
really how to
calls,
do it, and they don't have these
on
big
those-
regulatory teams.
I would say that sometimes those are the best meetings.
positions.
They're not necessarily the meetings.
Those
that
are at
show up
$14
on
a
the
contract
calendar
now,
as
the
much, but they really are
421s.
very helpful
They're
to
moving
hear
right here.
From
We
those
were just in it.
smaller
We were in
asset
at 8.
managers, those smaller broker-dealers or public companies.
I'd like to shift gears to digital assets. In July, I was proud this committee passed comprehensive digital asset legislation, bipartisan, including my amendment directing the SEC and CFTC to do a joint rulemaking, creating a process for delisting an asset. Since 2019, I've said that clear rules of the road for digital asset firms are critical to protect consumers and promote innovation here in the United States. You've claimed that you have all the authority you need. I know before
Trump
us,
was breaking down,
but
so
the
is the
rulemaking
SPY.
process hasn't started yet. Can you explain to us why, please?
Well, because there's already laws and rules in the books. There's rules and laws in the book that apply to crypto security tokens like they apply to others. And there's nothing incompatible because you're storing something of value on a blockchain ledger. We talked earlier about being technology neutral. Whether you're storing that at DTCC, the public clearinghouse, or you're storing it on an accounting ledger called blockchain, it's still a transfer of value, and the public is maybe, depending on the token, anticipating a profit based on the efforts of others. As it relates to the so-called crypto exchanges,
those
they're doing what
contracts
we wouldn't even
go
allow
to 40
anywhere else.
a
They're
contract,
commingling, co-bundling,
those are going to trigger
trading against the
a full sell.
and sometimes front-running the public on their platforms.
So memorandums of understanding have long been used and adopted in a number of contexts. In June 2022, you told the Financial Times you were working on an MOU with the CFTC to avoid regulatory gaps for
We're gonna be
crypto.
selling that.
Can you give us an update on the status of the
No,
MOU?
Why would you do that? I worked hard.
I was hopeful that we would do something there, but what we do is on a case-by-case basis and issue-by-issue basis, work with the Commodity Futures Trading Commission with regard to this crypto field. They have important authorities. They execute against those authorities. We do against our authorities, really both with the same goal of protecting the public.
Thank you, man. You have a sweet new year. Thank you.
Gentleman's
Yield back.
time has expired. Gentleman from Michigan, Mr. Huizinga.
Get a
is
better bow
recognized
tie.
for 5 minutes.
Thank you, Mr. Chairman, and good to be back. I was out of order here because I was in a bipartisan meeting with the Speaker talking about a debt commission, and I hope that that is going to be part of the path forward that we are
Say what?
dealing with government funding and our long-term debt. But I
debt.
want to move quickly, but I want to follow up on some of Chairman McHenry's line of questions and remarks. And I'm not going to belabor the whole situation where we have public documents that you've given us on our request that's been out there for over 7 months. No real information except for that which was FOIA'd by the public. Our request simply seeks to obtain information to better understand the black box of the SEC's activities on climate-related measures and its rulemaking authority. And you had said in your own remarks, quote, based on authorities granted by Congress. Well, I dispute the assertion that you've been granted that authority in this particular case, and we are a co-equal branch of government, and this is routine congressional oversight. So let's talk a little bit about the commission vote for the climate request. When Chair McHenry asked, have you scheduled a vote for the commission? I did not hear an answer on that. Or when will a vote be scheduled? I did not hear an answer on that. There's 13,000 emails and documents we've been told that are ready to be produced, but are being held up by a provision within Exchange Commission, 24C, Exchange Act, sorry, I should say. It requires a vote of the SEC commissioners is your assertion, or the commission's assertion. Lawyers differ on that, and it's my understanding that you claim that you don't have the votes necessary on the commission. But, Mr. Gensler, I want to ask you this. Are you personally ready to vote yes to produce these documents to this committee?
We continue to work with your staff and continue to work. We have voted as a commission on the, I think they're called transcribed interviews of.
This transcribed interviews are very different than the documents that we have requested. I'm asking you, not about the commission. Are you voting yes, and will you vote yes on giving that information to our committee as requested?
Again, as I've said, I truly believe
Tesla's a big boy candle here, but still doesn't like that.
Yes?
Working with the committee to
yes or no?
SPY has the ability to continue to the downside.
I want to know what you are going to do, not speaking for anybody else. You.
Continue on the video
again,
here.
Yes or no?
And
sir, again, we're working through this at the commission level.
Come on.
And with,
all right,
with
this is ridiculous.
Right
okay, so let's assume your answer now is no.
Google,
so what have you done to try to produce a vote
continue
of any sort? Are you talking to your fellow commissioners? Are you whipping them? Are you asking them to vote for that?
Tesla's melting right now.
We, of
off
course,
of
have to have
that
it
240.
one-on-one because of the Government and Sunshine Act.
All right. Well, frankly, we've been pretty cloudy over here on the congressional side. You know. I mean, you're fulfilling FOIA requests, but you will not give that same information to Congress.
421s are at 11
so
right there
under 24C, the delegated authority by the commission allows you to do those FOIA requests without a vote of the commission.
Being much less interesting
seems
than money.
to me maybe we need to help you out.
Yep.
Does that seem reasonable?
Out, dude.
Because here's our problem. What happens if you never get the votes? What's your plan? Ignore Congress?
We're going to continue to working with you.
What is your plan? Because we've got a plan. The chairman outlined the plan. And it begins with a P and ends in oxy, and it's not a real fun word that any of us want to fulfill.
Again, we're continuing to work and trying to get you documents on a regular basis.
But you are not. You're giving us publicly available documents. That is not the role of oversight.
Let them know.
So, okay. So are you open to legislation that would clarify that the SEC is not required to have a full commission vote to comply with the requests for Congress or in Congress or this committee?
Again, I'd have to have staff look at the legislation. We give technical assistance as we get other provisions.
Yeah, I'm pretty sure we don't need your technical assistance because so far the technical assistance has gotten us nothing. So, well, enthusiastically support the chair's discussion of using compulsory process.
Wait until this market
And,
figures out that we're not going to do anything.
It's shameful that you're hiding
get
behind
any
this
data,
24C process.
Give a fuck about what's
and
going
that the
on,
commission
or
is,
think anything positive
and
about
we are going
this
to have
fucking
to
meeting.
remedy that, apparently, based on your lack of cooperation.
Don't think that we're
One last
bouncing
quick
here.
question. Did you ever receive a memorandum or agency document in writing assessing the Supreme Court's decision on West Virginia versus EPA on the SEC's rulemaking authority?
I know that we've had discussions. I don't remember any memo. I've read.
I'm going to ask you to follow up. My time has expired.
Gentleman's time's expired.
We're going to have you follow up in writing with that, Mr. Chairman. I yield back.
Thank you.
Gentleman from
See,
Illinois, Mr. Cass.
if I were ever to become president,
Chairman.
I'd be
Nice to see
stopping
you
this
again,
shit right here.
Secretary.
Let the fucking. I want to know.
I want to talk about your climate disclosure
what went
rule.
wrong, and I want to
know that
grill you
surprises
for
but I wanna talk
35
about
minutes
that.
over the
I
fucking
realize that
this
with the
one
time
little
we've-
thing.
I'm
Don't
not gonna be
fucking
able to get
time
into
me
specifics,
out.
but I
We're
do
getting to
just
the bottom
wanna
of shit.
expand a little bit. You had mentioned to Mr. Cleaver that investors were asking for more clarity because of all the voluntary disclosures that are out there. And I think, but I don't want to be presumptuous, that there's some history there that I'm hoping you can share, because I think in 2010, SEC drafted sort of interpretive guidance regarding more voluntary disclosures. Can you clarify
That's what the SEC
happened
does, buddy.
between
It's all
2010
fucking
and 12
interpretive,
years later in
right?
March of 22, when the SEC decided that it was necessary to provide some more disclosure and specifically
you thought
even
it-
kind of like,
okay,
what was industry
necessary.
asking you for?
So a lot changed in the 12 years, particularly investors got more and more interested making investment decisions. And here in the U.S., companies responded, their investor relations and their CFOs and corporate executives responded to meet those requests by investors. And they started following something that was called the TCFD framework. You're probably familiar with this framework, which interestingly was two people that were mostly from industry. They weren't government sector that came to this framework.
Problem.
So by 2021, 80+% of the top 1,000 companies were making some climate risk disclosures. That's what really changed. Investor demand for investor decision-making, and that's where the SEC has a role.
Well, I appreciate that. That certainly is consistent with my experience in the private sector, and I think it's said that we need to keep reminding folks that this was
Oh yeah. Well, guess what?
industry-led
You
initiative.
just fucked up.
in the
Eat a
first
fat
instance.
dick.
I want to
Market's
move to
coming
the
to
state
downside.
level
I want to see
because
what's right here on 239.
a little while ago you had mentioned to the Wall Street Journal that if California
Those
finalized
contracts are up
some rules, I
112.
think your quote was, you said this may change some of the
We
economic
got in at
baseline of
7,
the
or
commission
excuse
as
me,
it
8, they're
relates
at
to pending
17.
order. And of course,
And
last
those
month, the California legislature
422
did
put there
pass
at
a package of climate
123 when we
disclosure
got
bills,
into
which
those
I
at
understand only
59.
relates to companies beyond a certain size that do business in California. But given your earlier comments, can you speak to how, if at all, that is factoring into how you're thinking about the disclosure and whether you're still on pace for an October release, as you'd earlier indicated?
Right, yeah. Release all over your chin.
So in terms of,
Stupid ass.
we look at the economics very seriously, and that law that was passed in California is not yet signed, but if it were signed into law.
If that shit triggers
as
the
I
40, I'm
understand
going to
it,
piss
that would
myself.
require companies of a certain size to report on their climate
If this
risk.
goes to
I think
40,
over
I'm gonna
$500
shit.
million in revenues, and those over $1 billion.
Actually, I'm going to
in
replace
revenues,
that to 35
to
just
report
because I'd
greenhouse
rather
gas
go and
emissions.
just not
And
be
for
a
the
dickhead.
listening public,
And on a scope 1, scope 2, and scope 3 basis, it's
yeah,
worth pointing
all
out.
three of these scopes. But for the listening public, it's
There's a
estimated that
flush.
somewhere between 1,400 and 1,500 public companies might need to report under that law. We have not confirmed that number. That's just an estimate that's in the press. And so that may change the baseline. If those companies were reporting to California, then it would be
Just
in
go to
essence
35
less
one time.
costly than, because they've already
What's up,
been
CBS?
producing that information. It's also important that the investing public, again, because they're making decisions based on those public reports, that they're accurate, that they're truthful, because the investing public benefits making sure that the accuracy of the disclosures.
And you had indicated that you were targeting an October release date for the final rule. Are you still on that pace? Can you speak that? And does California's actions in any way change that?
Let me just put this a little in context. Twice a year, working with the Office of Management and Budget, we put out what's called a unified agenda, and we put dates on all of the proposals really in 2 different dates of the year. So I wouldn't, with all respect, put too much emphasis on that. It's really with 16,000 comments. We've gone
Tesla
through
239 called that one this
15,
morning.
16 months
Possibility.
since we made
Have
the
it written down
proposal.
right here.
It tends to take, again, 12 to 24 months. But we're not doing this against a clock. When the staff's ready, when the commission's ready.
Thank you. Got more questions, but I'm out of time, so I yield back. Thank you again for being here.
I started another account, $750.
Well, thank you, Mr. Chairman.
Basically just
Chairman Gensler, thank you for being here. Mr. Chairman,
$1,500 right now.
without
It's
objection,
doubled.
I'd like to submit for the record
103% on the day.
Wall Street Journal article by Warren
me that
Stevens and
19,
Paul
I'll
Riley
suck
entitled
you.
"The SEC Wants to Spy on Your Portfolio."
Get through the 20.
Without objection.
Thank you, Mr. Chairman. Chairman Gensler, as the op-ed points out, prior to the consolidated audit trail, the government
Come on,
needed
Tesla, go.
legal cause to force financial institutions to report their customers'
Remember,
personally
we were buying
identifiable
237
information.
and a halves.
In your opening statement, you refer to the
Excuse me,
SEC as
235.
cop on the beat. But law enforcement has to comply with
Tesla's
due
going to
process.
break to the
And I'm concerned-
downside. Everything in the
I'm
market is
convinced
going to
that the
continue to the
consolidated audit
downside. The
trail
only
has the
difference is I
potential
think
to
Tesla
become
ends the
another
day around
warrantless surveillance
290.
program. And as
Or
we
excuse
have
me,
all experienced,
239,
if you
right
extend the
around this area
government
that it
power,
is right now,
that
we're
power
gonna
will
break, and I
inevitably
think
be
flush
abused, as we
continuing
saw with the
into
FISA courts.
the end of the market.
Especially if that power does not have
I want to
direct
see the SPY
oversight
kind of come
and
down here to the
control by
420
Congress.
area. If I
My
can get
first question,
420
Mr.
on these
Gensler, have you read this
421
article?
options,
The Wall Street Journal just came out the other day
it's
about
going to
the
be great. It's
consolidated
going to be
audit
beautiful.
trail.
Beautiful.
I may have, I feel like it's in the last 2 days. I saw the headlines.
All right. So it goes on to explain the problems that I've laid out several times when you've been here before about the collecting of personal identifiable information and, quite frankly, a lot of information about individuals and their buying of stocks. In fact, when you were here last time, I believe that you expressed the purpose of this is so you could peruse to look for any potential illegal activity. That's a blatant violation of the Fourth Amendment. That is what this article is spelling out, and it's gotten the attention of a lot of people, even outside the financial services arena. So I would encourage you to please read it because I think it explains the concerns that many of us have about this program. Also, Mr. Chairman, I'd like to submit for the record a letter that was sent by me and my colleagues to Mr. Gensler regarding the Consolidated Audit Trail.
Without objection.
Thank you, Mr. Chair. And Mr. Gensler, regarding this letter, in the letter I ask about the 3,000 individuals, estimated number of people or institutions that would have access to the Consolidated Audit Trail or the Customer Account Information System. 3,000 would have access to it. Who are these individuals, and how will they be vetted for access to such sensitive information?
One, I do look forward. I will read the article that you mentioned. Two, in terms of individuals, it's only allowed to be used, this Consolidated Audit Trail, at the SEC and the self-regulatory organizations. At the SEC, it's our Division of Enforcement, our Economic Risk Analysis, folks in our trading and markets.
How are they going to be, how are all these, 3,000 individuals getting access to personally identifiable information and details about stock transactions by even just a factory worker who has a Robinhood account? What's the vetting process on this? And how are we going to be ensured that they do not use this in violation of personal rights?
I just want to say, I'm not familiar with that number, but in terms of at the SEC, these are people that are dedicated public servants that are full-time at the agency, either in our enforcement, our economic risk, our trading and markets, the market surveillance.
Well, if you respond to the letter, that may be helpful. And I'd like to move on because we are getting short on time. This really just a yes or no question. Will the SEC use data collected via the Consolidated Audit Trail and the Customer Account Information system to bring enforcement actions?
We have already, we will anticipate
okay.
in the future.
So let me make sure I've got this right. Well, let me ask you this. How has it been funded, the Consolidated Audit Trail? Is this being appropriated by Congress?
It's by industry funding.
Okay, so private industry is funding this, which the cost of this has gone up exponentially since it started. But this, just to close out, I want to make sure I understand. You're saying that the Consolidated Audit Trail is a comprehensive database of transactions used for federal enforcement purposes, but it is not subject to congressional oversight or through appropriations. I mean, this is lining up to be another surveillance program without any control, without any constraint, without even the power of the purse. And I yield back.
Gentleman's time has expired. We'll now go to the gentleman from New York, Mr. Torres, for 5 minutes.
Thank you, Mr. Chair. Mr. Gensler, good morning. I worry that the term investment contract has become so infinitely malleable and manipulable that it means whatever you unilaterally thinks it ought to mean, right? I worry that when it comes to crypto, your interpretation of the term investment contract has no limiting principle and therefore could invite arbitrary and capricious enforcement action. So I want to take a few minutes to explore the concept of investment contract in greater depth. And I want to start with an obvious definitional question. We know that an investment contract requires an investment. Does an investment contract require a contract?
You know, something about this definition, I will quote Thurgood Marshall, Congress painted with a broad brush. And when Marshall said that, he was writing the law of the land. So we follow this Howey test and how not just Marshall, but other courts interpreted it. And it has a four components.
Again, I did not go to MIT, but in the Bronx, if I ask whether an investment contract includes a contract, the answer is typically yes or no. So,
actually, sir, under the Supreme Court law of the land, they do not write that in. They say it's an investment of money in a common enterprise, and you're anticipating profits based on the efforts of others. So I took an oath to follow the law of the land, and that's the Supreme Court law of the land.
So in Howey, the Supreme Court refers to an investment contract as a contract, scheme, or transaction. That was the terminology that I saw in the case. And as far as I can tell, there's nothing in the Supreme Court's jurisprudence that suggests that a scheme or transaction means the absence of a contract. And so by way of illustration, consider the landmark case of SEC versus Howey. In the Howey case, there was not a single contract, but there were two contracts. A land sales contract with the Howey Company and a service contract with Howey in the Hills. And the court found that the combination of those two contracts, the total scheme, the total transaction, the total economic reality, was constitutive of an investment contract. And so a scheme or a transaction does not mean the absence of any contract at all. It means, as it did in Howey, a multiplicity of contracts. In August, there were 6 law professors from law schools as preeminent as Yale who came to the following conclusion, quote, no decision of the Supreme Court has ever found that a scheme that does not involve a contract could qualify as an investment contract. And so do you disagree with that statement? And if so, could you please cite a decision of the Supreme Court that has found an investment contract in the absence of an actual contract?
The SEC has been in front of multiple courts, and investment contract has been...
What's the name of the case, Mr. Gensler? The Supreme Court case that has found an investment contract in the absence of an actual contract. Do you have the name? Can you cite a case?
The SEC over the decades, whether it's
Can you cite a case?
Whether it's whiskey caskets, whether it's crypto, if the public is investing based upon the efforts of others.
I find it telling that you cannot cite a single case.
That's a security.
Not a single. How about a Second Circuit case? Can you cite a single Second Circuit case that found an investment contract in the absence of a contract?
I understand where you're trying to go, and I'm going to leave that to the very fine attorneys at the SEC in front of courts. But I'm saying the core principle.
Mr. Gensler,
this is a field.
This is. Let me finish. This is a question to which you should know the answer, because the definition of an investment contract is the central issue. That's what determines the extent of your authority. That's what determines the applicability of federal securities law to crypto transactions. And your
I am
inability to answer
answering
that
it-
question
I
is
am-
baffling to me.
I'm answering it consistent with what the Supreme Court has said, which is the law of the land is a four-part test.
And yet you cannot cite a single case to support your
It's called
argument.
Howie, it's called Reeves, it's called many cases at the Supreme Court, sir. 8 or 9 times it's been affirmed by the Supreme
Can I ask, suppose I were to purchase a Pokemon card, would doing so constitute a security transaction?
You could purchase a Pokemon card. I don't know what the context is, but if you just purchase
It's a great
Pokemon
question, though.
card
If I purchase a Pokemon
at
card, is
at
that a security
retail
transaction?
store, that's not a security.
Okay. If I were to purchase a tokenized Pokemon card on a digital exchange via a blockchain, is that a security transaction?
I'd have to know more.
Okay, so for you, the process of tokenization is what transforms a non-security
just said-
transaction into a security transaction?
Look, if the investing
I thought you were
public-
technology neutral.
If the investing public is anticipating profits based upon the efforts of others and they're exchanging funds, that's the core.
I see my time has
test.
expired, so.
Gentleman's time has expired. Well, I'll go to the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Chairman Gensler, recently a federal court called your rejection of a Bitcoin ETF, quote, arbitrary and capricious. In a subsequent interview, you dismissed the judge's opinion. Asked a follow-up question, if anything a judge says would change your mind, you responded, quote, well, no, not really. It seems that you don't really recognize the authority of the judicial branch. You seem to have a love for the Howey test, selectively applied as illustrated by Mr. Torres. But, you know, in light of those
100%.
reactions, you know, what should people make about the Bitcoin ETF? How will the SEC revise its approach?
We have great respect for the courts. I personally have great respect for the courts. We're considering.
Not really, if you don't
that
respect
it's
their
still
jurisdiction
an
and,
active
and,
consideration of the commission. And
So you haven't made up
we're
your mind. I got to
we're
tell you.
familiar with the case.
Yeah, I got to tell you that many market participants have reached out and are concerned that you will arbitrarily, perhaps also capriciously, pull recent filings ahead of others
Capriciously.
who've been working with the SEC for years to get an approval for a Bitcoin spot ETF. Will this resemble some sort of free pass for one favored company while others remain locked out? And I ask that because it seems that's happened before at the SEC.
Sir, I'm not sure if I'm following. I mean, we're still considering that court case and the application, as you say, to Bitcoin exchange-traded products.
Are you going to preserve people's place in line, or are you going to pull ahead a favored transaction or another on the consideration of a Bitcoin spot ETF? Are you going to preserve the place in the queue? Because timing matters. People have worked on this for years, and then you get a recent filing by somebody big in the market, and it seems like, oh, yeah, let me take your calls. How can I help? Meanwhile, you've given the stiff arm, as I've said, Hotel California-style regulations where you can check in with the SEC, but you can never leave. Never leave with clarity. You know, and how about the legislative branch? Do you recognize the authority of Congress or the laws that we pass?
Yes, we comply with the laws that Congress passes every day.
Well, I've heard you say that about the courts and now Congress, which is encouraging, but I am inclined to judge your deeds more than your words. And, you know, I'll pick up where one of my colleagues, Mr. Huizinga, left off with the Supreme Court decision in West Virginia versus the EPA. Are you familiar with that case?
Yes, sir, I'm familiar. It's an important case.
Glad to hear you say that. And it would be binding, correct?
It's the law of the land, sir.
That's right. And it introduces a major questions doctrine. And you told Mr. Barr that you received tons of feedback on your proposed ESG disclosure rules, feedback that should make clear that the proposal for ESG disclosure is a major question. And it should make clear that you don't have the legal authority to do that. So I'd ask you to knock it off. Cease and desist and work with this body to pass a law if you want to regulate something. You know, frankly, your time as chairman has highlighted two problems, a Gary Gensler problem and a structural flaw in the SEC. And as I told you in April, I proposed a solution called the SEC Stabilization Act. You're making the case for this bill easier every day you are acting as the chairman by doing rulemaking after rulemaking without any regard to the impact of these rules, or maybe that's the feature for you, I don't know. But it's having a massive impact on our markets. I mean, we have markets that truly are the envy of the world, and why would you disrupt them, with processes that are driving capital out of our markets? Not because to avoid our laws, but to find some place where they can get clarity, where they can work with a regulator and get a decision in a path forward. So instead of selectively applied, you're not providing clarity with a rule that's evenly applied. You're intentionally shortening comment periods to limit feedback. And the courts have even called this arbitrary and capricious. You're pushing a woke political and social agenda, and I think abusing your role in the authority of the SEC as cover. So, I think fundamentally, the SEC Stabilization Act would remove the role of chairman. It would preserve the current commissioners, but it would add a sixth commissioner. So
I'm
there
waiting
would
to
be
see the SPY go and tap
no more than 3 from any one political party,
to
and so
re-enter to
that
the
would
downside.
provide a path that would make
I'm gonna
the
be
SEC
looking at
do
like
what
a
you're
little
avoiding.
further out, probably.
Frankly, you're front-running Congress, you're front-running the courts, you're front-running even the own administration, and no one has held you to account for that. I mean, I wish the Biden administration would say you're fired, but the list of folks they need to do that for is long. Congress hopefully will with the SEC Stabilization Act. I yield.
Crazy.
Gentleman's time's expired. We'll now recognize the gentleman from Nevada, Mr. Horsford.
Talking
for
shit.
5 minutes.
Thank you, Chairman, and to the ranking member for the hearing, to Chair Gensler for being here. While investor protection remains paramount for my colleagues and myself, it should not be lost on anyone here that the largest risk our investing public is exposed to at this moment is the risk of a government shutdown. We hear time and again in this committee that our capital markets are the deepest and most efficient in the world, and yet a large part of why they were able to reach their presently enjoyed eminent status is because investors around the globe have confidence that the SEC has the power necessary to maintain fair and orderly markets. Without proper funding in place, the SEC cannot carry out that critical investor protection mandate, and I fear that as funding disruptions become increasingly more common, we risk losing the world's confidence. And so I'll continue working earnestly with my colleagues to avoid a counterproductive MAGA Republican inflicted government shutdown, but I ask all of my colleagues to consider the far-reaching consequences of this short-sighted path.
There's not one.
Mr. Chairman Gensler, when we last spoke, I raised concerns regarding the open-end fund liquidity rule, and I appreciated your willingness to consider that the vast majority of my constituents do the bulk of their investing through their retirement plans. These hardworking Nevadans should not be at risk of losing out on today's price simply because they live on the West Coast. Chairman Gensler, as the SEC continues to evaluate its economic analysis for the open-end fund liquidity proposal, what have you been able to ascertain about the disparate impact for investors based on geographic location?
It's been raised by yourself, but it's been raised by members of the public.
Have you resolved it in the rule? And I only have 3 minutes.
No, I appreciate it. I'm not trying to prejudge where we will end up. The overall rule had 3 key parts. You're focused on one, which is what was called the close or hard close. But there are 2 other really important parts. Liquidity, just what is the liquidity behind
So will the geographic location be factored in your final rule, yes or no?
It's an aspect of it, but it's still all funds today close at 4 p.m. Eastern Standard Time,
Which
so it's already
disproportionately impacts Nevadans and people on the West Coast. So I'm going to keep pressing the issue until you understand that it's a disparate impact on those of us who live on the West Coast. And Nevadans should not be treated unfairly because of where they live. That needs to be factored in the final rule.
I agree,
Chairman Gensler, as Mr. Meeks pointed out earlier, minority and women-owned firms still tend to be smaller as they work to overcome their traditional underinvestment and lack of working capital. As you heard previously, these smaller, more diverse firms will have more difficulty complying with the new disclosures required and will have less ability to absorb the cost associated with doing so. Earlier, you had begun discussing the expanded analysis the SEC made for the disproportionate impact on diverse and women-owned funds when the Commission considered the private fund advisor rule. Would you be able to expand upon your earlier answer that these funds were included in the analysis of small business and give us any specifics that your team found on the potential impacts on these funds?
I'd be happy to have staff follow up with the actual pages and the parts of the economic analysis, but it was considered as part of the effects on small investment advisors, including women and firms of minority-held firms.
It is a waning diversity. The issue of waning diversity in our equity markets is of great concern, and we must be careful about adding any additional burdens on these small firms. And I look forward to working with the SEC specifically on this issue. As I said, it's a wider issue, Mr. Chairman, and I worry that at a time when attacks on diversity, equity, and inclusion initiatives, not woke, like my colleague just referred to, when the next time someone uses that word, will you define what you mean by it? Because to me, it means anti-diversity. It means anti-inclusion. And if that's what you stand for, then you don't represent me or my constituents. We are working hard to hold the line.
You're a
There is
grown-ass fucking
nothing
man. This isn't
in any court decision by the Supreme Court or anywhere else
for me. Shut
that
the
should
fuck up.
quelch private sector's commitment to diversity, equity, and inclusion. We must use every tool available to us to not only bring new entrants into the financial system, but to also promote
Gentleman's time
their
has expired.
success within our financial institutions as well.
Dog
I will
shit.
yield back at this time.
Gentleman yields. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, and thank you, Chair Gensler, for taking time to leave your virtual office in Maryland to attend today's meeting. And I was also glad to see that you held an in-person open meeting last week for, I think, the first time during your chairmanship. I say that because, Chair Gensler, you are rarely in the office and conduct most of your meetings from the comfort of your home. And what I wonder is, how can we be sure of who you are meeting with on a daily basis? If perhaps someone from Better Markets comes over for dinner
really
to discuss
stupid fucking
Europeanizing our U.S. capital markets, would that be logged and made publicly available on your calendar?
I haven't had any of those dinners, but hypothetically, if I had that dinner, it would be logged.
I hope so, and I'm glad to hear that. Chair Gensler, in your written testimony, you state that, quote, "We also have finalized 24 rulemakings, nearly all of which have changed based on public feedback," close quote. Approximately how many hours per week do you personally spend reading public comments submitted to the unprecedented number of proposed rulemakings issued by the SEC?
I work a lot of hours during the week. My kids are grown and out of the house. My girlfriend lives in a different city. So I don't know how it breaks
How
out.
the
I
fuck
usually
you have a
get
girlfriend
summaries
is
of
the more
comments.
impressive thing to me.
But then staff gives me individual, if it's a member of Congress, I read all of the members of Congress comments personally. But then I get examples in each of the rulemakings, a handful on each of the issues.
Well, I'm glad to hear that as well. Chair Gensler, in May, I co-led a bipartisan letter to you along with my colleague Jennifer Wexton and 22 of our colleagues regarding troubling accusations that the China-backed fast fashion retailer Shein allegedly engages in human rights violations, including utilizing materials that may have been made using Uyghur forced labor. Do you believe that Shein should be required to certify via independent verification that the company does not use Uyghur forced labor as a condition of being registered to issue securities in the United
Tesla's
States?
going more to the downside.
If I might step away from one registrant and go a little broader, Congress passed a law, the Uyghur Forced Labor Act, I think was the name, and that's the law of the land. And so if you're a registrant and you're getting supplies from that region of China, whether you're a U.S. company or a China-based company, we put out guidance, the staff put out guidance earlier this year to all public registrants that they have to speak to if they're in compliance with that act of Congress. Again, materiality matters, and we've been very clear with that with individual registrants and their filings, and our Division of Corporation Finance makes that abundantly clear in each of those registrants' discussions.
Thank you, Mr. Chairman. I ask unanimous consent to have the text of that letter entered into the record.
Without objection.
Chair Gensler, regarding cryptocurrencies and shifting gears, I'm interested in why you have pursued a litigation-heavy strategy, despite the fact that neither you nor any of your senior staff are litigators, neither your chief of
I just
staff,
filled
nor your policy
ABGO
director,
puts
or even your general counsel.
765
Why have you settled on such a litigation-heavy strategy
or 808.57
to address the cryptocurrency market?
Frankly, it's because the field is so rife with hucksters and fraudsters and non-compliant parties, but we've also done rulemaking, one related to broker-dealers that was completed a number of years ago, and then others related
Tesla's
to the definition
melting.
of exchange and the custody rule.
By the
that's
way,
been
those
discussed a bit here,
options we picked up
and even
on
something
Tesla for
called,
$59 a
best
piece
execution.
are
This is a field
$291.
where the American public's at risk and being harmed every day on these platforms that are commingling and trading, often trading against their customers.
Well, in my view, it seems that these cases are brought
entered
with
those
an
puts for
explicit
70 a
political
piece
agenda, not a
on
substantive
ABGO.
legal one.
Nothing could be
Those
further
Teslas are
from the truth.
moving
There's
because
nothing-
Tesla's coming to the
only
downside.
thing political is protecting the American public, which I think members on both sides of the aisle probably agree. They don't want to
See?
see constituents.
I'm looking for the
hurt
132 or
in a place
136.55
where a lot
and
of
potentially even 130 or
projects are not
230.
properly disclosing. There's been all too many
But I will be buying
bankruptcies,
calls
and
at both of those
bankruptcies,
areas.
Investors are just lining up.
Geo
for
Group
bankruptcy court.
is in the stock
Well, thank
market.
you. In my opinion, I'd like
And
to
this
see
bitch is
you
running
do
to the
more
downside on
from the
Tesla.
regulatory and guidance
Chairman's time has
side
expired.
because this industry is so important and we need to foster it, in my view. Thank you, and I yield back.
Gentleman yields back. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you. Thank you, Chair Gensler, for being here. I know that you've been pretty public about the fact that, or maybe you made an argument or took a position that it's too costly for firms if the SEC establish a robust climate disclosure rule. Is that correct?
I told myself I would
There
stop
are many
drinking.
comments in our comment file that have raised that, and that's what I'm talking about, because we, under the Administrative Procedure Act, have to take all those comments
I
and do an economic analysis that takes into consideration the
So
cost.
in those
Cheers
comments,
to
I mean,
that,
one of
then.
the things is suggested, I mean, this is despite, I think, about 1,000 companies have already voluntarily reported emissions from their customers and suppliers. We call it Scope 3 emissions, as you know, where most of the firm's greenhouse emissions can originate. So on top of that, we also are now seeing thousands of additional U.S. companies will soon be required to report Scope 3 emissions to comply with the EU standards. And then California, I think, just passed a bill that would require roughly 5,000 public and private companies to report Scope 3 emissions, correct?
Yes, I believe both Europe, and if the governor signs a law in California,
Sure.
that will be the case. And it will change the economics because it, in essence, changes the baseline.
So do you think you're going to look at that? And because
Tesla 237.
those
Suck
three,
my
you know,
dick.
just looking at those moves
Let's
by
go.
California, of course, and the EU,
Take them
Scope 3
titties
emission disclosures,
I'm on
would it
fire.
undermine, I think, the argument that such reporting would be overly burdensome to be required by SEC?
While it may change the economics over the course of the years, California's rule wouldn't be in place till 2027, I believe. It's still, we, the SEC, have to stay within our remit and the laws as Congress has passed. And it's about investor decisions and what they're being disclosed.
Sure. So if I may, Chair, I would like to submit for the record a letter signed by 25 of my colleagues, House and Senate, urging you, Chair Gensler, to finalize a robust climate disclosure rule that includes Scope 3 emissions.
Without objection.
How about you
No,
suck
it's
me
pretty
from the
simple
back?
why we need a robust disclosure rule, Chair. I mean, it's simple maybe for me. I know this is what you do every day, but I think the impact on the ground for my families is pretty clear. I mean, currently U.S. companies can and do obscure their exposure to climate risks, as you probably already know, and threaten the investments that retirees and workers depend on. So for example, like you look at Brookfield Renewable, an affiliate of a giant asset manager, and Brookfield describes itself as, this is quote, one of the world's largest publicly traded.
Yo, look at the Spy, or not the Spy, Netflix.
Renewable power platforms.
I called this like it's going out of style.
Avoid climate-related
378 back
risks,
about
right?
a month ago. So
Wrong. A recent report found that Brookfield Renewable is invested in a fund that holds fossil fuel infrastructure assets, including Alberta oil sands pipelines, which the firm does not disclose in its SEC filings. This is just one example among many, Chair, of financial greenwashing, which regularly involves omission of Scope 3 emissions. So again, I really think such practices jeopardize the hard-earned life savings of many of my residents and workers across our country, retirees that invested paycheck after paycheck, year after year, to secure their financial future. So just please know, and I want to be on record, that I really would urge you to move forward on having a robust disclosure firm. But with that, Mr. Chair, I would like to yield the rest of my time to Member Foster.
Thank you. I just have one quick question. I take it that you're familiar with this graphic from Bloomberg that shows you lagging significantly behind your three predecessors in terms of the number of rules you finalized in the first 2 years of your tenure?
I did read that in Bloomberg Law 2 weeks ago.
Okay. Now, when your Republican predecessor, Harvey Pitt, finalized 34 rules in his first 2 years and 4 months, I guess, was that preceded by the sort of detailed cost benefit of all the possible interplays between all of these rules that our Republican colleagues are asking for?
It included cost benefit, but we benefit from.
But the interplay between the 34 rules, which now is apparently the bar.
Thank you. As best I understand, they did it rule by rule individually.
Individually, yeah. And so when Mary Shapiro did 28, or under Trump, Jay Clayton did 25 rules in the first 2 years, was there any, comprehensive analysis of the interplay that's now being demanded?
Grab his dick and twist it.
Gentleman's time has expired.
Your time's expired, dude. Fuck off.
Gentleman yields. Gentleman from South Carolina, Mr. Timmons, is now recognized.
Make
for
this
5
thing
minutes.
spicy and shit.
Chair Gensler, thank you for being here today.
Good to see you again.
Where's the smoke and fucking flames like at the soccer field or the soccer game?
Severely impeding U.S.
Let's get behind Town and Country here.
Your regulatory approach is an insult to the intelligent Americans and their ability to make risk-based decisions when investing. Quite frankly, we've never seen market participation at the levels we see today. The current ecosystem represents a thriving financial sector where people, no matter their income levels, have access to investment opportunities previously unseen in human history. And this is why I struggle to rationalize why the SEC continues down this warpath of rushed and quickly written proposed rules. I could go down the list and probably name dozens of proposals that I think are too broad and they lack quantitative analysis or have reduced comment periods, but I'm just going to talk about a couple of them. So on December 14th,
it's going to be some. We're going to have some interesting days coming real quick.
Governing equity markets. These proposals make sweeping changes to how national market system.
I think it's feeding you. Though remember, I think you're going to get fed to the downside.
There is no indication of a
even though there could be continuation.
A sweeping overhaul of the U.S. equity markets. Traditionally,
I think ultimately you have a bounce somewhere, and
or when directed by Congress.
That place would be probably 420 as a giggity, like, haha, we're going to go and jump it at 420. I think also right here at the 424 area is going to be interesting, but we did just reclaim that 424, 64.
2021 SEC staff report on meme stocks as a rationale for the proposed rulemaking. However, the report does not recommend any equity market structure reforms. To this point, you have repeated this buzz phrase, the playing field isn't level. But you haven't explained what that means or cited how it harms investors. Investors have the best user experience and the lowest costs in history. The industry says you're just picking favorites between exchanges versus wholesalers and that retail investors may not actually benefit from these proposals. So that was my long intro. How concerned should we be about the potential for increased costs to investors, especially in scenarios where
retail brokers may need to reinstate commissions due to changes like the suggested increase in price improvement?
The proposals were put out to address individual problems, but they really are about driving greater competition and efficiency. Right now, our equity markets on any given day, depends on the stock, between 30 and 50% is not in the lit markets. It's being traded in what's called the dark markets.
That bitch is fucking
and
moving.
so we're trying to bring more competition in that.
Randy,
One of
keep
the
an eye.
rules actually has a tremendous amount of support in the comment file from many market
I don't know
participants.
enough
Is
about it, but it's interesting.
lowering the minimum increment. You can trade at a penny down to a half a penny, for instance, and things like that. So we're looking
Why
at
the
these
fuck do I
comments
want
and
to trade
looking
for
to
half a
update our rules.
penny,
So
Gary?
Currently, tens of thousands of Americans can trade for free and at their fingertips. Do you think that your proposal will
Not at
result
all.
in the reintroduction
no.
of commissions?
Zero commission does not mean it's necessarily free.
Thank you, Gary.
There's a lot of things that are going on behind. When
The
you
fuck is
send
this guy
a
smoking?
market order, that's a very sweet order because most investors doing 100 shares are not going to invest another 100 shares or another 10,000 shares behind it.
It's going to result in increased fees for the people that currently have no fees. But
Actually, what our economic analysis shows that in each of these roles it would benefit. We believe that the benefits are significant.
Shut the fuck up,
sorry,
Gary.
so
You're blowing
saying
me.
that if this rule goes into effect, that the people that are currently trading for free will not have to pay commissions? Because I think they will have to, because that's how the market's going to inevitably function. You're not going to be able to continue providing free trades if this rule goes into
To a
effect.
specific people.
Actually, again, there's separate rules, but the one I was talking about is in terms of lowering the minimum increment. There's a lot of support for the other rules as well to say that brokers have to give their clients
Tesla's
best
hauling ass to
execution.
the
Seems
downside,
pretty
guys.
straightforward to many of us.
I just think that if we're going to try to provide inclusion and participation in the markets for all Americans, we need to do this with a scalpel and not a sledgehammer. And I think you've been taking a sledgehammer during your time at the SEC. With that, Mr. Chairman, I yield back. Thank you.
Gentleman yields. Gentlewoman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chair, and thank you, Mr. Gensler, for joining us here today. And I always look forward to your visits, and I'm thankful that you're here, and we're still all here to finish to the end.
All right, lady.
I want to bring
Where'd they
back,
get her out of? Kindergarten class? The fuck?
Referenced by Mr. Foster. This comes from an article written by Bloomberg Law titled "Gensler Lags Predecessors in SEC Rulemaking as ESG Plans Linger." In fact, they say that you have the slowest pace in decades. In decades.
Get her. Get him.
We see under Bush it was 34, under Obama 28, under Trump 25, but you've only had 22 rules for the same period of time in the first 2 years. So we've had a lot of talk from the other side of the aisle about all these rules that are too many rules, too quickly, you're not listening, you're not doing enough investigations. But Bloomberg seems to think you're a slacker. Are you a slacker, Mr. Gensler?
I don't know. I leave that to others to comment on, but we do things thoughtfully. We do it by the book. We take the economic advice that we get, and Bloomberg Law has these numbers, so they speak for themselves. I think Chair Clayton, under President Trump, did 64 final rules by the time he finished his 4 years. So our rule agenda
So
is...
you're not even at half of what the Trump administration did.
Well, the chart says we've done 22. We're now at 24, and he had done 25, I gather. We just do it thoughtfully. We do it under the law, under the economics, and I'll leave it to others to comment. But we're
Tesla's
doing
coming
it on
back down.
behalf of the American public and for investors.
Still
and
continuing,
insurers,
but we're getting
making
close
sure
to this
that they don't work for the
236.55
markets.
area that I'm thinking we might
Market
possibly
should work
bounce.
for them, and
And
all
that
too
would be
often
the
in this
SPY
country, it
low.
seems to get turned around that somehow investors and issuers are there so that some market intermediary makes a
So it's all about transparency. And could you just in a few words, explain to the average viewer who may be watching today why transparency is so important in this area, particularly in this area?
Transparency helps foster competition in markets. When you have transparent pricing of products, or if you know that a performance of an investment advisor is more transparent, it tends to lower the cost in the middle, and that again helps you, average working or retired American, to invest, but it also helps the people with good ideas. If you lower the cost in the middle, and that tends to come from transparency, just as like when you're buying an automobile, it's good to know the transparency of what a few different auto dealers are charging for that same automobile.
Okay. Well, the other issue that you and I have discussed many times is how important financial literacy and education is in this sector. And the last time you were here, I told you of my concern about financial literacy, not only in my district and in Texas. The Federal Reserve Bank of Dallas reports that 8% of Texans do not have a bank account, and 37% of Texans have not planned for retirement. Financial literacy, of course, is key. Chair Gensler, could you provide an update on the SEC's educational efforts to improve financial literacy, not only in Texas but across the nation, to improve people's understanding of the work that your agency does?
We have an Office of Investor Education. It's a very important office. We also put out investor alerts often on our website, and we try to engage with the public, the broad investing public, to help them understand the markets, but also to protect themselves against wrongdoers in the markets. And if you have something to tell us, to also tell us through the tips, complaints, and referral.
Right. I also have a follow-up question on the financial inclusion regarding not literacy, but language barriers. What are we doing to address any language barriers in behalf of members of our communities and our constituents in terms of investors?
A very important issue. We've certainly done some things recently with regard to shareholder reports, but I think I'd want to come back to you because it's an important issue about language.
Well, thank you. And Mr. Chairman, I also would like to offer for the record the article that I referenced earlier.
That's available to members under general leave and without objection. So ordered. We'll now recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you, Mr. Chairman.
Man, I'm good.
Chairman Gensler,
Oh
good to
my
see you.
God, look
Good
at
to
my
see you,
Tesla
Mr.
fucking calls.
Thank you. So the SEC's climate rules, Scope 3, provision mandates reporting on emissions from activities not directly controlled by a company up and down its supply chain, as you well know. So supply chains, let's say from China or some other offshore source, for example, which are perhaps less scrutinized and submit data which could be suspect, as opposed to from a U.S.
Jesus Christ, I'm good at my job.
Is an example of how Scope 3 data could be flawed and the system as a whole. So what are your thoughts on that? And is this, is this somewhat of a push towards capital towards certain industries as opposed to something else? I mean, what's the intent? And the other thing I'd like to ask you is, are you fully aware of how it's rattling many companies, right? I mean, this rule won't go into effect perhaps until next year. Companies are preparing for it, and as are private companies. Private companies are preparing for it, and so there's a lot of additional compliance that goes along with it. So maybe you could comment on that?
Two very good questions. First, on many investors are looking at what is the risk of companies with potential climate change.
I want to see the flush down underneath
One of the measures of
235 to
that
enter
risk
Tesla
is
long.
the greenhouse gas emissions of the company and possibly their supply chain or so-called value chain. Though many companies know
You're losing the
their own
NIR
greenhouse gas emissions,
VWAP there, Randy.
they don't
just a little bit.
necessarily know, as you rightly pointed out, their entire supply chain. and fewer public companies are currently publishing that. We put out a proposal.
Oh, that's
to
why I
bring
can't see anybody.
consistency
I
to
was
the
like thinking nobody was
disclosure,
talking.
But we heard a lot of
So
comments
I bought
coming in.
Tesla
say,
calls here or previous.
Scope 3 disclosure is
No,
not as well
I've bought
developed. It's not as
Tesla
many
puts
companies
all
putting
day.
out. It's
And
frankly not
SPY
yet
puts
as
that were
reliable.
dead on
And so
balls,
we're taking
accurate
that
all the
into
way around,
consideration. And
except
I'd
for the
say
fact that
another
I haven't
thing
gotten the
is
crash.
some people have
And I
raised,
did just get
from the
out of
Farm Belt,
a
for
lot
instance,
of my
agriculture
SPY
interest.
at
We don't
14,
wanna
or
have
excuse
to
me,
do this.
15.
We're small family farmers.
Um,
We don't need to do this. And
I think it was
we,
like
the
18 the
SEC,
first
don't
time,
regulate
but I
those
hold like 10% of that position
companies,
left.
those non-public companies.
And I'm looking to
And
go
so
and
staff
see if
is
I
looking
can't
very
get a
closely
flush
to
down
ensure that we
underneath
stay within our
236
authorities.
and
It's about the
into the
public
235
companies.
to go
On your
long on
second
Tesla
question
just
about
overnight.
cost, we take that very thoughtfully into consideration.
But
We
I'm
got
very,
a lot of comments. I know
I would be very careful going
across the
and
aisle about this.
Can you give us the analysis of
going
those costs?
either way and holding
That was a follow-up
anything
question. Can
overnight.
you give us the analysis on the costs that you're taking into consideration? Have you run the numbers and
We're in essence adjusting our economic analysis it's because we got so much feedback from the public on that. Particularly important point.
They're
the
on
safeguarding
Hotmart.
rule as well? Are you mentioned you were on and off?
That's funny.
Director Bertzissel mentioned that he talks extensively with banking regulators. There are many regulators, however, that feel,
I'm
this is
still here.
regarding
I'm
the
just
safeguarding
trying
rule,
to see what's
that
going on in the
if you
overall
talk
market
more
right
often
now.
with them, this rule would be written differently. What's your reaction to that?
Well, we have good ongoing discussions with our colleagues at the bank regulators. We continue to engage on this role and on other roles, and of course on market oversight. The safeguarding role is one where we've heard a lot from not only the investment advisors that it applies to, but from the banks that act as qualified custodians.
Okay, thanks. I'm changing gears a little bit here. There was a recent shareholder vote to extend the deadline for the DWAC-TMTG merger. Demonstrated that nearly 400,000 investors want this merger to happen. Can you give me your assurance or feedback that a revised S-4 handled in regular order will be expedited, whether for this merger or any?
Again, as you're aware, that's a company that recently settled an enforcement action because it had initially had a material misrepresentation of when it went public in its S1. I don't think they've filed an S4 with us yet, but when they would, that our Division of
Microsoft
Corporation
might fall
Finance
under
would
300.
handle it in regular order.
I appreciate that very much. I yield back, Mr. Chairman.
From North
Not
Carolina,
right
Mr.
now,
Nichols,
but like
recognized
very,
for
very
5
soon.
minutes.
Thank you, Mr. Chairman. Chairman Gensler, thanks for being here. I want to start by applauding the important work of the SEC and the public servants who work under you. I think there's a lot to be proud of, but a lot of the decisions you've made, I frankly have been scratching my head to try to understand your thought process and what goes into the decisions that you make. And so I tried to figure out, how can I understand
By the way, Polestar that we bought 2 days ago is up another 17%.
Ultra marathoner, is that right?
Well, in my
Disney
day,
fell
yes, I
80.
did do the
Boeing
John
is
F.
under
Kennedy
200.
50-miler.
I looked and found that less than 1/4% of the world's population has done a marathon. I did the New York Marathon, so have at least accomplished one.
DocuSign looks like it's going up.
My first question just is, after being here now for over 3 hours, being on, testifying before Congress, hearing like this probably isn't one of the things on your schedule that you're super excited about. But how would you rate testifying in Congress and a marathon? Which is easier?
I love being in front of this committee. I've been here probably 20 times in my life. This is a great room and a great committee.
ATVX might
Marathons are a
go.
little harder.
Thanks. All right, so I want to get into securitization.
If the gentleman was suspended,
I
we asked the witness to
yield to
answer
our
the
chairman.
question. We asked the witness to answer the question.
Oh, wait, I think that this is easier than
Sorry.
running the New York City Marathon.
Thank you. So, all right, securitization.
It's a cornerstone of affordable access to credit for families and businesses in my district, represent North Carolina's 13th district. For example, securitization fund around 70% of residential mortgage loans every year and provide funding for auto loans and credit cards. I'm concerned that your rule proposal on conflicts of interest will impair the ability of securitization markets to function by outlawing activities that have no connection with securitization transaction and reducing participation in those markets. This would increase the cost and reduce the availability of consumer, mortgage, and business credit for my constituents, which is a real problem.
When we bought
Frankly,
them
we have an economy that doesn't work for everyone.
$59,
And it is
guys.
so hard for so many of the constituents I represent to get credit and to get a loan and to do those things. The SEC said it was,
Mara,
quote, unable to
is it
reliably
$5 or
quantify
$8
many
looking
of
to
the
the
economic
downside?
effects, end quote, of the proposed rule. Given these uncertainties, and to avoid compounding the credit crunch that's already, again, hitting my constituents incredibly hard, will you commit to reproposing a rule that is more tailored to the feedback the SEC has received from the public?
So one, the capital markets are really important for credit cards, auto loans, mortgages, and through this securitization market. Two, Congress mandated that we actually do a rule to address potential conflicts that sponsors of those asset securitizations might have if they're on the other side taking positions in conflict with the investors. That's what we're doing. We got a robust, good comment file on that. We're looking at that closely. I can't prejudge it, but I think that the comments that we received, we can hopefully sort through.
Thanks. And I'd certainly urge you to repropose the rule as it threatens to disrupt the housing market in North Carolina and across the country. I want to move on to our grayscale letter. I sent a letter to you yesterday along with my colleagues, Congressman Flood, Torres, and Emmer, urging you to approve the listing of spot Bitcoin ETPs after your recent loss in court to Grayscale. Now that the SEC has the court's decision in hand, rejecting your rationale for denial, does the SEC plan to approve the current pending spot Bitcoin ETF applications?
Thank you for your letter. I did read it last night. Again, we're still taking this under advisement. It's a recent court action, and staff and commissioners will take it up as appropriate.
The court concluded that the SEC's denial of Grayscale lacked, quote, a coherent explanation, and then, quote unquote, falls short of the standard for reasoned decision-making, and then was, quote unquote, arbitrary and capricious. How do you explain the SEC's actions there?
We do that which we do under the law as best we can. Sometimes things go into court. We're still considering that court decision. I think it was a district
Tesla
court.
has a lot of calls back towards the 250.
Appellate court, but we're still considering that appellate court.
So don't think that you're all downside here.
I don't want to get ahead of the staff or my fellow commissioners.
Thanks so much. And I will note that at 3 hours, this is far below my marathon time. Not even close, but I yield back.
Gentleman yields back. We'll now recognize the gentleman from Wisconsin, Mr. Fitzgerald.
Chairman Gensler, thanks for being here. Congressman Lucas and Posey talked about this earlier. I'm just going to bring it up again. It deals with the proposals regarding predictive
I'm looking
data
at 270
just
or 247 and a half calls. I'm trying to fill
How do you
for
think
90,
the proposal
99.
is there a lack of economic analysis, and is that consistent kind of with SEC's mission to protect investors? How do you see those two kind of meshing?
So good questions. One, there's a robust economic analysis, but we're going to benefit from public feedback on it. But two, the rationale. On the rationale, it comes to a really
I don't know
key
if that
thing.
contract's going
Investment
to sign,
advisor,
but or
whether it's to a
gonna
robo-advisor or
it might.
broker-dealer, that they continue to put our interest, the investing public's interest, first when they're engaging with us, what's called investor interaction. They're not putting their interest in front of ours. So they can use data analytics and use math to put their interest ahead of ours, and that's not good for the investing public.
Are you afraid it'll be applied too directly on, just about everything out there from, it could go down to the level of Excel spreadsheets. Somehow it has to be applied, right?
Here's the sort of balancing act. We're technology neutral.
I just purchased, Tesla calls right there, where we're looking to bounce off the,
engaging with the investors and pushing them
50 MA on Tesla right here. So we are green now on calls on Tesla.
Investors. But we've got a lot of comments. The comment file is open until, I think, October 10th. So we're still
calling it out
hearing
now.
from the public.
11/11, make a
This hearing today is
motherfucking
very
wish.
important part of that.
Let's go.
A couple times you said the SEC's rulemaking, you're just kind of simply doing what Congress has asked for. Do you think that's consistent? There's 40-some rule proposals, and I don't know that Congress had asked for all of those. So how are you measuring that right now?
You raise a good point. It's not that you asked for it last week or last month, but our laws embodied by Congress are on the books, and we need, I think, really to stay competitive in the world, to update our rule books to make sure that the markets,
those
Wall
Tesla
Street,
242s that I was buying this morning
broker-dealers, the exchanges,
for
the investment advisors.
what was
they're
that exactly?
working
Let
on
me
behalf
look.
of your constituents, the investors, and the people with good ideas who want to raise money. And it's trying to drive greater efficiency in the middle of that market. And sometimes the middle of the market doesn't love that, because greater efficiency might mean a little less economic rents, a little less profits in the middle.
Let me switch gears again. I think we're concerned about
59 a
FSOC's
contract,
recent
I'm
proposal
sorry.
regarding
Teslas
the
were
designation of the non-bank financial institutions as systematically important.
Yeah, 59 a
particularly the
contract on those
elimination of a
422s. They're up at 106.
benefit analysis requirement. Given your kind of the position as FSOC member,
Hold on, I got a
why would the
package at the door and I don't want my
FSOC
lights
eliminate the
sitting
requirement to do
outside.
cost-benefit analysis when determining whether or not a non-bank financial institution should be designated as systematically important?
Thank you. I am a member of the Financial Stability Oversight Council. And
Damn, that's a big ass fucking box.
So I'm only one vote.
What the fuck is this?
What we put out to public comment was really just to ensure that we get back to the guidance that was out there in 2012. I was a proud member back then of that committee too, and council then. And so we've really gotten public feedback on whether to, in essence, could there be financial institutions that were so important to the system, systemically relevant, that they be designated so and then come under the Federal Reserve for oversight?
Very good. I'm going to squeeze in one more here. I'd like to reiterate, Congressman Lukenmeyer talked about it earlier, about the proposed securitization conflicts rule. When you were here, I think it was in April, you mentioned that the proposed rule was new and you hadn't looked at the comment file. At home, Wisconsinites rely on
That is
private
probably going to
mortgage
try to go
insurance for
up
access
off
to
of 300
affordability
or
and
flush.
sustainable homeownership. How can you differentiate between managing risk and betting on both sides of the transaction without capturing necessary business activity like
You
this,
can't.
I guess? Yeah, how's that going to work?
You can't.
Congress gave us the challenge to do that, and that's why we put it out to public comment. But you're allowed to hedge, you're allowed to do other transactions, but not bet against the investors. And that's, we're still working through the comments to try to finalize. It's a mandate from Congress.
Gentleman's time has expired.
Yield back.
Now I'll go to the gentlewoman from Colorado, Ms. Pedersen, for 5 minutes.
Thank you, Mr. Chairman, and welcome back, Chairman Gensler. I can't believe it's already been 6 months. Time flies when you're having fun. Doesn't feel very fun this week, though. I just want to thank you for your time today and expertise.
Who the fuck are you?
I know you've discussed
What's your
this
name?
at
Let me
length
talk to you
today,
one
and it's
time.
been a big focus in all of the areas of the key functions that our
You got a
agencies
sugar
play
daddy yet, or what's the
in,
deal with
in
this one?
helping support and advocate for our constituents. And, Ranking Member Waters touched on the real harm that a government shutdown would do specifically to your agency. And should there be a government shutdown, only around 400 employees will be retained to maintain minimal functions with nearly 4,200 employees being furloughed.
Leave them goddamn
The
grandmas
bare bones
alone,
staff
dude.
that will remain working
Fucking
during a
weirdo.
shutdown cannot perform all the responsibilities adequately.
She's allowed to do that.
And you
You're
have spent
not.
time discussing a number of the functions that the SEC will not be able to manage, like
Elite
protecting
milk?
Americans from
Oh,
fraud,
good God.
allowing
Okay,
investors
well.
to access our capital markets, and conducting investor outreach and education, among other important roles of your agency. And it is deeply concerning for me with the long-term
Yeah.
implications.
I think that would
the
probably
chaos
be
and
a very,
dysfunction here
very
in
good
Washington,
idea.
and the perception globally around
For some
what role
reason,
the
you
United
can't
States is
laser
going to
etch
play in, and
that
if
color.
we are a market that people should continue to invest in, and the real concerns out there. And so, in your opinion, how do you think that the government shutdown will impact America's capital markets and the global standard?
Oh, it
that,
won't.
The
It
global
won't. It won't be
gold
that big of a
standard
deal.
that
Watch.
we have always had.
That's what he's going to say.
In the short term, there's a risk that we, the government's important market regulator, don't have the resources to oversee the markets, whether it's a day, whether it's a month, whatever it is. In the longer term, it's just the confidence in our capital markets and our confidence in our system of
So basically
fiscal,
nothing is what you're saying.
deciding the fiscal choices that Congress and the administration does. And we see that those challenges in terms of investors around the globe. We're 40% of the world's capital markets. We're only 23% of the world's economy. So and that's a good thing. We're punching above our weight class, so to speak. That's a good thing. But the confidence in our system can be shaken as well.
And we saw that with the recent, not actually coming to an agreement and potentially going off a fiscal cliff. Even though that didn't happen, we know that we were downgraded with one bureau. There's going to be long-term economic consequences. But we know that there's billions of dollars of damage because for the first time, people are questioning whether or not the United States will pay their bills. And so these things, these political games have long-term risks. So I want to spend the rest of my time, this is an area that I know you have a background in, and it's going to be absolutely essential that we're working in partnership to address the challenges the opportunities and challenges that AI poses for this country, and specifically for our financial system. And in the morning of May 22nd this year, an AI-generated image of an explosion near the Pentagon spread widely throughout social media. Immediately, the stock market dipped, and we saw a significant decline. We were able to recover when we were able to confirm that was in fact fake. But we know that these are challenges that we're going to have to address together. And Mr. Chair, I'd like to enter the Bloomberg News article, How Fake AI Photo of a Pentagon Blast Went Viral and Briefly Spooked Stocks, into the record.
Without objection.
And so AI has the potential to significantly impact our financial system and our capital markets and our banking system. And this needs to be addressed at every level on how we can mitigate against some of the negative consequences. I'm proud to be joining my colleague and friend in introducing a bill to examine how artificial intelligence will impact the financial sector and how we need to regulate this. So I want to hear from you, though, on what we can be doing, what you recommend that we do to address the challenges that AI poses in the future.
One is, I think it's great opportunities. It's probably going to drive productivity and so forth. But in the financial sector, I do think that there's risk of deep fakes. Look, fraud is fraud. Even if you're using artificial intelligence, there's usually some human behind it. But that's a real challenge to focus on.
All right, I yield back. Thank you.
Gentlelady yields back. The gentlewoman from California, Mrs. Kim, is now recognized for 5 minutes.
Thank you, Chairman. And Chairman Gensler, thanks for being with us today. I am concerned that the SEC, under your leadership, has not carefully considered the aggregate costs of and overlapping nature of your proposed rules and regulations. And as you heard, there is an erratic pace of your proposals. And I want to paraphrase your own words, these erratic pace of your proposals undermines the finest capital markets in the world. And each proposed rulemaking, now over 50 since the spring of 2021, will make it more costly for small businesses to raise capital in the markets and difficult for hardworking investors in my district to benefit from gains in the markets and save for retirement. And I remember when you came before our committee early this year, you said that the SEC's hardcore proposal would level the playing field for my constituents. But I completely disagree with that notion, and I urge you to please revisit the swing pricing and hardcore proposal. I know some of my colleagues across the aisle also raised this issue. So please tell me, how would the hard close proposal level the playing field for my constituents in Southern California when you're proposing a hard close at 4 p.m. in Eastern Time? It is 1 p.m. Pacific Time. So could you answer that?
So again, what we're trying to address is to ensure that when somebody redeems from a mutual fund, they don't leave everybody else in that mutual fund with losses or what's called dilution. I would say, given the clock, right now, anybody in your district already has to put their redemption order in it at 1 o'clock.
Right.
We're not changing that.
Let me reclaim, and I want to tell you that I'm specifically talking about my constituents being put at a competitive disadvantage compared to someone operating Eastern time. So you don't believe that a fund or an investor in California would be put at a disadvantage when they have to stop trading at 1 p.m. Pacific time, whether it's mutual funds or whatever that you're talking about?
I'm just observing currently, because the New York Stock Exchange and the stock exchange is closed by 4 East Coast time, and mutual funds redemptions are by 4 o'clock. That's currently, we're not changing that. That's already existing.
Again, 4 o'clock Eastern time is 1 p.m. Pacific time. So in my home state of California, obviously, we are very concerned about this, okay, because we have to stop trading at 1 p.m. But let me move on. I know in my home state of California, Silicon Valley Bank failed largely because it wasn't hedging its interest rate risk. And you have proposed a rule on conflicts of interest for securitization that would make hedging this exact type of risk much more difficult. Surely this is not the intent of the statute or your proposal, but it is what the rule as written would do. And I heard your response, your engagement with Congressman Fitzgerald, that hedging is mandated, but that is not what I'm hearing. So I would like to ask you if you can commit to working with me to ensure that the final rule clarifies that risk mitigating hedging is allowed, because the current rule is unclear on that point.
Again, I think it was Congress that has the risk mitigation hedging, but not trading against the investors. And so that's really the job if we put it out to public comment. But you've raised an issue of just broad general interest rate hedging.
Well, I'm talking about that hedging issue, which is very important. And with all due respect, I believe the lawyers outside of your office disagree. And I think the last thing we want is a chilling effect on hedging. And let me remind you, SVB is a glaring example of how to get things wrong. And I hope we can work together to ensure that the final rule leaves the important risk mitigation tools intact.
I'm going to get with you here in a second. But yeah, no,
I just want to talk about some the 34 items on your proposed rules list for 2022. This is triple of that previous year. And in fact, over the past 2 decades, 2021 was the only time the Commission proposed on more rules, so which obviously was mandated by Dodd-Frank Act. The October Inspector General report said that the staff believe that your more aggressive agenda potentially limits the time available for staff resources and analysis and increases the litigation risk. So can I just throw in the question, what sort of things increase litigation risk? Would you be able to respond to that?
Gentleman can answer for the record. Gentleman can answer in written form for the record.
Okay, thank you.
Ms. Presley of Massachusetts is recognized for 5 minutes.
Thank you, Chair Gensler, for joining us today. There are unrelenting people, institutions, forces at work that seek to dismantle gains that have been made in diversity and equity and inclusion, from corner offices, state legislatures, the Supreme Court, and my colleagues across the aisle. In fact, when they got the gavel, the very first thing that they did, one of their very first actions, was to dissolve the DEI committee under FSC that was stood up by Ranking Member Waters, chair at the time, and that committee was headed by Joyce Beatty. So the other side isn't taking any days off, so I'm not taking any days off either. And that's why I want to talk to you about diversity on corporate boards and understanding the importance of disclosure and transparency when it comes to gender, racial diversity, and other data, along with the ways in which that can impact financial performance. We all know that corporate boards are powerful. They play a critical role in determining the mission of a company, its values, its vision, its strategy, everything from who the company will hire to which stakeholders it listens to. Now, for decades, white men have made up the majority of corporate board members, and they still do. Across S&P 500 companies, nearly a third of board directors are women.
All right, here we go. Make it a white and black thing. Here we go. All right.
Only 22% are people
As you
of
can
color,
see, it
despite
wasn't
people
a
of color
fucking
making
white
up
man or a
41% of the country.
like anybody
These gender
didn't make
and
it
racial
racial by
disparities
any
should
means
not be
before this
ignored.
point in time, other than the
The
black
Securities and Exchange Commission plays a critical role in overseeing
bald
corporate
lady.
governance, and that
Sorry,
includes work
like I'm
related
just pointing
to
that out. Maybe
diversity
that's not something
and
relevant to you
transparency.
guys, but that's kind of something fucking
Chair
interesting to
Gensler,
me.
research shows that diverse boards better reflect our country, and I want to underscore this, lead to improved financial results.
This is where I think we
for
bounce right
companies.
here.
I could sit here and debate fairness and morality and
marking
right side of
this.
history all day, but as my good friends at
Where I
Black
think we
Women
bounce
on
right here.
Boards so often say, this is not a matter of black or white. It is a matter of green. So this is about improved outcomes. So what is the SEC doing to increase disclosures on corporate board diversity and inclusion?
I just bought
Early
SQs
in
at
my time
2140,
the
so
SEC, we had in front of us a filing from the stock exchange called NASDAQ. It's a self-regulatory organization that actually has a listing requirement of NASDAQ address these issues. Under the Exchange Act, under the laws, we approved that. That's still a matter of court challenge in the Fifth Circuit, if I recall. And I know that that's out there, but I think that
Let me reclaim my time because I'm running out of it here. That's right. The NASDAQ proposal was approved by SEIC, calls for 2 diverse board members based on gender, race, and LGBTQ status. So this information is important. You agree, yes or no?
Well, we approved it under the Exchange Act, under the guidance there. I have to be very careful about.
Okay, well, at the end of the day, this disclosure of this data is necessary because, as we know, that which gets measured gets done. So we need that transparency. And I also think that the SEC needs to go much further and require greater disclosure of diversity, such as disability status, and greater disclosure of the company, including senior management and the workforce. So will the SEC commit to looking into expanding diversity and inclusion disclosures?
Staff has continued to work not only on this, but more broadly also on human capital
Yes or no,
disclosures.
Chairman Gensler, my time is running out. Can you make that commitment? This shouldn't be a hard commitment. Can you make that commitment to looking to expanding diversity and inclusion disclosures beyond just the NASDAQ proposal?
The staff of Corporation Finance continues to review alternatives there.
Okay, all right. Thank you. Just a quick history lesson. The first Black woman on a corporate board was Patricia Robert Harris, and she was only appointed in 1971, roughly 50 years ago. The year is 2023, and it's well past time that we have corporate boards that reflect the true diversity of our country, not only from a place of justice and fairness, but for improved outcomes, improved financial outcomes. My colleagues across the aisle have already made it clear they don't care about diversity. Their first action when they took back the gavel of this committee was to scrap the Diversity and Inclusion Subcommittee established by Ranking Member Waters. They are on the wrong side of history when it comes to this issue and so many others. Chairman Gensler, it's important that the SEC be on the right side of history and press forward with corporate board diversity.
Gentleman from Nebraska, Mr. Flood, is recognized for 5 minutes.
Thank you, Mr. Chairman. Chair Gensler, I'd like to continue our discussion about SOB 121, staff bulletin from the SEC that would potentially have significant effects on the ability of banks to custody digital assets. Let's briefly begin by following up on something that was raised the last time you were in front of this committee. You previously said that prior to the issuance of SOB 121, your staff did not confer with any of the prudential regulators. Is that correct?
You'd have the transcript, but I think that our staffs do talk to the prudential
Prior to the
regulators.
issuance of SOB 121, did your staff confer with any of the prudential regulators?
With regard to that particular
Correct.
staff bulletin, I don't recall that they did. I know that they have.
So let's let the record reflect that the SEC staff did not think to confer with prudential regulators before issuing the staff accounting bulletin. In response to my question, for the record, from April on this topic, you stated, quote, SOB 121 provides non-binding staff guidance on the application of existing accounting and disclosure requirements under U.S. GAAP. Prior to the issuance of SOB 121, Mr. Chair, did FOSB issue anything related to the custody of digital assets, and if so, what was issued?
I'd have to get back to you, but if you're asking about the Financial Accounting Standards Board, I don't know that they had done something on custody, but we could get back to you.
Since you cited the generally accepted accounting principles in your response, I decided I'd take a look at this myself. Prior to SOB 121's issuance, FOSB had not published anything related to the custody of digital assets. In fact, the board added accounting standards for digital assets to its agenda in May of 2022, 2 months after the issuance of SOB 121. Your response to my question, for the record, from April, also indicated that SOB 121 provides guidance on the application of existing accounting and disclosure requirements under the SEC rules. So here's a question. Prior to the issuance of SOB 121, what rules had the SEC finalized relating to the safeguarding of digital assets?
Well, we have on the books a rule from 2009 that applies to the custody of digital assets by investment advisors because it covers all funds and securities. That rule's on the books. We also had finalized something around special purpose broker-dealers, which relates to crypto broker-dealers.
So I took a look at this topic myself. The answer, quite frankly, is none. There were no SEC rules on the books that directly address the topic of custody of digital assets. As you know well, the SEC issued a proposed rulemaking on custody, including digital asset custody, in February of 2023, and that rule has not been finalized to this day. So to recap, the SEC failed to confer with prudential regulators despite the fact that anything changing rules around the custody of assets for banks, regardless of whether the bank is publicly traded, would be of obvious consequence to them. Then, when justifying the bulletin, the SEC cited the GAAP and SEC rulings. However, at the time when the bulletin was issued, there was no action by FOSB, no rulemaking from the SEC on this topic. In April, you said you wanted the SEC to, quote, stay in our lane, end quote, with regard to SOB 121's potential effects on a bank's balance sheet. It's fair to say that the fact pattern we have is that the SEC is not just going out of its lane, but it failed to comprehend the existence of any conflict with prudential rules. Additionally, the SEC's justification for issuing the bulletin is based on accounting guidelines that did not exist when the bulletin was issued and rulemaking that was not even started until nearly a year after the bulletin was issued. It's pretty obvious that one of two things happened, and both are bad. On one hand, it's possible that the SEC was well aware that there was no strong justification for issuing the bulletin and chose to do it anyway. That would show a pretty straightforward case of regulating by guidance and unsubstantiated theory. On the other hand, the SEC made some obvious basic mistakes in the issuance of this bulletin. In light of these mistakes, it's worth mentioning the SEC Inspector General's report on management and performance challenges. Among other things, the report indicated that very high attrition has required the SEC to rely on detailees with little or no experience to contribute to the core regulatory tasks such as rulemaking. The case of Saab 121 raises the question of whether the SEC is compromised. Thank you, Mr. Chairman. I yield back.
Gentleman yields back. We'll now recognize the gentleman from Massachusetts, Mr. Lynch, for 5 minutes.
Welcome, Mr. Chairman. I don't know if you need time to respond to that.
I would just say, Mr. Flood, if I can, because the other member allowed me to, the Saab 121 guidance is based on GAAP. GAAP already exists. It doesn't need a new FASB statement. And the custody rule at the SEC from 2009 already covers funds and securities to the extent it might be crypto securities. It was already covered. It wouldn't have covered something like Bitcoin, the chair and I have talked about, that's not a security, but it would have covered crypto securities. Thank you.
Again, welcome, and thank you for your willingness to enforce the law where it applies. Appreciate that, especially in the crypto space. After many decisions in favor of the SEC's position, the SEC saw its first split decision, I would say, in the major crypto case in court with the July 13th ruling involving Ripple's XRP. In a partial victory, I guess, for Ripple, the Southern District of New York held that XRP was not a security when sold on a public exchange, but it is when sold to institutional investors, which I found surprising and counterintuitive given the vulnerability of individual investors versus institutional investors, and also the asymmetry that invites into the legal analysis involving crypto. But the wider picture is that I worry that we're heading towards a pattern of court battles to determine if each individual token is either a security or not. And I just wanted to know what your thoughts were on that decision. I know it's far from over. This case is far from over, but I just wanted to express to the committee what your views are on that issue and on that decision, to the degree you may.
I appreciate the opportunity, Congressman, but as we, as a commission, actually have filings in front of that court on this matter right now, I think those filings speak for themselves, and I just don't want to in any way speak to something and say, even choosing a word differently than the commission voted to make filings in that following.
Okay.
In essence, we filed what's called potentially do an interlocutory appeal.
Okay, fair enough. I suspected as much. One of the major proposals in the recent digital assets market structure legislation involves allowing a crypto firm to provisionally register and to be held harmless for a post-registration period. By now, we're all well aware of the damage caused by FTX when its CEO, Sam Bankman-Fried, defrauded millions of customers. More recently, the SEC took action against Binance for potentially, I think, similar behavior from the looks of things. The Binance complaint contains damaging allegations, including operating an unregistered securities exchange, broker, and clearing agency. Further, Mr. Zhao of Binance's operation, control of customer assets, permitted them to commingle, again, just like FTX, customer assets and divert customer assets as they pleased. There are some concerns about this bill, the digital asset market structure bill, that it opens up a vulnerability for consumers to be harmed. And I was wondering if you had a view on that, and is there any concern that we should have with the way the bill is currently structured?
So if I can speak about the field itself rather than speaking about the bill, but It's a common practice in the crypto field right now to commingle that which we don't allow commingled elsewhere. And commingling what you might think of as an exchange, like the New York Stock Exchange, with brokers, you can think of your own individual brokers, and maybe a hedge fund or even a high-frequency trading shop, and even a clearinghouse, and maybe even some bank-like functions. And it's a recipe that has not led to good results in the crypto field and a lot of investors being harmed. So if Congress did anything, it would be separating out those conflicts.
Thank you.
Time's expired.
My time has expired. I yield back,
From
Mr.
South
Chairman.
Carolina is recognized for Mr. Norman is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Gensler, are you aware of Prometheum?
I'm sorry, I didn't
Are
hear
you
the-
aware of Prometheum company?
a company. I have heard of that company. Yes, sir.
Well, they testified before us back on June 13th. The CEO and founder of Prometheum testified before us that, and he assured us that only 20% of the company is owned by China. Does that concern you at all? And I assume you know they're a broker-dealer, special purpose broker-dealer for digital asset securities.
Any registrant in our markets has to comply with our laws, and whether they're partially owned or wholly owned by China.
But I'm saying in your position, does that concern you? 20% owned by China, and the information that could be easily transferred to China, which is an enemy of this country?
Oh, sorry. What's really important, regardless of whether it's China or any other country, that our capital markets, it's a privilege to be in our capital markets, and that those companies comply with our laws, whether it's the company you mentioned or any other company controlled or partially owned by Chinese entities.
May comply with the laws, but still the threat is there that information is being shared on investors. We sent a letter to you back September 25th, Senator Tuberville and I. You know how long it took us to get this reply?
I'm sorry, September 25th, yesterday? No, I'm sorry.
Of 23, yes. Yesterday, yes, that's right. We did it, sent it 10 weeks earlier. Took 10 weeks, is my point, to get this back. And what we ask you to do is look into that, into the China connection, which is a serious concern, should be of yours and your role. Basically, and I'm not going to read it, this is just a non-response. I mean, it's just words. And if what's concerning to me is if somebody in your role is just shuffling paper, it's a danger to this country.
There are a number of broker-dealers in our country that have affiliation with China. You named one. It's not the only one. I think your letter and some other letters from the senator named some of the others. And those broker-dealers have to comply with our laws. They actually have to, under our laws, have their books and records here so they can be inspected and looked at by FINRA, which you mentioned.
Does China go by the rules? I mean, does Communist China go by the rules?
They have a different set of laws there. They have a different government. But I'm saying if you're here in the U.S., they have to comply.
Here's what we would ask. I mean, 10 weeks to get this, and to get this letter, was it 2 paragraphs, is really an insult. Are you familiar with Meta Materials?
Yes, I am, sir. I'm not very deeply, but it is a company that I've heard of.
Do you know what the aggregate shares are, audited shares, count of MMTLP is, as of close of market on December 8th, 22?
I don't know. I know that it's a company that then exchanged into something called NextBridge, I believe.
Okay. Does SEC have this information on the audited shares?
It may be a matter of public record. I mean, it was a company that it did an exchange and became another company.
We'll try writing you another letter, and if you would look into it, we would appreciate that.
Thank you.
You know, as been said earlier, the arbitrary rulemaking that is occurring under your rule on theoretical assumptions is really getting our constituents that are involved in the financial markets very upset. And considering you're going way past the boundaries that need to be going. And I think you've made SEC a crusader of rulemaking by enforcement rather than modernizing the regulatory guidance. This isn't something new that you've heard. My only request is that, you can blame it on staff turnover, you can blame it on a lot of things, but that you would prioritize this rulemaking and actually we'd make the case for reductions if you would even consider something. I yield back.
Gentleman's time's expired. Gentleman from Texas, Mr. Green is now recognized for 5 minutes.
Thank you, Mr. Chairman. I thank the ranking member as well. And of course, I'm grateful to the Secretary for appearing today. Thank you very much. It's been an honor to work with you. Mr. Secretary,
I'm honored to have another title, but it's just Chair or Gary.
Chair, okay, all right. Mr. Chairman, excuse me. The traditional services of an exchange, if you perform those, broker, clearing agency, these are the kinds of things that should be registered. Is that a fair statement?
Yes, if you're a broker in America, if you're a dealer, an exchange, not only registered, but then comply with the laws so that the public is protected.
Mm. And in your capacity as a chairman, if you are of the opinion that these things are not taking place, are you duty bound to do what is within your authority to protect the public?
Yes, and we end up being a cop on the beat, and it takes a 5-member commission, but sometimes we bring enforcement actions if people are not properly complying with the laws and registering.
Mm. Public Citizen has indicated that crypto amounts to a giant Ponzi scheme whose victims disproportionately include low and moderate income individuals as well as people of color. I'm concerned about that. I appreciate your being the cop on the beat. I want to protect people from what may be a Ponzi scheme. There are different opinions about this, but what are some of the consequences of having a poorly regulated digital currency?
Well, the crypto token field has, there's been billions of dollars of losses, and in fact, there's some studies that suggest that lower income communities and communities of color have lost more, and that it's not been to their advantage at all to be investing in these assets on average. Really, it's a matter of the American public can decide what investment risks they want to take, but they should have the full and truthful disclosure about those investments if they're under the securities laws, and then the trading platforms themselves should comply with the laws and not be entering into a bunch of conflicted services where they sometimes are trading against their customers on those exchanges.
Mm-hmm. Do you consider the dollar, the American dollar, an effective, efficient digital currency?
Well, the American dollar, which is the leading currency around the globe, most of it is digital. I mean, we buy a cup of coffee at Starbucks, or we get paid, or we pay our rent digitally. Occasionally, we still use paper or cash.
And do you believe that properly regulated, we can have digital currencies that won't amount to a Ponzi scheme?
Well, I think the US dollar is quite strong, and I think the US dollar, because we use it digitally already, is a form of a digital dollar. Crypto tokens are really quite something different, sir. They're not a currency. They don't, I mean, this is going back into economic history, but they don't fulfill the three functions of a currency, of a store of value, a unit of account, a medium of exchange. They might, maybe in another day, but not in 2023, frankly.
And our failure to act, or your failure, because you're really the person who's in the hot seat, as it were, our failure to act can cause a lot of harm to a lot of people, as we have seen with one circumstance. And I thank you for what you're doing to prevent that harm. I really do. Thank you.
Thank you.
Go back.
Gentleman from Wisconsin, Mr. Stiles, recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you, Chairman Gensler, for being here with us today. This summer, I asked Director Girding about the SEC staff, about whether or not the SEC staff conducted legal analysis of shareholder proposals. And Director Girding seemed to have a tough time answering the question, and I walked away understanding that the SEC does not conduct much, if any, legal analysis of a shareholder proposal. That's troubling to me, because I think that would be one of the roles of the SEC, in particular, following the SEC's review of the particular Traveler shareholder proposal, the racial equity audit, that I think could have driven that company to be forced to engage in illegal behavior. And so asking you if you could give me a clear answer, does the SEC conduct legal analysis of shareholder proposals?
You know, in preparation for the hearing, I watched your testimony between Director Girding and you. I think it is part, and I don't do this on a day-to-day basis, but I think when staff looks at, sometimes companies come in and ask the staff's opinion on things. Staff does look at, one of the components they look at is the legal.
So not every time. So when you say sometime, I think it's just important for us to understand whether or not we should make that explicit. I think it should be explicit. So sometimes the SEC looks at whether or not a shareholder proposal is legal, and sometimes they do not review whether or not a shareholder proposal is legal.
As I understand it, I believe it's one of the components of the review, but I'd be glad to have staff work with your staff and get you the details of the.
I'd like you to. I mean, the fact that you reviewed it in advance of this committee hearing, which I appreciate the amount of time and effort you put into preparing for a hearing, but you don't have an answer specifically whether or not the SEC conducts a legal review, not even a legal opinion, but just a legal review on each shareholder proposal, to me, would be a baseline review for the SEC.
I'm here saying I believe that it's part of the review, but I don't know if it's on every shareholder proposal, because it depends on the nature of the shareholder proposal, of course.
Okay. I'd like you to come back with that information about the process in which you review shareholder proposals in light of probably two key things. One is we brought in the two largest proxy advisors, ISS and Glass Lewis, and they specifically said on the record that they do not conduct a review for legality. They instead rely upon the SEC's analysis for legality. On the record in this committee room, your director and now you kind of go back and forth as to how you conduct that legal review. I think it's really important for us as policymakers to understand whether or not anyone, the SEC or proxy advisors, which may not be under, we can get to how they're registered with the SEC, but who's conducting the legal review, because it has a significant impact on companies. And if we build upon that and we look at the staff legal bulletin 14L, we've seen a dramatic increase in the number of shareholder proposals. We're seeing more focused on social and political concerns. And I go back and look at the underlying language of that legal staff bulletin, saying that they would consider whether or not a proposal concerns a matter of widespread public debate. Can you define widespread public debate?
I think, sir, that it's really, and this goes back all the way back to the 1960s of shareholder proposals, that investors can make shareholder proposals on the term you used, on wide scale.
Widespread public debate is your legal staff bulletin.
And that goes back many decades.
But can you define it? I understand there's a history to it, I understand, but legal staff bulletin came out under your chairmanship. Can you define the term widespread public debate?
And the staff does, when asked, give their informal advice, but ultimately it's between the company and the investors.
Understood, but don't you think that's of concern that you can't define what widespread public debate is when your staff bulletin says that that's a point of review for shareholder proposals? I'll offer you that it concerns me, in particular in light of the dramatic increase in the number of shareholder proposals we've seen that are based on social and political objectives rather than governance of the nation's largest companies. See if I can get this in really briefly. We've discussed your use of email. You've had an aggressive enforcement campaign on off-channel communications for financial firms. Have you used anything other than official SEC resources to conduct your government business?
No, I comply with the laws, but I also, if somebody sends me an email, then I forward it into the SEC.
Thank you very much for your time. I yield back.
Gentleman from New York, Mr. Garbarino is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Gensler, thanks for coming today. Financial services sector and the Biden administration have made harmonization of cyber incident reporting a top priority. In fact, the Department of Homeland Security Cyber Incident Reporting Council's recently recommended the federal government coordinate among themselves to reduce the burden on the reporting entity. But instead of reducing the burden, the SEC has finalized rules that CERC has called duplicative cross-sector reporting requirements and that overlap with congressionally mandated Cyber Incident Reporting for Critical Infrastructure Act, the CIRCIA. Given the Council's designation, why didn't the SEC harmonize its cybersecurity disclosure requirements with existing regulations, and more importantly, wait until the Department of Homeland Security and CISAs developed the rulemaking under the recent signed into law CIRCIA?
One, we've had good discussions with the Department of Homeland Security, but we finalized the corporate disclosure piece because it was important for the public investors to know if there had been a material cyber breach.
Is it more important? Is investor information more important than Homeland Security? Well, and I asked that question because the reason we want to harmonize, and the reason we as a Congress have said harmonize, and the reason the Biden administration has said harmonize these incident reporting rules, is because we've heard from the private sector that their cyber employees are spending 40 to 50% of their time, and we've spoken about this before, on complying with cyber regulations, not just yours, but with all sorts of different cyber regulations. So and we talked about this last time you were here, specifically the rule that was just finalized in July, and you said at that time you've been having good discussions with DHS. But again, this rule came out, and and DHS said, I quote, that this current rule is duplicative cross-sector reporting. It's a duplicative cross-sector reporting requirement. So even though you've had good conversations, I guess they didn't lead anywhere because you still came out with the rule.
Actually, they did, because it's only reporting to the public if it's a material cyber event. It's 4 business days, which actually is longer than the CIRCIA 72 hours. And thirdly, has important considerations in there that if the Department of Justice thinks for national security or public safety it should be delayed, it will be delayed.
It is longer. 4 days is longer, but within a material breach, there's different requirements there. So I have to ask, because there's also a concern that you have companies that are reporting a possible material cybersecurity breach that might not have been able to fix that breach. And if they're publicly reporting it, it could, 1, put that company at further risk, or 2, put other companies who are using the same system, and the same backdoor can be found in their system. We just saw over the summer a company, there was an attack on a company. They announced this attack before the patch was released, and you saw other companies and 3 federal agencies get hacked under the same vulnerability. So I'm concerned that having this public reporting before the breach is fixed, before the patch is fixed, is going to cause more harm than good. And I'm not saying don't regulate cybersecurity. I think it's very important. I just think when our goal is harmonization, when the Biden administration's goal is harmonization, when everybody is saying harmonization, having these rules come out that are just going to be duplicative and cause more harm on the companies that are supposed to be protecting information is not a great idea. I'm running out of time, so I do want to move on to something else. Between 2019 and 2022, the annual cost of operating a consolidated audit trail, or CAT, increased by 900%. In March, CAT unveiled a 2023 budget exceeding $223 million, which is 10% of the SEC's entire budget. The SEC recently approved a funding model that would pass nearly all these costs on to market participants. What is the SEC doing to control the costs of CAT? I understand SROs control and operate them, or own and operate, but it's under your umbrella. I need to know what you're doing to control those costs, and if you would support moving CAT onto the SEC's budget.
I don't know, Mr. Chair, what you're going to tell me.
If the gentleman would respond in written form to the gentleman's question. And I appreciate the gentleman's leadership in cybersecurity issues, WIGWIM protocols, and the work he's put in over the years on those policies. He's worked in other committees. So,
and WIGWIM is very important.
We'll now recognize the gentleman from New York, Mr. Lawler, for 5 minutes.
Thank you, Mr. Chairman. Chair Gensler, you have embarked on a rapid and extensive campaign to reform every facet of our markets. It is evident that your rules will significantly change our markets. For example, your equity market structure rules will impact all retail investors, encompassing over 228 million retail accounts. The swing pricing rule will have implications for every mutual fund involving over 100 million American investors. The climate rule imposes new costs on every public company. The predictive analytics rule will encompass virtually every type of technology. The private funds rule fundamentally reshapes the regulation of private institutions in a potentially unlawful manner. The pace and scope of your rules is unprecedented. Have you taken the time to do a comprehensive economic analysis examining the cumulative impacts of all of these rulemakings on the markets and broader economy?
Representative Lawler, actually our pace is about the same as prior administrations, and per a Bloomberg law article.
Respectfully, we can disagree with that, and that's not what I asked you. I asked you a very specific question. Have you taken the time to do a comprehensive economic analysis, examine the cumulative impact of all of these rulemakings on the markets and the broader economy? Yes or no?
On each of the rules, we do a robust economic analysis, and then if another rule is finalized, we incorporate that, and we take into consideration that interaction in the possible further rulemaking and adjust the economic baselines.
So you are saying, for the record, that you have taken the time to do comprehensive economic analysis, examine the cumulative impact of all of these rulemakings on the market and the broader economy, yes or no?
For the record, what we do is we take into consideration, as and if a rule is finalized, the interaction with other rules.
Right.
Because it changes what's called the economic baseline.
Yes. So have you done the cumulative impact? Have you studied that? Have you done an economic analysis on all of it?
We do them rule by rule individually, and also the interaction as it relates to other rules. If we were to finalize a rule, then we take that in consideration.
So can you explain your engagement with market participants before putting out significant rule proposals? Are you holding public roundtables?
We meet with the public extensively. Before the equity market rules, we had numerous meetings from when I came on in the summer of 2021 all the way through December of 22.
Chair Gensler, California Governor Newsom recently confirmed his intention to sign 2 bills mandating climate disclosure into law. You mentioned to the press last week that the SEC's staff is, quote, going to take a look if it were to become law because it may change some of the economic baseline for our rule, end quote. It's evident that the law will indeed alter the economics of your rule. So can you make a commitment to allowing the public an opportunity to provide feedback on the Commission's updated economic analysis before finalizing the rule?
We take in consideration public comment. We've had 16,000 comments, a lot of comments on the economics, and we often will adopt based on those comments.
No. What I'm asking you is, based on the reevaluation, based on the potential change in law, will you commit to allowing the public an opportunity to provide feedback on the Commission's updated economic analysis before finalizing the rule?
I would say this: we're compelled. This is an important thing. California.
It's a pretty straightforward question. Will you allow the public to comment on the updated economic analysis before finalizing the rule? Yes or no?
We would put it. We would
Sir?
If we finalize a rule, it would be part of that finalized rule.
Okay. I know you like to obfuscate, but I'm honestly asking
think,
you a very straightforward question.
I understand.
Can you commit?
Where you're headed.
Can you commit?
No. The answer
So you
is
won't
no.
commit. Thank you. At least you answered the question. Thank you. I want to touch on another factor here. The SEC recently proposed amendments to expand and update regulation systems compliance and integrity. The proposal would expand the scope of SCI entities to include certain registered broker-dealers for the first time. Feedback from market participants on this proposal suggests that the actual costs for this proposal are in the billions of dollars as a result of the SEC attempting to micromanage the technology setup of individual firms, yet these enormous compliance costs are conveniently absent from the SEC's cost-benefit analysis. Why did the Commission fail to acknowledge these costs in its economic analysis?
Gentleman's time has expired. If the chair will respond in written form.
Thank you.
We'll now go to the gentleman from Iowa, Mr. Nunn, for 5 minutes.
Thank you, Mr. Chair. Chairman Gensler, thank you and welcome back to this committee. I know each time we get to have a lot of questions on this. Last time we spoke, I addressed swing pricing and hard close proposals with you. I also want to reemphasize here the devastating impact that's had on many of my hardworking constituents, from their retirement plans, their 401ks, my nurses with 457 plans, my teachers with 403B plans. I think you get the gist of where we're going with this. As you are well aware, after this morning's rule, I believe it needs to be withdrawn, and I look forward to your team's response to both Chairwoman Wagner and Ranking Member Sherman on the letter that we signed on to and are still waiting to hear back on. Look, I want to talk specifically here about the ag and small business communities that I represent. The extra regulations that the SEC is potentially proposing in this regulation under the guise of consumer protection is going to add $6 billion in increased annualized costs to the industry, an additional 6 million compliance hours, many of these being small family farms and medium Main Street businesses. I hope you appreciate this as a tremendous impact on my constituents back home. Along with 4 other members of the Ag Committee on which I serve, we have signed a letter here moving forward a conversation, which brings me to my question on the February 15th proposal rulemaking on safeguarding client assets aimed at reshaping custody assets. As you know, we have worked hard in your former role with CFTC on how this can be successful. But dozens of trade groups have signed up and identified that this rulemaking would represent trillions of dollars of assets that our constituents back home face. Both of these letters, Mr. Chair, highlight significant errors with the proposed rulemaking, and I'm going to begin this conversation by asking you to consider withdrawing it until these things get fixed. Your definitions of custody and asset would expand so greatly they would encompass derivatives and future markets that have been overseen by the CFTC, your former organization, for decades. So with these bipartisan letters specifically, I believe that they would upend our markets overseen by the CFTC, eroding their essential risk management functions and putting our nation's farmers and producers at risk. Now, Chairman Gensler, in your 432-page proposal on economic analysis, do you know how many times agriculture was mentioned as part of this review?
I don't recall, but I suspect you're going to let me know.
Would it surprise you to know not once? In fact, it was only mentioned as a subcategory within a footnote. Clearly, this is concerning, particularly for my farming constituents, but for entire economies built around this, something the CFTC has been doing for decades. So, Chair Gensler, earlier you answered Representative Lucas' question. Has there been any coordination with the SEC and the CFTC on this issue?
Yes, we've been in dialogue both prior to the proposal and subsequent to the proposal, and I think that...
Can I get some specifics on that? When did you send a request over to the CFTC for this coordination? The day of before the proposal? A week before the proposal? After the proposal was already out?
Representative, it usually just is staff-to-staff dialogue, so it's...
Great. I look forward for your staff providing me the date in which you actually asked for this information from the CFTC. Did the CFTC provide you with any recommendations on your rulemaking?
We engage with multiple federal regulators on this role, and we'll continue to do that because we benefit from that feedback.
I'm very happy to hear that, Mr. Chair. I'd like to see that being transparently provided to this committee then. Did you read these comments, and were they incorporated into your final proposal?
Sir, we haven't finalized a proposal yet.
Did you incorporate any of CFTC's recommendations?
We haven't finalized an adoption yet.
Mr. Chair, did you incorporate any of the CFTC's proposals into your recommendation?
We have put out to public comment to get feedback, and we get feedback, and it's benefiting this, and I think that we can...
So I haven't heard anything about the CFTC on this. You're putting it out to the public, which brings me to my next question. It's my understanding that you recently reopened the comment period without re-proposing the rule. Specifically, what value does this add to the ag community and my constituents for their grave concerns if you're reopening it, but you're not listening to the CFTC, the ag committees, or even what's happening on a bipartisan level within this committee?
We benefit by reopening. I think we reopened this because we had another rule that may intersect with this, the discussion we've had a lot here today, and so we reopened it formally to get further comment.
It might suggest to some that you didn't get the answers you wanted, and so you reopened it to others. So let me end with this. I urge you to withdraw this rule as my bipartisan and bicameral elements have argued the same. Thank you, Mr. Chair. I yield the remainder of my time.
Thank you. Good to be with you.
Gentleman from Florida, Mr. Donalds, is now recognized for 5 minutes.
Thank you, Mr. Chair. Chairman Gensler, welcome back. Hey, do you remember where we left off, you and I?
I do. You're a very good questioner, sir.
All right, well, let me refresh. Let's bring some things up. Where we left off was, did you facilitate the payment for the Steele dossier for the Hillary Clinton campaign back in 2016? Because you were the CFO. You acknowledged that. You also said, in response to my question, that this payment was not something that I was aware of, quote unquote. Those are your words. Interesting things have occurred since then. John Podesta actually testified to a committee of Congress, and John Podesta testified to a question about, was Gary, meaning you, was he day-to-day, hands-on, signing every check? And so John Podesta testifies, actually he was under a deposition with a committee here in Congress. He says, yes, I don't know if he signed the checks, but he was there every day, meaning you. So let's circle back. Were you aware of the fact that the Hillary Clinton campaign actually paid for the Steele dossier, which unleashed one of the worst issues of intelligence malfeasance that our nation has ever seen?
No, sir, I answered this 6 months ago, and this is the same answer today. No.
You weren't aware of what was going on? Mr. Gensler, I find that very interesting because, you know, if I listen to some of the people and the staff that have left the SEC, you're very aware of everything that is going on. It's actually your MO. You're very hands-on. So you're going to tell the committee right now you had no idea that the Hillary Clinton campaign, of which you were the CFO on, sent money to Perkins Coie for a dossier that was phony, that led to the spying on of a presidential campaign in 2016. You were not aware of any of this.
Sir, as a chief financial officer in a political campaign, I was not aware of what a law firm was doing with some of the monies that they got.
Now, I find that interesting because in some of your other rhetoric about CFOs in the public sector, the private sector of our economy, you are very tough on CFOs. You've said on the record on many occasions that CFOs have a fiduciary responsibility to the organizations that they cover, that they should be aware of everything that is going on. So how is that a standard you hold CFOs in the private sector to, but you don't hold yourself to that same standard?
That's not a standard that the SEC holds CFOs to. It's about their financials and that the financials are put together in accordance with GAAP and that the numbers are accurate. And that they're
So did you accurately pay for the Steele dossier out of the Hillary Clinton campaign?
Sir, I learned about that way after President Trump was a president and Hillary Clinton was a private citizen.
All right, well, let's move on. We'll probably circle on that another time. I want to reference a story in Capital Account from June 13. Mr. Chairman, I ask for unanimous consent for the story be entered into the record.
Without objection.
The story notes that you met with Senator Tammy Baldwin in May about the SEC's proposal related to the 13D beneficial ownership disclosure, at which time you allegedly asked Senator Baldwin's staff, allegedly, to contact an organization called We the Investors to submit comment letters in favor of the 13D proposal. Subsequently, the SEC was flooded with 350 plus comment letters from so-called individuals, but mostly form letters stamped with the moniker We the Investors in favor of their proposal. It appears to me that you have engaged in astroturfing to advance your own agenda. Is this true? If this is true, is this a serious breach of impartiality that would violate the spirit, if not the letter of the law of the APA?
Sure, again, I don't know what the press is talking about. I remember a meeting with the senator. It was a good thought.
Did you meet with Senator Baldwin in May with respect to 13D?
I think that it's on my public calendar that I met with Senator Baldwin. I meet with senators and representatives.
Okay, so here's what I need to
basis.
get from your public calendar if you actually met with Senator Baldwin. I think the committee would like to know that. In this meeting with Senator
think I
Baldwin's
did.
staff, did you speak to an organization called We the Investors?
I have no memory of that.
Mr. Gensler, the no memory routine from a lot of appointees is really getting old. You guys are discussing and leading some of the various regulations facing our economy. So to come before a committee of Congress, have no idea what you talked to with a senator's staff about 13D?
The meeting was with the senator, sir.
All right, well then, if you don't recall what you said to a United States senator about key issues facing our economy from a regulatory basis,
Please, sir.
that's a real problem,
You're
don't you
a good
think?
questioner, but please, sir, that story is not one that I would confirm. It's not a story that I believe is accurate.
Let me ask you a question, broad base. Do you think it's appropriate for the chairman of the SEC, or frankly the head of any agency, to engage with outside groups to accomplish the agenda they want to see through rulemaking?
We are responsible under the Administrative Procedure Act to hear from outside parties, market participants, constituents in your district, members of
No, that's not my
Congress.
question. We want to hear from outside
obligated.
groups.
We're
Is it okay
obligated.
to foment outside groups to help you
Gentleman's time's
accomplish what you want to
expired.
see?
Gentleman's time's expired.
Thank you, Mr. Chair.
Gentlelady from Indiana, Ms. Houchin, is recognized for 5 minutes.
Thank you, Mr. Chairman, Ranking Member Waters, and thank you to Chairman Gensler for speaking with us today. Chair Gensler, under the last Democrat chair of the SEC, Mary Jo White, the commission adhered closely to the statutory authority of Congress. During her time as chair, 59% of the SEC's proposals were mandated by Congress. By contrast, under your leadership, only 17% of the commission's proposals are mandated by Congress, according to a report from Professor Hal Scott of Harvard. Why is there such a rush under your chairmanship to promulgate so many rules without specific mandates from Congress?
It's because technology and the markets have changed so much. She was coming in as chair right after a financial crisis, so naturally there was, I think, 120 mandates that Congress placed. But you're accurate. We've picked up about 10 of those from Dodd-Frank, one from the Holding Foreign Companies Accountable Act.
Chair Gensler, there's a perception that the SEC is neglecting public input, and particularly from bipartisan letters that the members of Congress have sent to voice valid concerns regarding individual rules and the rulemaking process. The concerns encompass the bipartisan concerns about insufficient comment periods and a general response to bipartisan concerns regarding proposals on swing pricing, liquidity risk management, and equity market structure. Are you aware of similar bipartisan concerns being raised with previous SEC chairs? If not, could you elaborate on why the opinions of Congress don't factor into your considerations?
Well, the opinions of Congress most definitely factor into my consideration. Like
It doesn't
this
seem so,
conversation here.
Mr. Chairman. It does not seem so when only 17% of the proposals that you have brought forth are the result of mandates from Congress. I find it incredibly frustrating that any time we provide comment or send what we call strongly worded letters about our opinions on how the SEC should behave, it seems like these must be immediately thrown in the trash and disregarded. I want to turn to Reg SCI. The SEC originally adopted Regulation Systems Compliance and Integrity, otherwise known as Reg SCI, in 2014 in response to several market disruptions at national securities exchanges. Earlier this year, the Commission proposed to expand Reg SCI to certain broker-dealers. However, unlike in 2014, the Commission fails to provide a single instance of a broker-dealer systems disruption that had a significant market-wide impact in the securities markets. In fact, the SEC's own proposal acknowledges that broker-dealer systems performed well during the unprecedented trading volumes and volatility at the height of the COVID-19 pandemic. Further, the Commission admits that it, quote, finds it impracticable to quantify the many benefits associated with amended Regulation SCI. Once again, this seems like the Commission is providing a solution in search of a problem. Chairman Gensler, given that the Commission cannot point to a single broker-dealer systems disruption or any tangible benefits to applying Reg SCI to broker-dealers, how can you justify that proposal?
As we outlined in the proposal itself, which is still out for public comment, that some broker-dealers may have the size and scale and standing in the markets that if they were taken down, that could be disruptive to the markets. That's the important thing. And this so-called systems compliant integrity is about those most consequential or central parts of the market.
The SEC's RegFlex agenda for 2023 indicates you intend to finalize proposed rulemaking to expand the definition of an exchange in short order. Although the SEC has reopened this rulemaking, the proposed rule is still fraught with insufficient economic analysis and ill-defining scope, among other things. Given Congress's ongoing and unaddressed concerns with the rulemaking, as well as concerns of hundreds of stakeholders, it seems irresponsible for the SEC to finalize this rulemaking. Could you comment on the expected timeline for finalization of this rule?
You'll be pleased to hear that we don't do it against a clock. It's really when we get the comments and the economics right and the legal authorities right, and then discuss it with the commissioners.
And finally, I want to raise an alarming issue that I think needs further attention: the timing of various actions by the SEC while Congress is seeking to establish a regulatory framework on digital assets. To name a few, January 12, 2023, this committee announces the formation of the Digital Assets Financial Technology and Inclusion Subcommittee. It was subsequently announced that the SEC pursued enforcement actions against 2 firms. March 9, 2023, the committee hosts its first hearing on the Biden administration's approach to digital assets. An hour before the hearing, you publish an op-ed in The Hill. April 27, 2023, the committee hosts another hearing on digital asset regulation. You tweet and quote office hours video on your view that most digital assets are securities. May 3, 2023, this committee and the House Agriculture Committee, led by my colleague Chairman Thompson, announced our first joint hearing on digital asset legislation, which is unprecedented. You published another office hours. I'm not one to connect dots, but it seems like you're actively trying to undermine the work of Congress. You must not impede our work to do our job, even though you won't do yours. I yield back.
If the gentleman wants to respond.
I very much respect the work of this committee, and particularly the work of this committee around crypto assets. We have a robust time because this is a field that's rife with fraud and abuse, and so our enforcement agenda sometimes does roll out while you're doing your good work here as well.
Mr. Ogles of Tennessee is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Gensler, thank you for being here. I do want to echo the chairman and support the chairman that, I think we've come to this crossroad where subpoenas may be necessary. It seems that compliance and requests for information and documentation has been kind of shortcoming. And so with that, Mr. Chairman, you have my full support as when and if you decide to move forward. But Mr. Gensler, I want to kind of, one of the things that concerns me is sometimes the subjective or what the perception of subjective and arbitrary nature of the rules. In May 25, 2022, the SEC proposed amending the names rule to further regulate the names of investment funds.
Well, I think everyone would agree that it's misleading of a fund called the Mexico Growth Fund, made most of its investments in Japanese value stocks. Many names may be subject to differences of opinion. The proposal specifically mentions ESG funds. Mr. Gensler, is the SEC equipped to determine what, broadly speaking, is good for the environment as it pertains to ESG?
No, sir, we're not an environmental regulator.
So again, going back to the subjective nature of some of the rules and the compliance that is forced, I mean, it's kind of like what's better than environment, paper, or plastic bags? And so when we should be focusing more on the fiduciary aspect of a fund versus its environmental compliance, I have concerns. When you look at the social component of ESG, who would you entrust, or how will you determine whether or not a company is compliant with the social portion of ESG?
So in terms of this names rule, it was basically truth in advertising, that if you're going to say you're a social fund, to use that, you have to actually then describe what the marketer of that fund means by social, and then ensure that you invest as you're marketing to the public. This was really a rule in most regards, the names rule adopted in 2000, 23 years ago, to protect the investing public, that the advisors they pick are doing, that they say what they mean and they mean what they say.
So, but again, to my point, this creates a very subjective nature to the rules process, right? Because you just said that you basically, you don't have the capability to judge the environmental component. You don't have the capability to judge the social component. And so now if there's a clear definition and disclosure in the prospectus, who is to determine whether or not they're compliant, right? And so you now have a rule that can be abused or a rule that's completely useless. And so why even have the rule when at the end of the day it should be about?
Well, it's sort of like, as one of my fellow commissioners said when we voted on this rule, if you say that you're selling pepperoni pizza, that there's actually pepperonis on the pizza.
I like pepperoni pizza, so don't get me wrong, right? But yeah, I just look at, and forgive me, these rules outlive any given administration, but under this current administration, the Biden administration doesn't necessarily have the greatest track record of trust with word definitions. So, and I don't mean to be, a contrarian here, but if the administration can't figure out what a woman is, how do I trust them to have any kind of bearing or judgment on?
I totally understand what you're saying, but that's not what we adopted in a names rule, is that if you're marketing to the public that you're, let's say, an environmental or a green fund, you describe what that means and you ensure that at least 80% of the investments in the fund meet your self-described. Sure. You can describe what a pepperoni pizza is, but if you describe it, you better comply with it.
But again, I just, so when you look at like the climate disclosure and the burden that's being put on businesses to track their supply chains, you're now creating an enforcement mechanism that the company has to enforce on its supply chain. So again, these rules that you're pushing down on business, that you're pushing down on these instruments, only does one thing but drive up costs on, at the end of the day, the end use. So the very people that you're trying to protect, you're hurting because of the arbitrary nature of the rules that you've put in place. It's very frustrating. And again, Mr. Chairman, I'm about out of time, but I was just going to say that I would say open up the floodgates, hit them with subpoenas, get the information we need, the obfuscation and not answering questions. I'm sick and tired of it. I've sat back here and I've listened to this entire hearing. I mean, dude, you wear tap dancing shoes better than Fred Astaire, and enough is enough. And I don't mean any disrespect, but it's time that questions are answered, that we have the information we need. Mr. Chairman, I yield back.
Thank you, Mr. Chairman. Thank you, Chairman Gensler. It's 2:29. It's not your longest day in a committee, but thank you for being here. As I stated in the outset, it's my request of you and your agency to comply with our request as a committee. I don't want to use the compulsory process for the first time in our history between this House of Representatives, this committee, and your agency. So I think it's would be a purposeful act on your part if it resulted in us issuing a subpoena. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask you, Chair Gensler, to please respond no later than October 30th to those written questions. This hearing is adjourned.